Good morning, you. I'm sorry, Jamal, you knucklehead. You're the only one in the room, and I have to say that to you. I feel bad.
I mean, they left you. They left you with me, but I'm here for you, my guy.
Best available. That's what I'm right now. How are you, Jamal? Good morning.
I am fantastic. Nothing to complain about. Things are good. How about you?
Yeah, thank you. Yes, things are good. Thank you so much for coming on the show. Vanetta's out. She's paragliding? Hang gliding?
I didn't know what she was doing.
Did you see
Is there a motorcycle involved?
No. But I saw her on Twitter. She's flying around with some man behind her, which I guess she's used to. I don't know, but she's flying around. And then they came down. I don't know where the hell she is, but they came down a cliff, and then they tried to high five the people on the cliff, or at least it looked like that. I mean, from the angle that she had.
She's such a daredevil. She really is.
She is such a daredevil. But try to find out what she did on a Saturday night. She buttoned right up.
I know. She is an enigma for sure. That's great. Really, they were trying to high five people?
That's what I saw. That's what it looked like to me. When she comes in, well, maybe she'll explain. Maybe they were further away. The way she had her camera, it looked like, maybe they were further away or something. But is that something you would do? Would you?
Hell no.
Did you do that this weekend?
No.
I mean, I walked a tightrope this weekend. It was Valentine's Day, you never know what you're supposed to do, if flowers are enough.
Thank you, man. I'm glad you said that, man.
Thank you.
I asked the ladies. I had the pleasure of talking to Liz and Jenny on Friday.
Sure, okay.
And I was like, what do you want? And both of them basically said nothing.
Yeah.
Yeah, they said it. I don't know how real it was, but they said it. It's like I did nothing. No, I'm just kidding.
No, you better not. You at least get like a mop if she's been not.
We did actually.
Cleaner if she's been really good.
We actually didn't do what we did for Valentine's Day. We did on Friday. So we went to this local area basketball game with high school, Fenwick and Ignatius.
Yeah.
And then after that, I just kind of did an impromptu dinner. You know what I mean? So you don't tell them anything. You just roll up, and we roll up to one of our favorite restaurants. Hardly anybody was there, which is great because that's half the battle on Valentine's Day. It is half the battle. You don't feel like dealing with all these people. And then that's when you say,
it's the night of the gouge.
You say, I don't want to share you with all these other people. I just want to just meet you.
Oh, there you go.
Like that.
There you go. There you go.
I didn't say that, but I mean, I exuded it.
I'm going to try that next year. I don't want to share you. Right, I want to keep it to myself.
So we end up having a nice little dinner. And the best part about it, again, also impromptu. I mean, she's huge into basketball in general. And my son is yes, my youngest is into basketball too, but my oldest also into basketball, works for the basketball team at Wisconsin. They were playing Illinois on Friday night. Big win. Not Illinois. Who'd we play?
I wasn't there.
I forgot.
Okay.
Doesn't really matter. Not really germane to the story. We won the game. Sweet. And we had the TV. They put the channel on, and she was watching. So that makes her very happy. She watches every single game, mostly to try to see my son on the bench or somewhere like that.
Sure.
But
proof of
she
life.
Loves. That's true. Yes. And she loves Wisconsin basketball. So it ended up working out.
That's great, man.
What'd you guys do?
Good for you. Oh, I was in Florida. I was down at Cape Coral. It was my son's 16th birthday, my youngest 16th birthday a little while ago. So I got him a small Boston whaler, like 13-foot boat. I surprised him. And it was good because we went out to dinner, and just as we came out to dinner, it was about 8 o'clock at night, and they were just transporting it, and they were just pulling up into the driveway. And he's like, what's going on? So it was really cool. I didn't tell the wife because she can't keep a secret. So it was a surprise to everyone.
That's cool, man.
Yeah, which was very nice.
So he just went nuts. He went nuts.
Did
he want to go out?
Yeah. And it's a little 4-person one, so you can fit 4 people on it. Which is
you guys went out though?
Yeah. Well, I mean, we didn't go out that night, and then
how did you contain that? I mean, because I know he wanted to go out.
Yeah. No, we had to wait till Sunday. That was Friday when it came. Saturday I went out with him and everybody on my boat, but on Sunday. I had a guy come in to put a garment in on it, so at least he could find his way home.
Yes, yeah.
Like a homing pigeon. They're really great. These garments now they basically track where you go with a black dotted line. It's almost like putting crumbs down.
Yeah.
And you can get back from wherever you are, so you can go kind of not knowing where you're going because it's really like something going to mangroves. You don't really get out in the water in a small 13-foot boat.
Yeah.
But you go into mangroves, but you get lost back there. You know what I mean? They all look the same. You know what I mean? They, especially for a kid from the flatlands of from Illinois. But you just follow the black line back, and
Do they have a lot of features, more features?
They do, yeah.
Back in the day, they used to be really just pretty flat, right? I haven't seen one. My mother-in-law had a boat. We used to go out a lot, but that was
yeah, that's right. You're from Miami area. Yeah, you're from Florida.
That too, yeah. But I mean, I would imagine they have a lot more features now than they've had before.
Yeah, it's really good. It's really good. It tells you everything pretty much that you need to know if you know how to work it. Boomers don't really know how to work it. We just put the breadcrumb trail down and then I'm good to go. But
I mean, he has an iPhone, so he knows how to work it.
He does.
They can figure anything.
He does. Yes. So that was a fun. Sunday. It was a little windy, so we were bouncing around a little bit, but it was really cool. It was fun. It was good to see him lighten up. We're gonna go back in March. We're gonna bring a friend down, so I'm sure I won't see him very often.
Oh, his buddies.
Yeah, I mean, he likes to go fishing
later,
with
Dad. There's gonna be a female friend on that boat.
Yeah, I don't think he doesn't have that kind of game yet for a short week, to rustle him up. You know what I mean?
Come on down with me to Cape Coral.
He's working at the angle here now. You know what I mean? He just started driving. So he's working. He's trying to work that angle.
Well, it happens fast, doesn't it?
Yeah, it sure does, man. It sure does.
It happens fast.
It does seem like yesterday I was just teaching him how to hit the toilet bowl, but now he's out on his own. Kind of wild.
Yeah.
You got to let them grow, and then one day you work with them. You know what I mean?
I wouldn't know anything about it yet, but you do.
You will. Someday. You will. Nepotism is still alive here. Hey, listen, can we just switch gears for a minute here? Because we got a market. You walked in, first thing you said to me this morning was, what's going on? We got ourselves a little bit of a market here. And you do have E-mini S&Ps down almost 37 handles, 68.13. Which is the low and has been the low for the last two sessions. I know a lot of people didn't realize, but futures opened not only opened a little bit on Sunday, opened on Monday too. We had a little bit of a rally initially. Then we sold back off. We're back near the lows again here today. You've got volatility, 21.5. I'm going to tell you right now, volatility has not been able to get under 20. I know here about 2 days ago on the session on Friday, back on the 13th, we got below 20, about 1980 or so, 1985. I just looked. Volatility doesn't get under 20. We're going to have some weakness or some two-sided action at the very least here. You're going to need volatility under 20 for this market to sustain anything. You've got volatility now trading 21.50, which is the high end of the range that we haven't seen since all the way back in December. What do you think about this market right here? We've been in a violently going nowhere, as my son has said. We've been to about here, 6,800. Let's just round to friends up to about 7,000.
That's exactly what I was going to say.
And we're 6,800 right now. So what does that mean? You're a little bit more of a technician than I am. You watch past prices. If we get under this 6,800, is it 66? Are we going to get back into a lower channel, as my friend Chris, who will be on at 8:40 for Let Me Explain? Maybe we can ask him that question too. What do you think?
It's really been 3 months, honestly. Going back to December, we've been in that range, 6,800 to 7,000, a 200-point range. Most of these dips have been you can buy them and you can take them back up to 7K. We keep getting rejected at 7K pretty violently. And again, this is not even technical stuff. This is just what I see. I think, the thing that people know about me, former scientist, and so I look at everything. I look at a bunch of different things to make these opinions. It's like the scientific method. You try to put a bunch of things together. So I've noticed that the 200-point range we've had. Sure. Volatility, 21 and change. By the way, February expires tomorrow.
Tomorrow, Wednesday.
Right?
Yeah. Right. Yep.
And so that's always interesting when we have VIX expiring. Sometimes we can get some violent moves. This is actually a precarious situation we got going on today. The one thing I've noticed too, though, I like looking at the VIX futures, G, H, J. I always like looking at the front 3 months. H is actually still below G and still below J. So March is below February and April. I find that a little bit weird. I don't know if we get immediate contango right after that. We'll see, I guess. But honestly, telling the biggest thing is bonds, bro.
Bonds,
CB being at 118. ZN being at 113, I think, is the biggest telling story right now and all the stuff we got going on. Even with Bitcoin not able to get up, with gold and silver down, dollar slightly starting to move. I think if you get the dollar starting to really move up, I think we'll have a serious problem. But bonds has been the biggest thing that I think is something to pay attention to.
So bonds going higher, rates going lower. dollar not really moving, right? I mean, I from a technical point of view, I always thought the dollar was the mover to gold and silver.
It used to be.
Okay, right, yeah.
You know, what the hell? Who knows what the hell is going on now? But yeah.
So what do you think of this? This is good. What do you think of this bond move? Now, I did a stupid down in the bonds when bonds were around 115, meaning I bought a call spread, sold a put spread.
Nice.
Tight little spread. I did it for my option trade today, which is every Tuesday and Thursday, by the way. Today happens to be Tuesday. Lucky for you.
Hey,
made a small amount of money on $1 or something like that on it, of possible $2 that you could have made on the overall trade. It's a hard hold. I mean,
man,
you watch bonds which haven't really, I sold them when they got back to 116 and change. You know what I mean? I figured I was a hero. Now they're 118. That's a $2,000 move in a bond future. Bonds are a hard hold, and they don't seem to hold on to their gains. Here
I got
we are
a put
at the high
spread
end of
for
its
that
range.
exact reason, so I'm glad you said that.
Okay.
It makes me feel a bit better, but who knows what the heck's happening now.
Right.
But yeah, I have a put spread for that exact reason, because we have seen this move I mean, it's a roller coaster over the last several months. We see this move and then we see the fade, and so I'm playing for the fade now that we're 118. I feel pretty good about it, but we all know those trades, who knows how it's going to play out, right? It's not up to me, but all I can do is put the trade on and see what happens.
Yeah. You've had a big 80-point range already on the E-mini S&Ps. We're just making the lows now down to 43 and change. NASDAQ's down 280 near its lows. Russell down 15 and the Dow down 200 and change. Volatility at its highs, 2160 and change. They're going to scare the children this morning.
100%. And again, the only thing that's weird to me is sure, I guess the only reason for this is fears about what AI is going to do. I don't even understand. Like, I don't even understand. Like, now it's scary that we're spending too much money on AI, or it's scary for certain industries that AI is starting to infiltrate them. We saw commercial real estate last week, CBRE, that name got absolutely smoked. CHRW, transportation, that name got absolutely smoked. So it's like those sectors are starting to get worried about what AI is going to do. Meanwhile, the AI sector itself, the biggest names in the AI sector aren't really making new high, like Microsoft and the Amazons and the Googles.
Yeah, Microsoft, if anything, has been weak. It's been weak since the beginning of the year, right?
I think all of them are down on the year slightly to some degree. All the Mag 7s, if you will, NVIDIA, Google, Apple, all of them. I don't know what the hell's going on right now. It's weird.
It definitely is weird. But I actually like that we're opening lower this morning than if we had opened as we did over the weekend a little bit higher. Now, if you're kind of trying to play by the dip game here, harder for me when the market rallies to add on to a position. It's a lot easier for me to add on to a position when volatility is a little bit higher. Now, I might look to do it in a little bit more of an intelligent way and not quite as a let's go get them kind of push all in kind of thing. Put ratio spreads right now in ETFs like SPY and IWM. If you're slightly bullish, omnidirectional, depending on how tight you go with your spread, broken wing butterfly and SPX, if you're trying to get a little bit bigger, that's something that I've done multiple times. If we're still down here at 10 o'clock in the morning, that'll be my trades from the research team, where usually buy an option somewhere around a 20-ish delta, sell another option 50 point wide, usually around maybe like 16, 17-ish delta. That's because they're pretty tight when you get down that low on something, and then buy something 100 points out of there. So you have a $50 embedded short put spread in there. If you've got a long put spread, it's kind of like, I'm putting a line in the sand, but I'm doing it with defined risk, and I'm not trying to bet the house on it. But if you get volatility get up to 22, that's probably going to be where I would say, all right, well, enough's enough here. Let's see if we have a little bit of movement in the other direction here. I think we scare the children enough. I would love to see us open
doing
below
what it's doing for the last 3 months in this range. Does that concern you, or you're like, this is what should happen in a market when we've only gone up?
No, man, I'm not used to it. I'm like everybody else here. We were supposed to rally probably 50 handles ago, 75 handles ago. Somewhere like that to stay in that little tight range. I mean, I think you get anesthetized to how the market is acting in the small period of time that you're in right now. I mean, one of the good things when you get this kind of movement is, if you're still in March, you got 31 days. There's plenty of time premium on both sides. If you had a spread, it doesn't go to full max loss. It doesn't go to full max win either. So you still got things you can do against it.
True.
If you do have positions in March and they've kind of gotten too big on the delta side, I mean, we're going to do asset allocation, which is pretty timely for this. We're going to do that at 8 o'clock, and then we're going to do it again at 9 o'clock, a part 2 of it. So that'll be really good. I mean, I think it really comes down to asset allocation. Maybe you got, a $100,000 account. How many deltas, should you have in that? Maybe somewhere between 200 to 400 on a $100,000 account, something like that. SPY beta weighted. Go ahead.
Yeah, and that's the tough part about a market like this. You're being in between these ranges, right? It's been 3 months, but I mean, it could be the day where we break 6,800, right?
I think we're going. I mean, with 68. I'm not saying a lot. We're 6,805. You look at the E-mini S&Ps, and the expected range for them has been last week anywhere from around 24 handles to about 45 handles. And we've got a 50 handle range on the E-mini S&Ps right now. So if you didn't understand what volatility /VX is, and you're just looking at the daily expected move in the E-mini S&Ps or SPX, you can realize that we definitely have a lot more volatility in the overall market today. So I don't know. It'd be interesting. I think we have to scare the children, get under 6,800, get some weak hands out, oscillate around there for a little bit. Maybe even close there. Like, if we close under 6,800 today, that'll get everybody the headlines. They'll give people a time that really don't watch the markets to write their headlines, put the fear in everybody, and then maybe you can catch a little bit of a bid.
Yeah, we haven't done that, actually.
No.
We haven't done that since November.
Yeah, no.
Last time we did that.
That's correct. And you've had a lot of stocks, like you just mentioned, Microsofts of the world, that have been pretty weak all along, yet you have the equal weighted indexes that are at all-time highs. So those 7 stocks, 10 stocks, 15 stocks, whatever you want to call them now, haven't participated, but the rest of the market has. Now, which one's going to win? Are those 7, 10 stocks going to catch a bid and keep us afloat? Or are the other 490 stocks going to turn around and start selling off? We have a sustained sell-off.
Yeah, I got a heat map I'm looking at right here. NVIDIA down 2%. This is for the year. Google down 2.4, Meta down 3, Tesla down 7, Amazon down 13, Microsoft down 17, Palantir down 26, Apple down 5. But then you got Walmart up 20% year to date. Costco, which had been really struggling towards the end of the year, and even the beginning of this year with all this talk of the tariff situation, they're up 18%. Caterpillar quietly up 35%. This is year to date. This is 2 months. Home Depot, 13%. Johnny John, 17%. So yeah, Exxon and CVX both up over 20%.
Yeah, it's a tale of two tapes. But the one
that being the case, that means we shouldn't.
We probably should oscillate around in that 200-point range that you're saying.
There you go.
But who knows? Hey, listen, let's take a quick 90-second break. We'll talk more about the markets in a moment, and we will get to confirm and send. We got a couple of extra ones for you today. Appreciate everybody who wrote in to send their questions for the show. We'll be back in 90 seconds. Even the S&P is down 40 handles. NASDAQ down 260. Russell down 13 and Dow down 180. We may even go to phone calls today with volatility up 64 cents to 51.54. Bonds up 13. We'll be back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. I started off as a chemist and engineer, and I love those fields, but sometimes when you're doing an experiment, you can go months without anything changing, materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Jamal, my friend, we are back. And before we get to confirm and send on this Tuesday, February 17th, let's take a quick look at some of the other markets that we haven't looked at. I will mention the E-mini S&Ps again, catching a small little bid here, about 10 handles off of their lows, maybe a little bit more, down 28. They were just down 45 a moment ago. Volatility 21, 30 and change. It's going to move around all day today. You can see, you can almost kind of feel it. Oil up 41 cents around its highs, catching a little bit of a bid here. Gold down 100 and change. Now, you talk about something that's been in a tight channel. This has been in a channel, too, from around 4,800 to around 5,100, sitting at 49 and change. Good volatility in gold. /GC, I think, has better markets than GLD personally, but /GC might be too big for most people. You look at March, you got almost 80 to 90 cent wide markets in gold. This would be a fringe player at best. Silver, on the other hand, which is down almost 5%, it too has been a little bit weaker than gold. You look at the gold-silver ratio, I believe that's something like 66. Yeah, 66 and change. It got down to 46 at the end of January, now 66. That's a $20,000 move in the big futures. That's 2 gold versus 1 silver. Silver has been a little bit weaker here. Net gas is down 13 cents, trading 3.11. Have anything to do with the 60-degree weather in Chicago?
Maybe.
Maybe.
That was nice,
right.
wasn't it? Yeah.
All right, I'll go with it. Corn, wheat, and soybeans basically unchanged. You mentioned a moment ago about the dollar /6E down small. Usually, if a euro and the pound are a little bit weaker, our currency is a little bit stronger. You got the pound down 0.75%, 102 ticks. So you got a little bit of weakness there, a little bit of strength in the dollar. Even the S&P is down 26. Let's get to confirm and send, where we take a look at your viewers' questions. So let's get to it. I'll read the first one to you. We can go back and forth if you want.
Sounds good.
And then we usually get mixed up in between there. And then, I'll just talk over you or something like that. And then you can talk over me. All right. Are there any arb trades you could place on Friday between futures and ETFs for days like yesterday when futures trade but equities don't?
This is a good question. I'll be honest with you. I've never looked to do anything like this. I assume they're talking about you could pick one. I mean, honestly,
they could do SPY versus ES, or
it could be gold and GLD or something too. I've never done anything like this. I don't really have an answer. This almost seems like trying to find a way to outsmart the market, and that's really hard to do.
Reason why you've never looked at it, Jamal, because there's nothing there.
Yeah.
I mean, you can surmise that since volatility was bid on Friday, that the S&P options didn't lose as much volatility, theta decay for the long weekend, and that they were fat over the weekend. And you might say, you know what, I'm going to put on more positions to take advantage of that because you think it's going to be a quiet day today. We've hadn't had anything but that right now, so best laid plans of mice and men wouldn't work. But there's no arb you can do here, unfortunately. I mean, you know it, I know it, everybody knows it's a holiday. There's nothing to do there.
Exactly.
Okay. Next question, please.
All the information is available.
That's true.
Do you think that AI has or will make technical analysis more accurate?
You should have taken this question because you came in here hot this morning with AI. What AI is going to do. I'm still scared of drones, so I haven't gotten to the AI scared yet. Hasn't scared me yet, although some of the pictures are pretty good. I don't know. I know a lot of people have used AI or Google or Claude or AI by any other name to do a lot of the work for them. I haven't seen anything come to really fruition yet, like make it that much better. I think it's good for information. It's getting better and better every day. It kind of feeds on itself, you know what I mean? So you feed it information, it gets better. You kind of tailor it to what you want.
Yeah.
I know I've had it answer a couple company emails for me. It's really, really good.
Yeah.
That way. But I haven't seen it on the technical analysis, but I'm not a technical guy. We got Chris coming in at 8:40. Maybe we can throw this question out to him then.
This question is the root of a lot of the discussion around AI. Will it make it more better? And then people go to the fact that, will we even need a person to do technical analysis anymore? At the end of the day, I think the key phrase is, like you said, we feed it the information. And so as a result, it can eventually probably become pretty good at that. Look, it's really good at coding. It's really, coming up with code for things for those who code.
Yeah.
For the same reason, it goes out and scours and gets that information. So it probably will.
So you mentioned that for coding. See, I love it. I love it for that because it's a time suck for those who code, and for those who can't code, it's something that gets us a little bit better up to speed with everybody else. I mean, I know my son, and your son too, is still in. Mine's in high school. Yours is a little bit younger than that. The teachers now have programs that show how much was copied and pasted on something, how long it took them to do the article, how long if they went back and erased and came back to it. Because if you're doing something yourself, you misspell a word or you leave out a word, you go back, you reread it, that kind of thing. So they have all these programs that are kind of making it impossible for the kids to cheat on AI. You're going to have the same kind of thing everywhere else in the world soon too. So you'll be able to use AI, but I don't know how it's going to help you here. You almost can identify. There's only so much you can. It's almost like an option strategy. There's only so many strategies. There's only good and better. There's only good and better because what happens later. Like I've been mentioning put ratio spreads. If you do naked puts and we rally, that's better than the put ratio spread, which is better than the broken wing butterfly if we rally. So I mean, it all depends on what happens in the future, not really now.
I think there's so many because there's only so many finite patterns and things like that, it'll be able to do it. What it won't be able to do is suggest to us what to do on Valentine's Day. That's the one thing it won't be able to figure out. So AI is not taking over everything, okay?
Well, I used AI to find out it's the year of the horse. My AI is Kai. And he told me the year of the horse means peaceful, harmony, and kindness. Well, if we've had nothing but that in the market and probably all around the world. So maybe we got a flipping over of the cards here. Maybe things really will get a lot better. Next question, please.
And actually, he came and told us that today. AI didn't say. AI didn't magically say.
He did. But I confirmed
Chinese
it with AI.
Year. We would have to ask AI if it's Chinese New Year. See my point? You know what I mean?
Yeah, I do. I do. Next question, please. What percentage of your portfolio would you allocate to buying options, and what delta do you use? You get directional sometimes.
I do, and I can only answer for myself. I never really think about what percentage I allocate. I am aware of how much theta I might be paying. You can't
control that, right? I mean, the market sets what the price of the option is. But go ahead.
So I always talk about this type of question. I have to answer it two different ways because I do trade in two different portfolios. For the show account, I mostly buy options via offsetting with short, so I do a lot of calendar spreads. In my personal, I will definitely buy options at times. I've realized throughout the years what works for me, somewhere between 3 and 6 months out, and I usually do like buying like 30 delta in something that I have either, something that's really down big and I'm playing for calls, or something that's up big and I'm playing for puts. So that's kind of what I like to do. And so for that portfolio, percentage of buying options is actually greater than 70%. For this portfolio, for the show account, pretty low.
I'm going to answer it similar, but I'm going to go a little bit different here. If I'm looking to get bullish on something, my son Nick's done a lot with diagonal spreads. I think that's an intelligent way of finding some long delta. You're selling something like you just mentioned in the front month, buying something in the back month. Strikes different. If stock's 100, maybe you're buying the 100 in the back month. You're selling the 105 or the 110 call in the front month. You pick up 30-ish deltas. You'd be surprised how, we've said in the past how big small really is. Those 30 deltas get to 70 deltas pretty quickly when you're right, and they go close to zero when you're wrong. And it's enough. You know what I mean? When you're starting off, especially when you're using leverage of options, which gives you the buying power of 10 times the amount of just going out and buying stock or just buying an option. For me, I think it's a very small, if not minuscule, part of my own trading. I can't remember the last time that I just went out and said, I'm going to buy an option because I think a stock is going higher, or I'm going to buy a put because I think the stock is going lower. So for me, it's pretty small. But again, there's no wrong answer, right? You have to do what's right for you and your size account. If you have a smaller sized account, you might find yourself doing a lot more directional trades. I don't know if it's outright buying options, but a lot more diagonals, a lot more calendar spreads, to your point. Very hard.
DT.
Yeah, exactly. Very hard to do ratio spreads because you use a lot of buying power kind of thing. So you got to tailor it to your own portfolio. Smaller accounts are going to be a lot more directional. Next question, please. Is there a certain set of skills that you need to have in order to trade successfully?
I think one of them is the ability to have a short memory. I'll be honest with you. I think you got to have a short memory. I think you got to be kind of like a quarterback in that way.
Yeah.
You can't, sit there and pine over the interceptions, and you can't sit there and pine over the losses. I think that's probably one of the big skills.
Yeah. Not AI, but AI-like. If you just look at a chart, you could see past pricing. Makes it a little bit easier for you to, if you can't memorize that or think about that, you're trading too many things and you just kind of, float along. I have a little bit of a different answer. I think you can't, if you forget the past, you're destined to repeat it. I think if anything is here, it's the discipline to keep your positions in an asset allocation, which we're going to talk about 2 times today, proportion to your account. I think I've spoken to people over the last couple of weeks, and I think portfolio management of size is the biggest hurdle for people to get over. Now, I know a lot of people as of late, especially with the market at basically record highs, I know we're off those now, have been leaning a little bit long in the market and getting paid, and it feels really good. So, naked puts are a winning strategy for them in some capacity or another. Those people that I've spoken to or emailed with, I've challenged them to get, even with this volatility higher. Let's say you have a portfolio of $100,000 and you're comfortable being short 3, 4, or 5 SPY puts. That's basically your core position. Maybe you have a couple other smaller positions, but that's your overall position. And volatility's been expanding the way it is right now. I've challenged them to go from a complete naked put to a put spread, like rolling, even if it were now from March to April, taking that naked put that you're short and rolling it into a wide put spread in April. Maybe it's $40, $50 wide in SPY. Maybe you're selling the 30, 40, or 50 delta put and you're buying the 15, 20, 12 put in the back end. At least you'll get a little bit of relief for that catastrophe insurance. Like everybody's always asking, like now, when we've gone from 7,000 to 6,800, how do I protect my position? Maybe I'm short like the 680s or the 685 puts in SPY, and now they're going to be $5 or $10 in the money. How do I protect that put? You can't. Like you just can't. You either have to hold it with conviction or do something about it. My suggestion to do something about it would be from roll to 1 month to the next month and make it into a spread. Yeah, you're going to be paying a little bit of theta decay at high volatility, but you want to protect what you have, right? So how do we protect like catastrophe? The only way you can test catastrophe is keeping your position size small, but you also have to have some sort of protection. That protection can come from being spread.
So you're saying their skills should be more of like learning how to not use too much capital in certain situations.
People have no problem helping me spend my money when I make money.
Yeah.
Nobody comes to my rescue when I lose money, like, to help me put money in my account to do it. So I think you have to, you've had a boom of the market. I get emails from people saying, I'm up 40, 50% in the last year, and now I'm down 2 or 3%. What do I do? I mean, I don't think you should change anything. Mm-hmm. But if you're, because look at how much but nobody wants to give that back, right? Well, if you're worried about that, get spread. And when the market makes what you think is a bottom, take off your spread.
So I would say that
the market rallies, take off your spread.
I would say that should mean they should control their emotions, and that helps them control their emotions.
Absolutely. Absolutely. Because if you have to make a decision in duress, you're not going to, typically not going to make a good decision. So for me, it would be staying disciplined, watching your size, and then even if you've watched your size, doing something that's counterintuitive to allowing you to keep your door open. This whole market is about keeping your door open. That said, we haven't gone anywhere. We're at the low end of where we've been forever.
Yeah, that's true.
Next question, please.
What we got? Oh, what made you get into trading? Oh, this is a good one. You've been here a while.
Well, you're a lot younger than me. I don't think I had a choice. When I left New York in 1980, New York was just coming out of bankruptcy. The New York City had been bankrupt for, I think, a couple of years. They had just started hiring police and sanitation and those city jobs that when I was growing up in a fairly blue collar area was the coveted job to get, you know what I mean? And I filled out my application to be a police officer, sanitation, and transit authority.
Those are good jobs.
Yeah, all great jobs. And my best friend, Mark, got his back first. He got a sanitation. TSA, Transit Authority.
Pensions back then too.
Oh yeah, pension too. Yeah, Transit Authority, and I was either gonna, wait for my application to come back, which I finally did get back right before I left, and I was going to be Transit Authority also, so I could work with my best friend and have that kind of government job, or I could burn my boat. I had a friend that was a trader on the CBOE. He was a manager of Shearson Lehman Brothers, which is gone now. Mm-hmm. Remember, options just started in 19
So what made you say to hell with the
73.
guaranteed job and come here on a whim? We could be. I don't mean that.
I think I was always willing to kind of take a shot.
Yeah.
You know what I mean?
Yeah.
I loved Brooklyn. I actually my plan was to come to Chicago, rape, rob, and pillage here, make a bunch of money in 5 or 6 years, and go back home and try to live comfortably and get a normal job and have a couple of dollars in the bank and be set. That was my plan when I left.
45 years later.
Yeah. Here I am. I mean, once you get a taste of the good life, you don't want to go back. Plus, if you only had, I had a small pool, you know what I mean? I had never really been out of New York. I mean, right. Jersey was, I had never been to Manhattan.
Right. Yeah.
I think I went to Manhattan the first time in 1979, when I was 16 or 17 years old.
Yeah.
I had never seen the Statue of Liberty up close. I could see it across the bay. But
my cousins are all like that. My good friend who I went to school with, he's from Brooklyn.
Yeah.
Dude. We'd be in Manhattan all the time. I'm like, what's that building? He's like, I don't know. I'm like, Jesus Christ, man. Are you from New York or what? But that's how it is, right?
So greed made me get into trading. That would be it.
Well, it's funny because I did have a choice. I mean, again, I was in graduate school. I had really gotten into trading. And it eventually, when I started looking around for jobs, a trading job came my way to work at a prop firm. And kind of like you, I was always willing to, try something. And that's how it happened. That's how it happened.
Yeah,
whether you didn't have a choice, whether you had a choice, we did eventually make a choice to choose trading.
I mean, what motivates most people about anything? I mean, I think it's, love of the game, right? I didn't have that because Wall Street in New York to me was something I was never going to see. Wall Street seat or anything else like that was, $1 million. CBOE seat was $100,000,
But it was a love of the game because you don't get paid that much, especially back then when you were coming in and when I was coming in.
Yeah, but it wasn't love of the game as of love of what I saw everybody else having.
Yeah.
You know what I mean?
I just mean you knew. It's not like I knew I could get paid more being an engineer than I was going to get paid in my first job in the industry.
Yeah,
because I was interested. I was interested in trading. I loved it. I was already doing it on my own, just stocks, but I was doing it on my own. I was keeping a journal. I was doing all this stuff.
Sure.
I was really interested in it. I would wake up in the mornings and think about it. I wasn't doing that, even though I went to graduate school for several years in engineering science. I liked that, but I wasn't waking up thinking about it.
Yeah,
I was thinking about it. So it was something I was interested in, big time.
Awesome. So almost the same kind of thing. Different paths get to the same place. Next question, please. Does our style of trading work for large prop firms? Are they out there selling premium at 45 days and buying it back at 21 days, just doing larger size?
I mean, no. I mean, they don't do that. They're trying to squeeze every bit of juice out of everything that they have, and also, and again, just from the sell, we'll just keep it at selling. We're never going to get into long, but I mean, they're selling. They're also hedging with stock lightly at times or heavy, depending on how they feel about it. It's just very different.
I agree with you. Now, there are different types of prop firms, right? I mean, I know prop firms that are on both sides of the market, trying to buy an option at 4 cents, trying to sell it at 6 cents, and they just do that all day long. They're on the bid and the offer, and then they adjust their pricing, and everybody has a different style of what they're doing. I have some prop firms that only buy premium. I have some that only sell premium. But they're not doing it, like you said, 45 days, 21 days. That's kind of our retail-ish thing. And I mean, we really came up with that from the research that we've done. We never did that back in the day either. As a matter of fact, years past, we would teach, that options expire, the decay expires faster the closer you get to expiration. So we would hang in all the way up till expiration. Yes. What we weren't factoring in was, how much volatility of the overall position. As we became more retail traders and less market makers, i.e. prop trader kind of thing, we realized that the volatility of the portfolio is just as important as the amount of money you're making in the portfolio. So, I don't think there's many large prop firms that do this. Matter of fact, I think many investment firms, not necessarily prop firms, really basically stock traders. I mean, if you see somebody with a couple $1 million account and they have a, run by JP Morgan or something else like that, they'll have 47 shares of CoreWeave. They'll have 122 shares of Palantir. I mean, it's basically just stock. And then they'll have, 200 shares of Microsoft. They'll have 4 or 5 big positions and then 40 smaller positions, and they just hold for the long haul. I mean, that's how they usually do it.
The one thing I will say about prop firms, though, is that there possibly, you said there's different types of prop firms. There is possibly a prop firm that has said, let's try this strategy.
Sure.
Because they will try strategies all the time. You mentioned it, the idea of trading the front month. I remember there was this one year I was working at a prop firm. There was this one group. All they did was trade. This is before 0 DTE, but anything 15 days and then they were trading. That's all they traded. They didn't trade anything else. Another group is only trading 3 to 6 months. Another group trades leaps.
Yep.
They come up with the strategies every now and again. And I wouldn't be surprised if somebody probably has seen the research. We've been around a long time. Maybe one prop firm has tried to do this strategy.
Yeah, sure.
Just to see if it works.
And you know what? It's ever evolving too. You know what I mean? It doesn't. No, they pretty adapt pretty quickly to things. I mean, I remember when the VIX first came out, that there were prop firms just trading the VIX.
Right.
So everything changes. Next one, please.
This is me. On Friday, VVIX closed at 115 and VIX closed at 2120. I understand when volatility gets elevated, it makes sense to use more capital to sell premium. But is it also a time to get more directional toward the downside?
Yeah, I mean, VVIX has closed over 115 a couple of times this year already. It's up near the highs. Again, with the market near its recent lows, VVIX up near its highs. That's the CBOE VIX of VIX, for a better word, volatility on volatility. Does it make sense to use more capital? If you have it, if you've been disciplined enough. I mean, I know when volatility was wrapped around 20, I started ramping up my positions. Now volatility is 21.5. I'm not going to be able to ramp up positions here now because I realized that, size kills. So I sold what I thought was elevated volatility. It went further than what I thought. So my hands are in my pocket, or I do something that's like spread, like I mentioned just a moment ago. Like, I probably won't be selling, although it would be the best time if we were to go in the opposite direction to sell naked options. I won't be participating in that. So everything is relative to your own position. If you're getting in the market today for the first time and you're thinking about selling premium, I think you should be stepping in. So it all depends. You know what I mean? It depends on what your circumstances are. So for me right now, it's the best time, but I won't be doing it.
No interest in getting downside.
No interest in getting downside. I don't here. When volatility is high, puts are expensive relative to their old prices when volatility was more mean reverting. So for me, it's too late for this. That doesn't mean you can't get short. Like, there are futures that you could trade, micros or minis. Minis would be bigger than the micros. I like to trade the micros. Everything else is up to you and your size. You certainly could do downside spreads the opposite way of the way we do an upside diagonal or calendar. You buy a put that's closer to the money, you sell a put that's further out of the money in the front month. That works great. You could trade 0 days. There are 0 days in or Monday, Wednesday, Friday options in all the big names. Yep. You can do it that way. There's no problem with getting downside. Calls are going to be expensive too.
Yeah.
So, you don't have to go the put route. You could sell calls. Now it's going to use more buying power. And the first uptick we get, those calls aren't going to move.
Nope. They're going to get evaporated. To just answer that last part, I used to like getting long downside. We talked about it earlier, how this market is pretty weak. It's going to fall. I definitely used to see this type of thing and be like, oh, I'm a little interested and I get a couple of puts. Not really as much now. I just would rather see the market fall and then try to find my opportunities to either sell some puts or, try and get long in other ways. So that's what I do now. I don't really buy downside at this point.
Awesome. Next question, please. When volatility increases in equities, like it has now just about everywhere, it usually means prices have fallen. That is true. In those situations, is it worthwhile to sell calls Or would you just sell puts because the puts are more expensive?
Well, I think I just kind of answered this one. I just would rather see, I look at volatility creeping up, right? I look at volatility getting bid. If we were to get in serious backwardation, if we drop another 50 handles on a day like today, we close below 6,800, right? Like I probably, to start this day, I might sit on my hands a little bit and see what happens. Because I am long already. And I think it depends on where you are positioned, how you're positioned. I know I have, longs and via like short puts and things like that, or short put spreads or diagonals we talked about earlier. And so as a result of that, I'm going to sit on my hands a little and see if we do get the scary, ugly sell-off. Sure. Then I'll go out and sell those puts, right? Sell those put spreads, things like that.
I would also look at the individual stock pricing of their options. So like a lot of stocks that have perceived upside risk, I'll go with the Microsoft, so the NVIDIA or something like that, they'll have call skew as opposed to put skew. If that call skew goes away, meaning the velocity to the upside by the pricing of the options is perceived to not be there anymore, and it's always been there 75% of the time, I think that now allows you to look at vertical spreads that might be cheap relative to the way that they normally sit. Because we know when there's skew, I'm using call skew now on these stocks. When there's call skew, the naked option trades fat because that out-of-the-money option's volatility is so much greater. Spreads trade cheap because you're buying one volatility, selling another volatility. They're both relatively high. When you're now in a non-skew type of environment, those vertical spreads trade cheap relative to where they are. You get a good bang for your buck. So for me, I might be looking to do something like that. And as we do that, egg on my face, even the S&Ps are only down 8.
Well, we just got a little news. Iran's foreign minister says we have reached understanding on main principles with the U.S. I think that's what's moving on.
Well,
This is a huge bar.
Well, there you go, spoiling everything. Not going to make new lows up so I can buy the dip.
Is that what we've been heavy?
I don't
Iran ministry? I don't think
so. But listen, that's the story that they'll tell. What's gold doing? Down 115 as it moved. Silver's actually got a little bit weaker, down 3.5. Bonds are 118.02. Probably could sell this rally, but
I know, right?
Next question, please. Last one, my friend.
What is the significance of volatility futures going into backwardation?
You know what? I'm going to throw this back to you because you say that you looked at the volatility futures a lot and you talk about it being in backwardation. Not something that I typically look at. So I want to hear your answer.
It just gives you an idea of how stressed the market is, how fearful the market is when you see the front month future trading over the second month, which is also trading over the third month, right? I mean, at times that we've seen, the scariest times that we've seen extreme backwardation. Think back to 2020. Think back to 2022 even. I think was the last time we saw really extreme. No, yeah. We saw extreme last year at one point in April. And those are the times where the market is extremely fearful. We're down, 5 to 10 or 20% maybe. And those are the times where we're looking to buy dips. So you can't forecast how it's going to end up, right? I mean, you don't know. And we can remain in backwardation for some time. Honestly, I've definitely shown a chart at times where see how many weeks we've been in backwardation. But that's the significance. It's just showing you how fearful the market is.
But it doesn't. So good to know on what the market is pricing in for volatility. Is there more? Is there going to be a bigger range in the months to come? Is really what it's telling you, right?
Yes, which usually that's what VIX is selling. It's like right now, let's just say VIX was 24. That's pricing in 1.5% moves day to day, and the S&P 500, which we're getting close to, I guess.
Yes.
Yeah, that's the big thing. All of them are pricing in bigger ranges over the next 30 days, right? That's what VIX is.
But it doesn't help you for anything in the here and now for the 45-day time frame that we normally trade in, right? Other than knowing that volatility could be expanding in the front because it's expanding in the back. Maybe it's going to stay bid a little bit longer.
It's usually showing us that volatility is a little bit higher in the front, right?
Yeah.
Is further out. Which is different than what we typically look at. Volatility is more of a cone shape, right? Like it's usually lower in the front, bigger further out. But when backwardation happens, it flips to like this, and now volatility is bigger than it is further out.
Very good, sir. You know what? Let's take a quick look at the market before we take a break here and get to our first option jive on capital allocation. Even the S&Ps down 15. This is where they were kind of when I woke up this morning. NASDAQ down 150. Russell, which just went green a moment ago, is red, down 4. Dow down 36. Even the S&Ps are off about 8 handles from the highs they just made a moment ago. Volatility 21.15, up 24 cents here. You can see that it's had a big range of $1,200 already, 21.65 to 20.45. Bonds have been solid and steady, 118.04. It did get up to 12. They got down to 17 and change. But you can see you can see your bonds have been bid. As bonds go higher, rates typically go lower. Bitcoin has been holding steady at 68,000, down around 600. I've seen it down 1,000, down around 500. It must have made this tick up to 70 last night. I did not see it so far, but I've been up for the last 3 hours or so. What's that?
It's such a dog.
It is such a dog, right? Volatility goes up, Bitcoin doesn't do anything. Market goes higher, Bitcoin doesn't do anything. Market goes lower, Bitcoin gets hit a little bit more, right?
The only thing is you can positive say about it's not at all-time lows.
It's not at all. Well, it's far away from all-time lows, right? I mean, with zero is probably all-time low.
But you know what I mean? Like, it's not even like near, like, I don't think, I don't know.
Well, I've read the Bitcoin lovers of crypto, and I know we'll have Q and Glenn in today, but Ryan comes in, from time to time and talks about crypto too. It's that Bitcoin's had 3 kind of 50% reversals, and each time it's made new highs after that. I don't know if that's going to do it this time because we are down over 50%.
My point is like 2023, it was trading around 16 to 24K. It's still at 68. You know what I mean? Like, it looks really ugly right now, but it's been uglier. I mean,
it's been a decaying asset. I'll tell you that right now.
And again, it's oversold, but it's not amidst one of those bad things that have happened. The FTXs, the other USD, whatever. I don't remember all the bad things. All the crypto people remember, but the bad things that have happened in the past that caused it to fall. It's not that right now. It's just
I think Bitcoin's almost like. And I want to say futures. That's the wrong. Like other commodities, like gold and silver, oil. Yeah. Like I don't know if they can be oversold or overbought. They could be low. Like Microsoft has a book value. You can get somebody to say it's trading at 2 times book value. Now maybe it shouldn't trade under 15 times book value, but it's 2 times book value. It's relatively inexpensive. When you get futures or commodities like an oil or gold or silver, I don't think they're driven by that book value of something. You know what I mean? It's more of a supply and demand type thing. I think that's what Bitcoin is. I mean, right now, it's a dead asset. Yeah. And, one day we'll wake up, it'll be up 10 grand and it'll be the, soup du jour for everybody to have, but it's not right now. Market players are someplace else.
You're doing pieces on CPI. You said book value. I don't even know who you are anymore. I don't even know what's going on.
Comes in at 8:40. He's getting to me. His emails are bothering me. They're living rent free in my head. Ethereum down 56. That's almost a 3% move. 2 in the orders. Oil down 42 cents, coming off of its highs it made today. At just about 64, closer to its lows of 62. So oil with the volatility of 41 is in play. Gold down at $150. Back to 48 and change. It's about as low as it's been for the last week or so. Silver down to 73. It too is making new lows for the last week or so. Nat gas is the biggest mover on a percentage basis, down almost 16.5 cents, 5%. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We've got our first capital allocation. You're not going to want to miss this, an option jive. We'll be back in 90 seconds. Even the S&P's down 24. We'll be back in 90 seconds with Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option. Jive. Jamal, my friend, we are back, and you know what that means. Time for a little bit more Tasty Live with an option jive.
Oh, Jay.
Capital allocation. Huh. What does that mean to you, capital allocation?
It means how I allocate my capital.
Can't use the question to answer your
how I spread it around. How's that? Is that appropriate? Is that fine?
How I spread it around works for me. That's the way I would answer it too. How I spread it around.
I figured you like that one. Maybe you would.
Good one. All right, let's get to the first. Let's get to the slide here, and we'll get to the first one. Even the S&P is down 22, Nasdaq down 176, Dow down 60. I missed selling them on that little break, and Nasdaq down 172. How capital allocation impacts portfolio volatility. We're talking about strangles. We're talking about strangles because we're going to do a little bit on naked puts after this. We're talking about strangles right now. All right, you ready?
Yeah, let's do it.
When we scale up, we observe larger profit and loss changes for the same position. But how does volatility respond to this increase in scale? So really what we're talking about for those who, like me, sold volatility around 20, 20 and a half, and now volatility is 21 and a half or 21 right now. How does that increase or change our or impact our portfolio? Also, how does volatility react to different management strategies, such as exiting at 50% of maximum profit or at 21 days to expiration? That's days till expiration, DTE, which is just a hint on this whole thing. 21 days has probably been, meaning rolling, closing positions and opening other positions in the back month, has probably been the single most volatility of my portfolio smoothing that I've had since I've been a exclusive retail trader for the last 15 or 16 years. So for me, that's, of all the things that we've done here, that's been the single most important thing. So I think it's going to have a big impact on this one.
I think it's a big thing industry-wide too, especially in the retail space. Like there's a lot of people who talk about that now more than ever because things get volatile as you head towards expiration.
Yeah, you make more money, but you know, it's quite a ride. Next one. Or lose more money. Next one, please. To understand this, we analyzed the volatility of a portfolio of SPY, 45-day, 1 standard deviation, 16 strangle, classic tastylive type trade with a constant capital allocation of 25% of the total asset value at all times. What do you think about the 25%? Good number, bad number, okay number?
I think it's a good number. It's an okay number, yeah.
Yeah, I agree with you. I think 25% is the way to go. And you can find that percentage on the top of the Tasty Trade platform. It just says BP usage and a percentage, and it does it all for you, so you don't have to fill anything out or keep track of anything. And then you can do each individual position too. These positions were either held to expiration, managed at 50% of max profit, or exited at 21 days. I guess, again, just classic. Again, that 25% should be the key that you should be looking at here. The second part would be, what's the optimal on closing these positions, which are the 3 that I just named. Next question, please. Next slide, please. On average, exiting at 21 days generates the highest return and the lowest volatility. That's nirvana. That doesn't mean that in between there is not going to be some give and take, right? We're going to have that, but that's nirvana. Offering superior results compared to the other 2 strategies. Let's just take a look at this. So looking at average daily return, and then the average daily standard deviation. This is daily, not for the whole 20 plus days or 45-day time frame. And when you look at this, you want the high return. You want to be on the left-hand side of this chart, somewhere, as low as possible with the highest return, and that 21 days is the clear winner. The 50% there, I thought both of these, 50% and held to expiration, and I know because you can take off the trade and put on a new trade with 45 days, and that's why you get a higher return. But I'm surprised that it wasn't better at expiration than it proved to be here on this chart. What about you?
I wouldn't say so. There's so many things that can happen, right?
Mm-hmm.
You get the expiration. Sometimes you wake up and it's like, oh, this is great. This is fantastic.
Yeah.
And other times, right?
You got almost twice as much volatility waiting for a 50% winner than you did at closing at 21 days, which tells me you don't get the 50% on the majority of your trades until after 21 days.
That's what I was going to say.
So I know in the past we've talked about, closing at 50%. You're probably going to have to look into that other guideline of closing at 21 days if you're going to try to go to 50%.
I think this is why, too, when you get that 50% on a quick one, you better take that thing off the table.
Agreed. 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 Or anything close to it, right? This is done at 50%, not taking into consideration 40, 45%, right?
Again, I always say the things that people struggle with are winning and losing.
Yep.
Winning being a part of that, too. It's hard sometimes.
Next one, please. Slide 5, please.
Is it?
Oh, I'm so sorry. I was reading the top line there. I apologize. My mistake, team. Managing winners. I was reading how capital allocation impacts portfolio volatility. Managing winners can. That doesn't change, by the way, on each slide. That top white part that stays the same all the time.
It looked different to me on the last one.
maybe. Managing winners can generate a higher return compared to holding to expiration, but does not control volatility as effectively as the 21-day approach. That's what I was just showing you on here. Now they're putting it into percentages. The 1 standard deviation strangle daily return at expiration 0.03, the 50% winner 0.042, and then the 21 days 0.05 being not the clear winner, but a better winner. When you factor in the daily volatility, you got almost twice as much volatility holding for a 50% winner, and you've got almost another 50% volatility and holding to expiration. The 21 days is clearly the winner here. I don't think this is anything new for anybody, but again, we're talking about 25% of your portfolio. If you're using more than 25%, and I get it, if you have a smaller portfolio, I might say you'd be using 75% of your portfolio. You know what I mean? You got a small account, a Johnny size account, under $25,000. You have to be in the market to make any type of return. You have a $250,000 or a portfolio margin account or $100 and change account or $1 million plus. That 25% is a pretty hefty number.
Mm-hmm.
Next one, please. Next, we want to understand how capital allocation impacts portfolio volatility. So within the same portfolio, we increase the committed capital usage to 25 to 35%. So seems like a small number, because I know I've done this where I'm looking at my capital allocation and it's in a decent sized number. And then all of a sudden I see it's up at 50, 60%, and my swings in my portfolio are a lot bigger. Not only a lot bigger in real time money and volatility, the numbers themselves get bigger a lot quicker. You used to seeing, I'll just throw out a number. You're used to seeing your account oscillator, between a winner of $200-$300 and a loser of say $300-$400. I'll make your losers a little bit bigger than your winners because you have a higher probability of success on your overall portfolio. And then all of a sudden that loser becomes $1,500 and that profit becomes, $800. Mm-hmm. You're saying to yourself, what do I got on here? And really all you've done is increased your sizing, your asset allocation. Let's see how much on a percentage basis that really kind of...
it can happen pretty easily too, increasing that size.
Sure does. It sure does. Next question, next slide, please. Thank you. After the capital increase, the volatilities of all three strategies went up. Exiting at 21 days yielded the best results in containing the rise in volatility. So these numbers don't look too different on a percentage basis, but they're going to be a lot bigger because you went from 25% of your portfolio to 35% of your portfolio. It's a big increase on a percentage basis. Clear winner here on we're just looking at volatility change here. 21 days, 0.4% to 0.5% to 0.6%. Not that big of a difference, right? I mean, you're still going to observe some issues here.
Yeah, I mean, you're going to be seeing some movements around in the portfolio. I mean, what would you say do you look for as far as like volatility for P&L? I mean, somewhere between 2 and 5% a day or something like that. I mean, something like that, right? It just really depends.
I'm doing some quick math in my head right now because I know I never look at what my volatility percentage change is on anything.
Yeah, I don't either, but
just doing some quick math.
When you see a number that every day and you're like, okay, this is a good day, or if, and it's down, you're like, oh man, we got some work to do here.
Yeah, at 63 years old, I think I'm 63. I cannot tell a lie. It's closer to double those numbers.
Mm-hmm. Mine too, for sure. I think most people lie somewhere between 1 and 5%.
Yeah. So maybe do as we say, not as we do.
Yeah.
Or maybe I have to reevaluate my own sizing in my portfolio because a lot of times I think I know something. And usually I have to work out of it for a month.
The good thing for me I can say is that even though that number is there, it's not it used to be mostly directional. It's not with that anymore.
Oh man, I mean, I could tell you back in the day, it was a multiple of that number.
Sure.
But the edge was a lot different as a market maker than as a retail investor. I mean, I'm more in capital preservation mode than trying to get ahead mode, like in years past.
Yeah.
So it's a little bit of a different way of looking at the market, and that's why you have to kind of extrapolate out and figure out what your goals are. These are just guidelines, but the 21-day rule here smooths out your volatility, and I have found that to smooth out my volatility too.
It has
We're 10 days away
too.
from that.
Yeah, it smoothed out mine too.
Next one, please. Managing winners at 50% hour achieves a greater jump in profitability. So here you go, you're getting paid for waiting on it. And we just explained from past slides that you're probably inside that 21 days. So the volatility is there for you, but you get paid. Now here's the one where you're looking at average daily return on the left, and then your average daily standard deviation on the bottom line there. What kind of gets you here from... You're going to have a lot more volatility at 50% winners, but you're going to get paid more than if you hold till expiration because one side looks like it's going to be in the money.
So this is the increase. This is the increased. Capital,
yeah. Right? So you do get paid.
You get paid. You're going to deal with more volatility. I mean, this is what I'm seeing here across the board, which we already saw on the last slide, but now it's in plain view, like what you're going to be dealing with on a day-to-day basis. Sounds like you're going to be white knuckling it every now and again.
Yeah.
To the roller coaster a little tight. But
You're still gonna look at the blue, which is the 21 days. Your average daily return is equal to, if not a little bit greater than the 50%. You just don't make as much each time because you're closing it. But again, your average daily standard deviation. So many times people will send me emails to something, and I actually challenged Chris on gold on this when gold made its first break. I was talking about, the great unwind the week before gold really kind of sold off. And says, when it does have this unwind, it's going to be violent. And, I spoke to Chris and they were on Sunday night. I was like, does your macro view change? No, your macro view doesn't change. So if your macro view doesn't change, I can't understand why you're not banging on the drum to stay the course or buy gold. And he said, I am staying the course. I just haven't added to my position, which for me as a trader made it, it was a hard concept to understand, because for me, when things change, they change, and they certainly seem like they changed in gold. The upside was the meme type upside was gone in there. We might have some two-sided action, just changing strategies there. I think this is the same thing here. When you see the volatility of your portfolio and your money changing, it's going to be very hard to stay in this. I get all the emails, is where I was going with this, from people saying, hey, I love Oracle. I have a bad position in Oracle, naked puts in Oracle, which is what we're going to talk about on the market measure, capital allocation with naked puts. And I've rolled earlier. I rolled a week and a half ago from the front month to the back month, and I rolled down a strike. You know what I mean? And if Oracle continues, has been catching a little bit of a bid lately and kind of bucking the market a little bit. But if it doesn't, I'm going to roll even earlier than that and maybe have to add a call to the upside. You got to change your strategy and your delta. Delta's king in here, and your delta is going to increase when your average standard deviation changes too, and it gets a little bit uncomfortable. Last one, takeaways, please. Regardless of capital allocation levels, exiting at 21 days consistently shows the best ability to control volatility among the three strategies. I think we showed that pretty clearly here today, which is pretty cool. And when scaling up, the 21-day approach results in the smallest increase in volatility, which I did not point out, which is a good thing that they're putting here, whereas managing winners at 50% experienced the highest jump in profitability. So I guess those risk takers, when volatility is high the way it is right now, should be waiting a little bit longer to take their profits, and you get paid for it. Well, you don't normally get paid for it if you're waiting when volatility is lower.
It's true. And again, just to accentuate here, the 21-day approach is certainly a way of smoothing out a lot of volatility in your portfolio.
Very good, sir. Even the S&P is hanging in there, down 17.
Hanging in there, Tone. Hanging in there.
They've been down 17 where they are now. They've been down 40. They've been up 40.
We've almost had a full day here.
We've almost had a full day before
between that and oil and gold and silver, wow.
Yeah, I guess after that news, oil sold off a little bit. It says down 7 cents here, which obviously is where it is. But you can see here it traded up to almost 64, which is $1.50 higher than where it is right now. Gold down $1.35 and change. I think it was down around 70 or 80 when that news hit on Iran. And then silver has been the weakest of the group, still down just around 5%. Bonds hanging steady at 118.01. We're going to take a quick 90-second break. We're going to come back. We're going to change all gears, and we're going to get ready for the opening bell. Really found these messages. We'll be back in 90 seconds. Tasty Live.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. 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 Baby, your love is too good.
Jamal, my friend, we are back, and the opening bell is coming in about 5 minutes. Before I get to the overall market, I do have to tell you that it is pool season again. As we reach 60 degrees in Chicago, and nat gas is down almost 20%. That's a 6% move. I thought the pool was going to be closed this year when nat gas was up around $4 or so. So it's better down at around $3.
We still got a long way to go.
We still have a long way to go till pool season. Yes, I will agree with you. Even the S&P is down 19.5. We've seen them make basically new lows for the year, 60, almost down to. I mean, I know we had lows closer to. Well, let me put them up here for you. Lows at 67.50 and change, which I guess was only about a week and a half ago. But it seems like we were crashing at 68.05 here on the E-mini S&Ps, down 19 or 20. What do you think about the market right here?
Well, like I said, as we were coming out of break, privately between the two, I really hope we have this much movement when the market actually opens,
right?
Compared to what we've seen this morning. What do I think? We've
had 80 handles of overnight action.
I mean, that's quite a bit. I mean, again, that's well over 1%, and I think that's what you have to look at more than the actual move. I think you have to look at the range. That's what I've been looking at over the last couple of months here to determine kind of the volatility and what we're going to get. You asked me what I think we're going to do.
Yeah, sure. Go ahead. Throw it out there.
Oh, man. You know what? For the sake of argument, I'm going to say we're going to bounce.
Well, that's what we've done every other time. I mean, we just got down here the other day and we bounced. And the same thing.
We didn't on Friday, though.
No, I think, but I don't know why I'm getting so pessimistic that we need like a little bit of a flush out. Maybe it's because volatility is hanging in there at 21.10. Let's watch volatility. I think it has to get under 20 before we have any sustained kind of rally in the market. It's 21.10 right now. So let's take a look at volatility. If we get back down to 68.05, which is the lows on the E-mini S&Ps, and the Nasdaq gets Nasdaq's 120 handles, or a little bit more than 120 handles off of its lows. Let's see if the E-mini S&Ps get back down to their lows, and let's watch what volatility does. Now, if we just catch a bid from here and volatility contracts, I'm completely wrong on what I think the market is going to do today. If we get that movement a little bit lower, let's watch what volatility does. If volatility doesn't make a new high, maybe we get some footing here and we'd be looking to kind of buy the dip a little bit on this movement. The strangest movement for me is going to be if we catch a bid from here and then all of a sudden we're up 20, 25 handles and the E-mini S&Ps are back around, 68, 70, which is really nowhere, right? I mean, we've gone nowhere for the year here. What a difference, 60, 70 handles is going to make in the market if the attitude is going to change here. I think we've got a little bit more kind of overhang in the market than we've seen in quite some time. That's what I think. My son was the opposite way. He was actually kind of bullish on Thursday because we got up to around 7,000 a couple of times. I said, you know what? The more times you get up to it and can't get through it, the more it seems like a bigger dip is imminent. And then we kind of got that over the weekend and got that on Friday a little bit after. Remember that big rally we had on Friday? We couldn't hold it. I think we still have a little bit of overhang coming on here.
Yeah, I mean it's we've been getting rejected at 7,000 each time. While of course I agree with you about volatility, I'm just going to add to it this bond situation. I mean, hanging out here 118s and ZB, hanging out at 113 and ZN, that's been, I think, the big thing in this recent era, in this recent weakness. This has been the new emerging thing that looks a little unsettling. You know what I mean? Like,
sure, if
bonds are hanging out here. I mean, this is almost the only difference is that the dollar isn't up, but like this is kind of the market where we see where there's, I mean, essentially almost a sell everything. The gold and silver move has often mirrored the equity move that we've seen in recent times. Actually, you could argue that ES and NQ aren't down enough, but nevertheless, they are down. Volatility is up. Bonds being up. We know that's usually the real scary market. So I'm going to say that's until we see a little reprieve in bonds, we're in trouble territory.
So you say that money kind of flows into the bonds because, well, no, that's the flight to quality? Is that what you're saying? That's the flight
to quality, yeah. I mean, how long has it been since we've seen this? We've seen, the bond double. Was it last year probably in April? Yeah. I'm sure we did.
Yeah.
Maybe a little bit in the summer too when some fears came with something with oil, blew up. So yeah, I think this is probably the biggest scary thing right now.
Well, markets were making highs in October of last year when bonds were around here 118 and change. Is it a new opening bell? Is it opening day? It's not opening day.
I know that's me. That's my thing.
Oh, that's yours. That's too funny.
I know.
All right. Well, that was the opening bell there. a funny one for me. Even the S&Ps. I don't know if I'm ready. Can I get a different opening bell? I don't know if I'm ready yet. Do we have an opening bell? We can ding, 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 ding. Man, you guys are really trying to throw me off my game. Even the S&P's catching a rally, throwing off my game, down around 8. NASDAQ down 140 and change. That's the weakest of the group. Russell up 1, which is the second time I've seen it up this morning. Caught a little bit of a bid after that Iran news. Dow up 140. Volatility up 6 cents, under 21. Bonds under 118, to Jamal's point, 117.31. Bitcoin down around 700. That's where it's been sitting. Ethereum down around 60. That's where it's been sitting. Oil down 16 cents, near the low end of its range. Gold down 130. Volatility good in gold at an IV rank of 62. Silver down a lot more than gold, twice as much. Down $3.73 right now, down just under 5%. Nat gas down 19 cents. Let's see what's moving this market. And
I had to put on a trade. A little crab trade. You know, the boys have really gotten me into the crab trades. You know the crab trades?
Sure, I work with Nick.
They got me into them.
I know the crab trade.
I like them, man. Yeah. I just put one on in GLD. Mikey and I were talking about this last Thursday. Gold wasn't. I was like, if gold goes, GLD goes through 450. I'm putting on a crab trade in there. I just did the long 450 in April and short 2 of the 465s in March, and then long 1 to the upside, 480. So
you said April, March. You short 2 of the what?
Short 2 of the 465s, long 1 of the 450s in April.
Got it. So this would be the 1x2, and then buy it.
And then the long one is 480 in March. $15 wide.
In March also. Got it. Yeah. So that defines your risk. It makes it a defined risk trade, which means you're using significantly less buying power than if you had that naked option, right?
I like it the way that they've done it, but essentially you're manipulating a butterfly, right? I mean, essentially is what you're doing, and you're collecting
skip month butterfly kind of, right? Right. You're long 1, short 2, long 1.
Yeah. And you're short 2 in the nearer term.
Yeah.
Which is where we all really want to be short anyway, right?
Yeah, that's why you get a lot of theta decay on the overall position. Yeah.
I just did it for $7.50, $15 wide. You got to love that.
Got it. Yep. Perfect. Uses a limited amount of buying power. Mm-hmm. Good job out of you. Let's see what's moving this market here to the downside. SanDisk always seems to be one of the leaders there, down almost 5%, $30. MU, which has my number, very hard for me to trade, down 3.5%, down $13. Gold, which Jamal just trying to bottom pick, trading 450 right there. Tesla down just about 9 or 10. TSM, which caught a bid a few days ago, sold off violently. It came back now, is down around $8. Crowd down around $8. AVGO, which has been a market leader, down around $7. AMD down a couple of bucks. Google down a couple of bucks, 4.5. Oracle down around 3.5 or so. Let's see what the upside is bringing us. Lilly up around 9. Costco, which you mentioned, over 1,000, 1,020. I needed Costco to do this, I think, back in September.
Yeah,
I think it took me all the way to December to get back to even in there. We were talking about Costco splitting. I don't know, but 1,025 in Costco. Reddit up 3 and change. Apple, I mean, trying to keep the market a little bit higher here, up 1%. Love, my sister's long that, she's a Love manager.
Southwest?
Southwest. So I told everybody about that when it was in the 30s. It went into the 20s and then rallied into the 50s. But yes, made her happy. JP Morgan down 2, Qualcomm down around 2. What do you think about right now? Kind of catching a little bit of a bid in the overall market just about everywhere. Even the S&P's flirting with unchanged. I actually thought or had hoped that we would make new lows to kind of scare all the children.
Yeah,
we haven't done that yet.
What I see right now, I mean, is a lot of the similar movie we've been seeing for a while. By the way, you mentioned Micron. I guess I got an old Iron Condor in there that almost it's nobody has that number.
No, that's not.
I'm seeing a lot of the same things that we've been seeing for a while. Although Amazon catching a bid here, but it's a lot of the same. You mentioned Costco, Walmart. I would suspect to be positive at some point, unless this whole thing flips and Nasdaq runs and those names fall. But
Nasdaq just rallied 100 handles. It's only down 47 right now. They're all pretty much wrapped around unchanged.
Is this the fade? Are we supposed to fade this?
Say again?
Are we supposed to fade this?
I'd like to buy new lows. I don't know if I can fade it. I wanted to fade it earlier and missed it.
I know. It's here again.
And your opening bell really screwed me up too. Like I'm not even awake yet with your opening day.
But doesn't it put you in a good mood? That puts you in a good mood. You know what I mean? I'm ready to charge.
I guess I'm not in a good mood yet because I didn't get what I thought the market was going to do today.
You wanted it down. You did.
I wanted down. I wanted down. Scare the children to be able to buy it like a flush out. We haven't gotten that. I think we need that.
We still might get there. This might not happen in the fashion.
Right now, volatility down 5 cents. Made its highs 21.60 overnight. I hate it that we make highs in volatility and low in the market overnight. Doesn't give me an opportunity. I don't usually trade overnight action.
No, I don't. I don't.
Yeah, I know a lot of people that do because it doesn't matter to them. Chart type people, they like to. Doesn't matter. They like to keep their charts on 24/7 kind of thing.
Only when things are really crazy, Only when they're really crazy. During the election, they were really crazy. I remember, that was fun overnights, but only when they're really crazy do I trade overnight.
Yep. Well, I hope I'm wrong. And we catch a bid for all the bulls. If you were a bear, you certainly had an opportunity to change that tune with the market movement that we had last night. I don't think we're done though. Volatility 2080 and change. That would be /VX. You mentioned and pretty astutely too that volatility will expire. That's VIX on tomorrow's opening. So I think they'll keep volatility relatively high for expiration. You can see here it's the 0 day, and then we get to the new volatility futures, and then maybe you can have a change in volatility. So we'll see what happens. You're going to get a little bit of volatility trade today going into expiration, because as volatility gets to a round number, those options that had basically 0 delta become almost 100 delta. It kind of wants to pin to that number, not move too much. That number would be around 21 right now, which is relatively high. So
I know we've done a ton of different studies, and I might have missed one of these in the past, but I would like to see a study around VIX expiration. I feel like there's a lot of times where we have a VIX expiration and then it expires on that Wednesday, and then we do get some volatility like afterwards because of just adjusting, repositioning.
Sure.
And it maybe varies more depending on if it's a quarterly one or whatever, right? Because again,
Yeah.
Those who don't know, VIX does expire, and when it does, it settles into SPX options, right? And there's this whole settlement, and I used to work that settlement. It was crazy. But I just wonder about that, if there's like something there. And I guess we'll see tomorrow too, if there is.
Yeah, well, I'd be pleasantly surprised if 68.05 or so and overnight was the low. We're 50 handles off of that already. Expected move in the E-mini S&Ps. We looked at it earlier, was closer to 50 and change. It's already 43 and change. So it's come in by about 15 handles just from the last half hour or so. We'll see how that behaves for the rest of the day. You know what? Let's take a quick 90-second break. Chris can explain all this to us because I'm confused with the market and have been dead wrong on it so far this morning. So let's see what Chris has to say. But let me explain. We'll be back in 90 seconds. Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade. We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Jamal, my friend, we are back, and so far the market has been pretty complacent, but one man I know who's never complacent, always flying off the handle, is this man, Chris, and let me explain. Chris, what's up, my friend?
That's why they call me Chris Flying Off the Handle Vecchio around these parts.
You know what? I think you're completely the opposite, and that's why I said it. I mean, I really feel that you're probably one of the most even keel, father-type figures for a younger man than myself.
It's an on-camera persona. Don't let him fool you.
Really?
Yeah.
You've seen him be unhinged?
I'm close. Not 100%.
Close.
You know,
well, I know you had a flood in your house. Did you have a flood in your house? Did you have like a pipe bust or something?
Yeah, it's great. We got back from Canada last Tuesday, and a pipe burst above my electrical equipment. So it completely soaked the circuit breaker. That all had to be ripped out, replaced. Which then meant that a lot of the electrical equipment outside and around the home was out of code. So all that needed to be ripped out and replaced. Grounding rods, the meter box itself that goes down to the street, all new. It's a money pit, Tony.
You've had some carpentry issues in the past. Now you have some electrical issues. You've had tree issues, right? I mean, active.
Yeah, well, we built the house on top of an Indian burial ground, so we're really trying to press the luck here.
All right. Oh, I don't. I wouldn't F with Mother Nature. So, okay, all right. But you handle it well. Okay, you handle it well. Water,
Tony. Jamal's seen the real me. You know that John Clayton Sports Center commercial?
Sure.
Right. You know what I'm talking about. Sure. That's how this goes around here.
Yeah, water is an SOB, man. It's a bad one. Sure. It's a bad one. So I feel for you, man. Anybody who's ever dealt.
The essence of wetness.
Yeah, I feel for you.
Zoolander quote, Tony.
Yeah.
Guys, I've been out here for a few days.
Sure.
So usually I come on and ask, or I pontificate, maybe explain something to the audience. But I figure with you two gentlemen in the driver's seat today, maybe I could get you to explain some things to me here. I have 5 pressing questions on my mind. Some things that have been, eating at me while I've been watching the market drip lower. I can't get water off my mind, Tony. One thing that I can't help but notice is that there seems to be a little bit of a dispersion trade going on. AI and concentration within AI seems to be bothering the market still to this day. We know that capital has been concentrated in tech for over a year, but it's evident from the breadth that's changing beneath the surface that dispersion's picking up. So I'm curious, do you find yourself now looking at a situation where index exposure is becoming less efficient and stock-specific opportunities have started to arise over the past week or two? And in turn, given that potential shift in that type of regime or environment here as we make our way into the second half of February, one that typically is bad for broader markets, do you think that we should be less directional and more risk-defined, thinking about selective premium selling? Because directional beta right now looks a little tough as I re-enter the markets for the first time in nearly 2 weeks.
Well, I mean, we haven't really gone anywhere, right? I mean, we've been violently unchanged. We're now near the lows, 68, 40, 50. We got down to 68.05. And just talk about even the S&Ps. You can pick whatever index you want. I mean, we're now kind of near those lows that we've made numerous times this year so far and have bounced off of, right? I was actually looking for us to go a little bit lower than that before we bounce, and it looks like we're hanging in there. Volatility, though, that's the big culprit. Volatility is now 21. Volatility hanging in there going into expiration. I think it's going to hang in there going into expiration, which Jamal mentioned a few times already, is tomorrow morning. Then maybe we could see what the market does. I think it's a rudderless ship for the day-to-day. I know I got a lot of my friends here emailing me saying, buy the dip bat, don't be a sissy Mary. But right now, I don't.
Those are people you consider your friends? Okay.
I do. Until further notice, you know what I mean? Until I put them in the penalty box or something like that. I consider them my friends for sure. I'm not as optimistic as I was just a few days ago before Valentine's Day in the market. I think the more we got to 7,000, the bigger that becomes a ceiling in the overall market. And I think when you've got something like SPY with a monthly volatility now, in the 20s, no longer in the teens, I actually think they become a little bit of a play here, Chris. The individual stocks, I think you're going to see that their upside skew goes away. And I talked a little bit about this on Confirm and Send. If their upside skew goes away, then I think you've got an opportunity for a little bit of a bid in those products. Playing the contrarian role.
Jamal, same question to you, I suppose, here, because I do have a question about volatility, as Tony noted, and I want to get your take on that. I don't want to chew up too much of your and my airtime because we're going to be on Futures Power Hour later, and right, so we're going to have a lot to talk about. But curious, do you see this market shifting? I know it's been a lot. It's been several months, quite frankly, where this market's been chewing sideways in the NASDAQ and the S&P 500, but you have been able to take some directional bets. Buying the dip hasn't hurt you. You just really haven't been able to push through 7K. Are you a dip buyer down here, or is there just enough accumulating right now to keep you aside and be less, keen to directional beta?
Today I'm not. I already have been a dip buyer. I mean, 6,800 to 7,000 is the area, right? And so, yeah, I've definitely taken shots at longs. Times we've been down here in the past couple of weeks. Some things I've been able to get out of when we got to 7,000. Some I didn't right away. We talked earlier this morning about 21 days that were 50% return, and some of those positions just weren't that, so I didn't take them off. And before you know it, we reversed, right? So that's why I think today I'm just kind of watching and waiting and seeing, is it going to get uglier? I'm not sure, but to answer your question, I mean, this has been the area to buy a little bit of the dip, and eventually, like a week later, we're back up at 7K. Oof. Does it happen again? I don't know. But I think if you haven't done anything, I think this is an interesting area. It's been interesting for several weeks, if not a couple of months now.
I mean, my existing positions that were fairly neutral to a little bit short have caught a little bit of long delta to them, and I'm uncomfortable. I mean, I don't like volatility at 21. We got to be under 20. We haven't gotten under 20 in volatility all last week. One time we got down to 1985, and then we promptly went higher in volatility. The market went lower. We need volatility under 20 for this market to catch a bid, and it's closer to 21, flirting with 21 than it is 20. 20 is that magic number for me. If we stay over 20, you're going to get some capitulation in this market, one way or the other, bouncing around, but you're not going to get that rocket ship moon to the top. And here we got even the S&Ps down 32. So I did not sell them, but I did not buy them.
Yeah, they just felt pretty hard. Not only that, but again, gold and silver moving down as well.
Yeah, Chris, I want to throw this on you. Gold caught a little bit of a bid the last couple of days, but it sold off pretty nicely here to 48 and change. And I'll throw silver out there too. Silver's been a lot weaker than gold. Silver down twice as much, 7% now in gold. And so, from a macro view, tell me what that means.
Probably nothing good for risk generally. You know, this is wrong, right? But I want to just go back and think about some hypotheses I've had personally about how the markets are working. Past few months, perhaps the reason why stocks have been having difficulty rallying to the upside was the fact that the metals were getting all this attention. So capital flows at the margin, people aren't allocating to your SPY, you're allocating to your GLD. More GC than ES, so to speak. Mm-hmm. And an idea that I had there was, well, once the metals rally stops, once that fever breaks, that's when stocks will be able to rally again. Because at some point, the risk-adjusted return of owning the S&P 500 and all future cash flows that may contain is worth a little bit more than owning a rock. And so when the rocks started to fall at the end of January, beginning of February, it looked like, oh, maybe we get some acceleration in equities to the top side. But the fact that they haven't means that my hypothesis is wrong, or maybe it's right and there's something worse that's lurking beneath the surface. This also happens just to be a really crummy time of the year. Let Me Explain's new cadence every 2 weeks, I suppose we could revisit the seasonality that we discussed 2 weeks ago, Tony, which was the market has a decent bit of space for the first 2 weeks of February, but you get into the back half of the month, volatility tends to rise, stocks tend to fall over the past 10, 20 years. This next 3-week window that we find ourselves in happens to be one of the worst 2 windows for equity markets during the year, the other occurring at the end of the fall, or the beginning of the fall as we go into October there. And I don't think anyone who's been trading the markets the past 3, 4, 5 years finds that to be a surprise given recent action. So just the table is not set that nicely right now. That said, I don't think I'm much of a dip buyer here per se. I do think there's 2 things to consider. One, if we look at the S&P 500's range going back to the beginning of September, we're at the halfway point basically right now. And so if you were sizing up and say the ESM6 contract, to take this from like theory to practice, as Dr. Jim may say, and we look at the recent range high lows, doing something like a short iron condor with an IVR sitting now at 32 can yield basically a 1-to-1 risk to reward. It's not a great probability of profit, but staying below the September, October lows and going through the January, February highs. So looking for short strikes north of 7,100 and maybe below 6,600, you're looking at 35 to 40% probability of profit for a 1-to-1 trade. It's not bad. You're basically betting that the range in the past few months holds. But Jamal, this is how I want to transition into that second question for you, which we won't cover on Futures Power Hour later. I'm looking at the volatility term structure here as I restart my trading and kind of start from scratch now after what was nearly 2 weeks away. And I'm seeing that spot vol is picking up while longer dated vol isn't necessarily moving up as much. So that divergence raises a question for me whether or not the market's pricing in a near-term shock, but still is confident in the longer-term outlook, right? If that contango's remaining, then maybe we should be dip buyers after all. How are you looking at the vol term structure evolution over the past 2 weeks?
Well, yeah, we're slightly in backwardation, right? When you look at the G contract, although that's very close to expiring. The weird thing that has happened in the last week or so is even though we've approached backwardation or gotten flat, the next month contract, that March contract really hasn't eclipsed either one. It hasn't gone higher. It hasn't eclipsed the April contract. So there's a little dip there, right? Which is a little strange to me. It almost says that this is not as bad as it seems. The only difference with that, as I've talked all morning with Tony, the bonds, man. I mean, I know this is different than your conversation, but I honestly think we should be paying more attention to bonds and volatility right now. Like looking at ZB at 118, looking at ZN at 113, that seems more scary to me than what volatility is doing, I would say.
I'm on the opposite page. I think volatility is king. Now, we just made new lows, or making new lows on E-mini S&Ps at 68 and change. And I think I have a more minute-by-minute view than maybe an overall macro view that the two of you guys are talking. And volatility is up 34 cents to 21 and a quarter. So I just nibbled a little bit here, and I have some bids below 6,800 too, just because volatility hasn't upticked. So I was hoping for a little bit more of a flush out, so I nibbled small. And if we go down another 20 handles from here and volatility doesn't make a new highs, I'll step up my size to my normal size here. But I got a little bit just now. I didn't sell them this morning 2 times when I really thought I should have. One time I missed it, and another time
I did. I said it earlier.
Another time I wussed out. Yeah. I'll admit it. Maybe if I was home trading, I would have done it myself. But doing the show, it makes it a little bit harder.
Yeah, that's true.
Yeah, so I'm not really concerned too much about bonds.
That's my thing is like the flight to quality here, and the fact that they're not fading and markets are continuing to stay lower.
Yeah.
I think we will eventually see that little thing I'm talking about with this H contract. I think eventually we'll see serious backwardation if it gets scary.
I mean, you've had. I mean, I hate to use the word crash, but I mean, you've had a crash case scenario in silver. You've had a crash case scenario almost in gold. Silver, a lot more.
I mean, it was a crash. 30% one day is definitely a crash.
Yeah, definitely a crash.
Okay,
yeah. And nobody.
But also, any of these moves where they're like 10% lower in a single session would be considered a crash. Under, if this was 6 months ago, we would say silver crash. It's been crashing like every few days at this point.
Yeah. You do get used to volatility, and your thinking seems to change there. I do agree with you there.
And now I'm like, oh, silver's only down 6%. Huh, not terrible.
Yeah. Well,
but it's terrible. In fact,
it is. I'm looking at volatility 21.25 back down near the lows. Volatility last night got up to 21.65. I know it can go a lot further, in the overnight session than usually in the regular session. So you got to take it with a little bit of grain of salt. Everything is set up for a lot of volatility because you got expiration in the volatility products. Each option that's trading for 50 cents becomes 100 delta. Every option is wrapped around the money is around 40 to 50 cents. You got E-mini S&Ps volatility expanding. You've got, remember we talked about it a moment ago, it was $41 on the expected move. It's now up to just about 48 or 49. So you definitely got volatility upticking, but you haven't had the futures upticking. So for me, I nibbled a little bit here, but cautiously optimistic.
Just to put some credit to, maybe the claim that we're seeing dispersion expand and index exposure is becoming less efficient. If that were the case, you'd see some things playing out like value outperforming growth, equal weight outperforming the market cap weighted indexes, industry and energy over semiconductors, just thinking about this from a sector rotation point. IVRs on the board right now, the Russell and the Dow have lower IVRs than the S&P and the NASDAQ. You look at the MAG 7 ETF, MAGS, MAGS. That thing looks terrible from a technical perspective now, whereas the Russell appears to be doing a consolidation just short of all-time highs. So the second half of February, the first week plus of March demands a little bit more caution. And so if you're not a believer in seasonality, all of the pieces of price action in the market right now are leaning in the direction of you would want to be more cautious anyhow. So Jamal, I know you and I are bulls around here. I feel like you, me, Nick, Mike are the ones who carry that banner. This is a good time to take a break. The NBA basketball All-Star weekend's over. The new format wasn't terrible.
It wasn't.
Believe it or not.
That's true.
It wasn't better than having Kevin Hart narrate the freaking game.
I know, right? Oh, Jesus Christ. I loosely watched some of it. It was actually not terrible. You're right.
Right. It was entertaining. Wembanyama really set the tone, it feels like, for people to care. But now we're getting into spring training for baseball. It feels like if I'm an equity market bull, I may be a little bit disinterested in directional longs, maybe until spring training ends. We'll have to see how this vol curve shifts, though. But right now, not liking what I'm seeing. Not really feeling so confident about buying the dip here on this Tuesday, right after a market holiday.
Well, again, the last thing I'll say is as scary as it's been, we're mostly talking about a lot of the tech stuff. I mean, I mentioned earlier Walmart, Costco. Costco is positive, Walmart's slightly positive. I'm seeing financials are mostly positive today. JP Morgan, Bank, Visa, Wells Fargo.
Apple's up $3.
Yeah, so it's like as scary
Apple
as
killed
some
the last
of these
2 days.
internals that we're talking about. Look, there is that. I don't know how the
Russell over
RSP is.
NASDAQ, I think, is the.
I know you basically have an IV to the RSP index. I don't know where it's trading right now, but I'm assuming that's doing all right, right?
Only off by 0.4 compared to the 0.7 for the market cap weighted S&P.
There you go.
Yeah, this is you're talking about the equal weighted ETF. Yeah.
Yes.
Yeah, I mean it's basically at new highs, right? 201. I know it got up to 205 or something like that, right?
I mean, as long as that's happening, as long as these things are happening, we're not crashing, right?
No, we're not. In longer term, right? And, Tony, if I'm a bull, having a period of several weeks or months where the NASDAQ goes sideways to lower while the smaller cap and mid cap names that aren't in tech catch up, it does relieve some of those, is this a bubble type of conversation that's going on, broadly speaking? And then that sets the table, maybe not in the next quarter or so, but maybe the second half of this year, early next, for the NASDAQ then to extend its gains as kind of the ship evens out and everyone says, NASDAQ isn't so overvalued anymore. But for me, if I'm going to be directional, like Russell and the Dow are the winners in this trade so far. They've held up better than the S&P or the NASDAQ. And if I'm going to be a bull, you have to go with the ones that are running and winning. So sorry, tech.
Yeah, I don't know. I hate it if you're a bull and you're going to rely on the Russell and the Dow. I mean, it's like a drowning man reaching for a straw. If that's what you're gonna
Sound like
count
Ilya.
on. Yeah, I mean, even the S&Ps, the NASDAQ, that's what's brought you here. That's where your eggs have to be in your basket. If you're of that mentality, in my opinion, and you got it on the cheap. I mean, relatively speaking. So that's the way I would be playing that. All right, my friend, you did pretty good. Basically unchanged from where I bought even the S&Ps. Can you be right for one time, Chris?
You'd have to ask my wife, but probably not.
Who picked out your house, you or her?
She did.
I'm not even going to touch that. Happy Valentine's Day to her. We're going to take a quick 90-second break and come back. Good job out of you, Chris. You'll be on more with my man Jamal later today. I appreciate you coming on. That was Let Me Explain with Chris. We'll be back in 90 seconds. You listen to Tasty Live. We got a market measure, capital allocation. Now's a good time to look at that. We'll be back in 90 seconds. Part 2 of our market measure.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Jamal, my friend, we are back. And before we get to this market measure sponsored by the SIBO, which you have been down to the floor many times in the last couple of months. I've only been down there once in the last year or so. How is the place? How are the boys?
It's cool. You know, it's a nice little, I think it's a perfect venue size for them now. It's the same as ever. I tell you, it's a trip, you know.
Yep.
It's the same as ever, seeing a lot of similar people. It's kind of a familiar feeling. It's like walking into your favorite bar, you know, a little bit, you know.
Sure.
It's good. Yeah, we do OTCL once a week, every Thursday on the SIBO floor.
Very nice. Even the S&Ps, I think you're going to have this chop around, and unfortunately, I did not sell out my even the S&Ps when they were about 5 or 7 handles higher than they than they are right now. 68.10 and change. Volatility hanging in there at 21.30. Nasdaq up, down 280. Russell down 23 or so. Bonds hanging in there at 118.01. Bitcoin down 1,800, making new lows, recent new lows at 66.7 and change. Ethereum down a full $100, which is almost a 5% move, twice as much as Bitcoin. Oil down 18 cents. Gold down 165 off of its lows by about 30 handles. And silver down 5 and change. It's a big 7% move. Let's go across the board here and see what's holding us up. Lilly and GE, Lilly up 16, GE up almost 7, Visa up 3 or 4, Apple hanging in there 360, trying to help the Nasdaq and the E-mini S&Ps. JP Morgan up 3, Love, which I mentioned a moment ago, 2. PDD, some of the Chinese stocks a little bit higher. The rest are pretty up very small. It's pretty broad-based sell-off so far. SanDisk down 30. Tesla down 15, AppLovin down 13, Google down almost 7.5, 8, Meta down around 6, IBM down around 5, Oracle down around 5. We're in no man's land here. Even the S&P is down 40, and volatility up 36 cents.
PDD, Chinese New Year's, Year of the Horse.
Year of the Horse, that's right. And we're supposed to be peaceful, harmony, and kindness.
For 10 days.
10 days. That's back to business as usual. Mean everybody and cantankerous and everything else. Sure. Why not? All right, let's take a look at this market measure sponsored by our friends at the SIBO.
How capital allocation impacts portfolio volatility puts. Part 2 of this morning. We did one with Strangles this morning, and this is part 2. Let's move to the next slide. Yeah. So we've demonstrated how capital changes can influence the portfolio volatility of one standard deviation, Strangles. Exiting at 21 days to expiration offers the best volatility control. Check out the options jive from this morning to learn more about that Strangle study. We did it this morning. It'll be up all over the place, I'm sure. So check it out. But this is kind of the conclusion that we arrived at. We started off with 25% of the portfolio as far as capital allocation, went up to 35%, and we did see improvement in average daily return, but we also saw changes in volatility as well. So you get bigger, see a little bit more of that.
Sure. This is the last slide that we did from our option jive early this morning, or one of the last slides from there, just showing you when you ramp up your size that the 50% winner, as you mentioned, does better, but the volatility does increase in there. So tread lightly, or at least know what you're going to get.
Let's move to the next slide. So we did a study. We always do a study. Now let's take a look at another popular strategy, short naked puts. Do we expect to see a similar result? We analyzed 20 Delta SPY puts and 45 DTE with positions that were either held to expiration, managed at 50% of the max profit, or we exit in 21 days. So those three scenarios. Let's move to the next slide. So when we exited at 21 DTE and maintained a similar level of volatility between strangles and puts, while other approaches saw an increase in volatility. So we're comparing, again, the study from this morning to what we're doing now with the puts. You can see in the strangle, a little bit less volatility, a little bit more daily volatility across the board, but in 21 DTE, stayed the same.
Yes, and in a rising market, right? So naked puts you would think would be even better on a volatility point, but not as much as you would think. A little bit surprising for me from the findings that we had.
Yeah, that's I mean, a couple of ticks on both of those, increase in volatility on the put, but 21 DTE, once again, we just talk about how that smooths out P&L, man. I mean, seeing it here right in front of you.
It's if you're not taking my word for it and you're not taking Jamal's word for it, then take a look at these studies, and really that's the way to go. So it's equally as important when you're putting on a trade as it is when you should roll or take off that trade. And that 21 days, if you're looking at your portfolio from not the greatest P&L that I can get, but being able to stay in the game with a volatility curve, then 21 days to expiration is the key to go. Next one, please.
Yeah, next slide. Thanks to the decade-long bull market, as you just mentioned a second ago, managing winners and puts boosted returns and outperformed other strategies in terms of profits. Meanwhile, exiting at 21 DTE proved to be the most effective in controlling volatility. So here it is once again. Again, you could see, I mean, they're basically similar daily return, but the average standard deviation of volatility is a whole lot less. You're not having to white knuckle it a whole lot, being worried about your position. I think that's the big key here.
Yeah, decade-long bull market. Does that scare you with the action that we're having today? Forget about the study for a moment. Decade-long bull market scares me just as much.
Stocks only go up, right? That's what I was told when I was a kid.
Well, that being said, I'm leaning a little bit long here. Even the S&P's hanging out at 6806. Meanwhile, exiting at 21 days proved to be the most effective in controlling volatility. This is what this whole segment is talking about, is controlling volatility. And even with a naked put into the longest bull market that we've seen in quite some time, still shows you 21 days. So,
well, and again, I mean, you have those positions. You're going to have these short puts, but you're going to have days like this, right? We're going to have or months like this sometimes. Like we just talked about these past 3 months, we've been in this tight range here, and there are times where you're like, you know what, I'm going to close this thing out because I'm just worried about what the market is doing. But I think being able to stick to your strategy, keeping capital at somewhat of a minimum, if you can, to some degree, not getting carried away, I think allows you not to make these emotional decisions. Let's move to the next slide. Next, let's examine how capital allocation impacts portfolio volatility. Within the same portfolio, we increase capital. Within the same portfolio, we increase committed capital usage from 25% to 35%. So it's the same thing we did on the strangles. Now we're doing it on the puts. Let's move to the next slide. Exiting at 21 DTE yielded the best results, once again, for maintaining volatility within a tight range. In contrast, holding positions to expiration and managing at 50% resulted in even higher volatility increases compared to using strangles. So this is similar to what we saw before, just a little bit higher now, way higher actually.
Yeah, way higher. But again, 21, that's your key. I mean, I think we're kind of beating a dead horse here about when looking at asset allocation. Even if you're increasing your size as volatility goes up, and you got volatility up around 50 cents right now to 21.40, even the S&P's hanging in there. This is a pretty, in just the overall market, I think a pretty pivotal point here between up and down, good and evil, depending on what side of the market you're on right now. I'm a little surprised that even the S&Ps are hanging in there the way they are. If you look at
in the area.
Yeah, if you look at the NASDAQ is selling off down around 300 here. Volatility hanging in there, 46. I haven't done anything with Miami S&P, so I'm at about 2 or 3 points on at this moment. Exiting at 21 yielded the best results for maintaining volatility within a tight range. I mean, that's the key here to this whole thing, and really what you should be looking at for all of your portfolios. If you're going to ramp up the size by going from 25% to 35%, that's a big uptick in the amount of buying power you're using. It sounds like a small number, but it's a big number when you put it to practical application.
And you just got to be more disciplined too. You got to have, got to be more mechanical. It's really what this is getting at.
Yep.
Let's move to the next slide.
Let's do it.
With more capital committed to the strategy, we observed a larger increase in both profitability and volatility by managing those winners. When we saw a similar slide to this at the beginning, and now we're seeing the same slide again, this time with just puts, and we've increased the capital allocation to 35%. Definitely on the 50% winner and the expiration, you've seen the volatility go way up.
Sure.
You see this, right?
Yep.
Whereas with the 21 DTE, not as much.
Yeah, 100%. Don't have too much to add there. They're really, when you're looking at this, you can wait for that 50% winner, but hard hold, man. 2% plus move in your average daily. That's not like, like it's okay, it's bad, and then it's okay. It's daily. The daily move. It's like hurting yourself. You know what I mean?
Yeah.
Hard.
It is. Let's move to the final takeaways here. In both strangle and put tests, exiting at 21 DTE stands out as the best approach to control volatility. Regardless of capital allocation levels, exiting at 21 DTE remains the most effective way to control volatility, while managing winners provides stronger returns in bull markets. So, again, I think just being mechanical, 21 days does seem to smooth out a lot of P&L. You have proof in the pudding here.
Yeah.
Your takeaway.
I closed half of my position up around 8 or 9 handles on the even S&Ps for those who are playing around. Volatility still bid up 35 cents to 21 and change. Even the S&Ps are down 35 or so. Going to keep a little runner, see what happens. But I really think today's market is going to be about nimble in tight ranges. That 10 handle move back and forth is going to be the kind of the key for today. Unless you get volatility contract by 40, 50 cents or expand by 40, 50 cents. I think that's the way you're going to go today. I think taking profits on futures quicker rather than later is going to be the key for today. Try not to be too much hero stuff today. Takeaways here, 21 days wins all. I could have told you that before we started this just from my own experience. I'm glad that the team took an option jive and a market measure to do this on a day where we've had movement in the market, and if you have a position on, and I know my own position, which is short volatility, has been swinging around greatly with the same type of movement. You got even the S&Ps down around 3.5. 50 cent move. Let's say you have 500 long deltas. Just throwing that out there. You should move around 250, $300. I'm moving $1,000 because of just volatility expanding the way it is, and hopefully, when it contracts, it'll do the same there. Let's just take a look at the market if we can before we get to Q and Glenn. Even the S&P is down 30 handles to 68.20. NASDAQ down 200 and change. Russell down 20 and the Dow down 160. Volatility up 30 cents. Really hasn't moved too much off of this number, 21.20 or so has been where we've been sitting for most of the morning. Bonds are up 6 ticks to just under 118. Bitcoin, which has been soft, is the only way of putting it, 67 and change. Ethereum, softer, down almost 4%, $81, although it was down almost 100. Oil down 50-ish cents. Gold down 150. Silver down 5, silver down twice as much as gold. The gold-silver ratio got up to around 67. It's just under that right now. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live. We got Q coming in here from the trade desk. We'll see what's going on there. And then we've got Glenn coming in too. We'll be back in 90 seconds. Even the S&P's down 20. We'll be back in 90 seconds. Yeah, Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Jamal, my friend, we are back. Even the S&Ps were back for a moment. Even the S&Ps are down just about 39 right now. They got up to about 68.20 and change, about 10 handles higher. Volatility keeps expanding there. I am out of all of my futures, only able to take 5 or 6 handle profit on some and about a 12-ish handle on the other. I think you're going to see new lows coming in 1 second, but some new lows are not to be made with this next man. Q. All right, brother.
Fellas, how's it going? I'm doing well.
How was your weekend? Can we just do one little small talk, then you can go, because I know the trade desk is probably busy.
Yeah, no, weekend was good. Had one of my friends in town from Dallas, so we got to hang out. That was nice. And then you know what my new obsession is the U.S. women's curling team. They are electric. I was watching them last night. They kind of got toasted by Italy. But, yeah, it's really good. It's really good.
Interesting.
They're great. They're great.
I thought the women's hockey was out of this. I mean, they're dominating. I mean, I think they're...
A lot of Wisconsin Badgers on that team.
Yeah. Really?
Yeah.
Oh, that's awesome. I think it's the first time they've shut out every team they've played, like 5-0, 5-0, 6-0, and 5-0 or something like that. I mean, they've been just dominating. Now they set up with Canada.
Yeah, Canada gold medal game, right?
Yeah, which would be fun, which would be great.
But not to take away from curling. The women's curling.
Not to take away from curling.
Women's curling.
I assume the Corey is on there too, right? Like she's...
Yes, Corey Teese or Teese, whatever, Yeah, she's great. There's 2 sisters on the team. They're also great. There's this other girl. They're amazing. They did get toasted by Italy last night, though. It was tough. But, I mean, the home team, it's tough when you're playing in Italy.
Are we third in the medals so far? Third?
I honestly don't know.
I know Norway's won.
I think Norway's won, right?
I don't know.
Yeah, wait, you know what I really dislike is, like, the ice skating short track? Because, like, they're all, like, crashing into each other all the time. Like, half the time they're crashing into each other. But, like, the 5,000 meter, I think it is relay on the short track, that's super cool. They're, like, switching in and out, pushing each other. It's crazy. It's great. Winter Olympics has been pretty fun.
Winter Olympics has been pretty fun. 30 total medals. Italy is 2. Does Italy typically do well in the Winter Olympics, or is it just now? Like, doesn't this always happen?
I think they probably, like, might have a lot of people.
I don't know what happens, but, like the host team on any Olympics always shows up like in the top 3, at least for like, for in the beginnings.
Mm-hmm. Yeah, right. They got to. Yeah. They got to.
Home field advantage.
We're 3.
Exactly. Yeah. And then also some business today, fellas.
Sure.
Another Tuesday, another demo. So if you would like to sign up, it's on Portfolio Margin, which I'll go over in a little bit. But if you would like to sign up, we got tastytrade.com/webinars, tastytrade.com/demo. And then for Nikki, even though he is not here, tastytrade.com/demos with an S. And then so we're going to be going over Portfolio Margin. We've got Head of Risk, Peter Klink, Head of Portfolio Margin, joining us on the demo as well. And he's been doing this for about like 45 years, something like that.
I think he invented risk.
He did all, like actually though, he invented like the risk system. Yeah, he invented the risk system that I think like all the retail brokerage firms use. And so, yeah, feel free to sign up for that. We're going to be going over like what portfolio margin is and like the different benefits of it, because it's a risk-based system for margin requirements rather than a rules-based system like Reg T is, like 50, 25% for maintenance, right, for Reg T. Then for portfolio margin, you get a lot more leverage. Of course, that increases the risk as well, so make sure to keep that in mind. But you can really like seize the moment, seize the opportunities better when it comes to portfolio margin.
Yeah,
and they brought him along really well.
Yes, and Pete doesn't look like much, but man, he's got a lot going on upstairs. He really does.
He's gifted.
Yep.
He's gifted.
No, all kidding aside, if I had a question on risk, and I do at times,
he's got to go to.
Got to go to Pete.
Yeah.
He's freaking best.
Well, see,
even when I was a floor trader, I would go to Pete back in the day.
Like, so we'll have like some of the like newer hires ask him margin questions, and then they wind up more confused after the fact. So I will also be there as a translator too, because he operates very quickly. Because he's been doing this for so long. He's like, oh, it's easy. You click here, it's easy, done. Here's your span scenarios, done.
Yeah, I mean, it's sometimes hard when you have a lot of information and you're further on in your career to talk to younger people. I always say this, like, I'm not the best person to talk to somebody about new trading options. I would think Dr. Jim is the best at that. I am definitely more for an intermediate type person. It's kind of how it is sometimes.
Yeah, and so that's what I'm there for, to sort of bridge that gap between the expert and the someone. I mean, you could like be experienced with options, but even if you're newer to portfolio margin, this could be something worth attending. And then also, if you don't have an account here, you can attend as well.
Sure. And just to not say this one more time though, but if you go and watch this demo, you will learn how to use all the features that any risk manager is going to look at and tell you your own risk. And you can synthetically put those positions in to know how your account is going to be stress test. It's almost as important or even more important to know what's going to happen to your account on these types of stress levels than it is to prepare for it, right?
Yeah,
I mean,
exactly. Yeah, and so like we give all the tools to the customers that our own risk managers use as well, which is something I think is very unique and also very beneficial to the customer because, you know, we want you to maintain your risk just as much as you do. So.
Very good. All right, let's go, my friend. We'll get you out of here. You get back to the desk, answer some questions. As even the S&Ps flirt with 6,800
we
even.
Be in trouble. We lost.
Let's go. We've got top 20 symbols going through the system, and their IVR number 1. We've got Tesla with a 9, Microsoft 40, Amazon 30, NVIDIA 36, SLV 59, Micron 82, GLD 59, IBIT 67, Netflix 40, Google 26, TQQQ 41, TLT 18, AMD 46, Palantir 27, Meta 25, DDOG 55, Spotify 28, SNDK 82, Oracle 103, and SoFi 22.
Good job out of the team. Good job out of you. Better job out of our viewers for trading stuff that, at least from the names up there, that have nice, tight liquid markets.
Mm-hmm.
And most of them had high implied volatility. I saw Microsoft up there. I think that's one that has a little bit lower implied volatility. Probably looking to put on something with like catch a falling knife type strategy. Apple up $3 and change. Surprising me. I'm going to let you go, my friend, and get back to the trade desk. Give me the S&Ps right at 68,000. Who is our next victim? My man, Mr. Valentine himself. What's up, G?
Some say.
How's it going? Saw a beautiful picture of you and I believe the GF. Was it your sister?
Whoever it was, it can't undo it now.
Yeah, no. Oh, on Instagram.
Yeah.
That was,
you posted it.
I don't know where your sources are. You could have gotten a lot of pics. I was stomping around this weekend, and I told various people various things I was doing. Oh. So it was one of those
playing pickleball.
Those gotcha. It was one of those gotchas where like if you tell me where you got the information, I know who the leak was. Mm-hmm. But in this case, I did it to myself. Yeah, that was the girlfriend. It was not with her. That was a picture from the past.
Oh.
But semi-obligatory.
But it's one of those things, it's funny you mentioned this.
He's setting the groundwork.
Man, I noticed a lot of people making those type of posts this weekend.
It's worth a shot. I'm married 21 years.
Everybody had to make the post. Everybody had to make the post, it seems.
But yeah, she was MIA in MIA this past weekend. So I had custody and all to
himself. You got brownie points. You got game. Still water runs real deep. Hey, something that doesn't have any game right now, as foretold, even the S&P's making new lows, 67.94 down 55 or 56 handles. The Russell now equally as weak as the NASDAQ, and the Dow is the strongest of the group, down 290, which is a little over half a percentage point. Everything else is down 1 percentage point or more. Volatility flirting with highs up 50 cents to 21.44. Bonds are up 9 ticks to 118.02. Bitcoin is not the Bitcoin of old, 66.7, trading near its lows. Oil down 78 cents. Gold down 175. It's just asset selling across the board here on the overall market.
Yeah, man, a little pump fake there.
Pump fake.
Had us for a little bit.
At least, yeah.
So I know you're here to talk about FX. So tell me, why isn't the dollar expanding more than you would think it would against some of these currencies?
You're absolutely right. Fortunately, today we are seeing a pretty, as per recent movements, seeing a pretty strong move to the dollar's favor today. But you're absolutely right that anecdotally, recently it's felt a lot more stuck. And I feel like the backdrop is one, the U.S. Treasuries, the bond landscape has been pretty stuck as well. And that's a key driver for the U.S. dollar. And then there's just kind of the sentiment in the back of global traders' minds that we really haven't been able to shake for dollar bulls, in that, what is looming that we don't know from this administration that has been seen on numerous occasions pushing for at least an openness to weaker dollar policy. So a kind of invisible man in the room there that hasn't let this dollar market go as perhaps elastically as it has previously. But today's a pretty good example of classic behavior, historic correlations picking back up, where we have kind of some risk-off sentiment in equities, a strong move there, and an equally strong move in the dollar against a basket of currencies. Right now, it's driven primarily by the European currencies. It helps if you're a British pound trader today. That's the mover of the morning.
Down 1%, right?
Yep. Had some
decent sized move.
Had some unemployment data out of the UK around 2 a.m. our time, where the unemployment rate spiked when it was supposed to stay flat, and that leading to some pound weakness, combined with some broad dollar strength, has put that pair back to around 135 in the spot market, which we haven't seen since the third week of January. So some almost month-long lows there for the pound US dollar. Another interesting nuance for markets this week is the event of the Lunar New Year taking place.
Year of the horse.
Year of the fire horse.
Woo! Don't ever do that again. Whether it's Valentine's Day or not. Go ahead.
Just wait for Year of the Cat.
Okay.
You told me not to do that one. So
I did.
I learn every once in a while. But looking at this dollar yen market and other Asian currencies, and even
the yen's recently caught a bit. I mean, I know it's down almost 1% or 0.75% now.
100%, yeah. Last week, 3% gain for the yen against the US dollar, and a widespread gain against the euro, pound, other currencies as well. But if we're looking just at, that move was to start the week primarily from the Sunday open to Wednesday. When we look from Wednesday on, we've been stuck between 153 and 154 in the spot market, which is a pretty tight range for, that's about 100 pip range. We've seen in, days and months past, the average movement, daily price change for this market to be around 80, 90 pips. So the fact that we've been stuck in this range, near a bottom might be supportive for dollar bulls there that are looking to fill this recent range. A drop of 3% from 158. Perhaps now we're bottoming in and we can get some chop more to the dollar's favor. But more importantly, just calling out that, these markets and while Forex trades 24/5, the Asian session might be a little bit thinner in liquidity. Yep. Just something to keep an eye on for this week. As we've woken up to some pretty big moves recently as a result of the Asian session, Asian traders taking U.S. markets and global currency markets in a very different direction than we've seen in the U.S. session. I mean, perhaps it was Europe today, but if we think about the pre-market and market open here, just in U.S. equities alone, U.S. traders taking things in a very different direction compared to pre-market, right? So just something to call out as you're looking across the board here. But in terms of economic calendar, what do we got? We've got UK inflation tomorrow, so already a big mover today. I wouldn't have put that much onus on inflation reading out of the UK, but seeing the move we got from the unemployment data this morning, I'm now much more interested in tomorrow morning's move there. Inflation expected to drop to 3%. So if we get sticky inflation, then that starts to be a little interesting. If we get that below expectations, we'll see how the pound reacts. And then from a U.S. perspective, we've got FOMC minutes tomorrow. I'm not sure.
If there'll be anything. Right. I don't know. Who knows?
You're more on that type of guy. What do you think about the FOMC meeting?
I mean, I don't know about that, but I don't know. I don't expect it to move much. I'm aware of it, but I don't know. I only pay attention to when it actually moves markets. I feel like the last couple of times it hasn't.
So you mentioned the dollar catching a little bit of a bid. Now I'm going to mention gold to you. Gold down 157. Silver down big also. So gold and silver, usually when the dollar gets stronger, gold and silver, or gold at least, gets weaker. So that correlation is holding true. It hadn't, I mean, it hadn't had as big a profound effect on gold as it has as of late. Do you see anything with the currencies that you can do there? Is there anything like an Australian dollar type play?
You're absolutely right. Okay. Yeah, so that Australian dollar, when you're looking at...
I was trying to get to the Australian dollar. I just didn't know how I was going to weave the
you got
web. I got there eventually. Perfect. It's like well you done. Posting that picture. Right, you'll get it eventually. Yes.
No, you're absolutely right. That
you'll get it eventually unless she watches this.
He'll definitely get it eventually.
I get in trouble when she does. But among major U.S. dollar currencies, you're absolutely right. That Australian dollar showing the highest correlation to metals and as well to risk aversion in the U.S. equity market as well. So that playing through, we're down about 0.5% today in that.
The Australian dollar's been hanging in there relative to everything else, hasn't it? I mean, it's been the strongest.
You're absolutely right. Yeah,
it's definitely been one of the strongest.
It hit 3-year highs last week, and so cooling off from there. We'll see if it's just a stutter or if we can start to fill some of this range from those 2023 highs. And you're also right that the commodities U.S. dollar relationship has been very interesting as we've seen such a strengthening of metals. But yeah, you start to get on days like this where I would look even further from just gold and silver to see, historically this has an inverse relationship with the U.S. dollar, what's going on. But it really only takes hold when we have real broad-based commodity pressures that are priced in U.S. dollars and U.S. dollar strength, where you start to see that correlation start to pick up again, that natural inverse relationship based on the pricing. But as we've seen with global traders and central banks being key drivers of the metals markets, that doesn't necessarily, move dollar markets from an intraday perspective as it has in years past.
What's the most interesting pair for you right now?
Where
are the biggest players? Forget about your own opinion. Where are the biggest players? Where's the most volume that you see that might be unusual that typically isn't the leader? Or is it the one that's always the leader?
Yeah, always the leader. Euro dollar, we continue to see a ton of people look no further than that. We're starting to get better ranges there and, back and forth price movement there. But we're seeing an uptick in that British pound participation as well. Even last week, usually you don't see as much because of the difference in leverage, difference in margin requirement. That British pound held to a higher margin requirement. And so most traders thinking you get most of the exposure through that euro dollar market, but that one picking up. And from a price action perspective, what continues to be most interesting for me from a long dollar perspective is that dollar Swiss franc that's really been pinned still below 0.78, which we hadn't hit since 2011 on the way down, and that's become the new normal. So as we see this euro dollar, start to sink towards 118 again, we're seeing that U.S. dollar Swiss franc pop a little bit in terms of magnitude. It would be, it wouldn't be surprising if we saw more chop in the euro dollar, those ranges holding tight, and a little bit more elasticity in that dollar Swiss franc market if you're looking for bigger moves. Again, that Australian dollar continues to be interesting to me because it fundamentally has been on a huge upswing throughout January and stuttering here in February. So this one, when we get in lower volatility environments, we've seen tend to be more mean reverting. But of course, now we have, the metals taking a greater part in that, lifting that currency. So it'll be really interesting to see if we fill this range. And just the risk sentiment dynamic, we've seen, days like today where you get this historic correlation between U.S. equities and U.S. dollar start to strengthen again, and you think, okay, this is something I can at least psychologically wrap my head around, and then it ends up being a one-day occurrence, and we get a rip and resumption in the U.S. equity markets, and the dollar really left to its own devices, which is harder to gauge. So if the equity picture this week ends up being sustained risk off, then we'd start to look for some new price levels in these dollar markets to the upside.
So I just tried to look at the equity and bond market, which I trade as opposed to the FX, which I don't actively trade as much. And I looked at, because since you mentioned the bonds, and I looked at the bonds, last time they were at this level was closer to October of last year. And then I just looked at the euro, and I just looked at the pound, and the last time they were at these levels was closer to October too. It's really amazing how everything just kind of moves cyclically with each other. I was trying to look for something that was out of whack, like maybe the euro was hanging in there more, or the pound was hanging in there more, because the pound is down pretty good today versus the euro at least. And there was really nothing there from a reversion to the mean type trade that I was looking for. So it almost looks like everything is status quo. Go ahead.
Exactly. Sorry. You're right. But what was interesting when you bring up those kind of correlations, I ran this last week as, we had some rate sensitivity off of our non-farm numbers, CPI. And the thing that stuck out was the US dollar, Japanese yen not behaving as much, not relying as much on these movements in the 10-year specifically. I plotted that 3-month correlation, and that was at its lows around positive. I think that was with you, Jamal, right? With you and Mike. And so that's interesting. I think there's too much risk to try and, put on an actual pairs trade between U.S. Government debt and the yen directly. But it is interesting that historically has been a much higher correlation, but right now we're seeing a much more fundamental Japanese yen picture play through. So whether that has its time is up and we start to get a resumption in those correlations, I know Chris Vecchio will tell you we're at near some inflection point in the bonds market. So I defer to him on what that call is necessarily. But if that starts to get more interesting, maybe we see this dollar-yen market get more interesting once again through
Chris
some
Vecchio.
liquidity.
I've been saying it all morning, Glenn. I've been saying it all morning.
Somebody wants some love from you.
Apologies.
I've been saying it all morning. We're at an inflection point.
As the great Jamal Chandler has said time and time again.
Now, this is why I'm long dollar in the Tasty FX account for a day like this. Obviously, it doesn't help in the regular equity portfolio, but the Tasty FX account is working today. It's humming because, again, I'm long Aussie dollar. I'm short Aussie dollar.
Nice.
And I'm long dollar CAD, long USD JPY, which is finally coming down some, or going up some, I should say. So, yeah, these are the plays that I have on for those reasons specifically, right? Like if we have a day where we're long dollar, which we haven't seen many of at all, this is what it looks like.
100%. And yeah, the important thing for perhaps a portfolio management in that regard is to just, even if you aren't trading these currencies, day in, day out, when you hear something where the dollar's at new lows and you're trading actively other markets, all good and well, but might be a good opportunity to put on, a smaller sized hedge, so you can wake up on a day like today and have something working for you passively when you're trying to actively manage the risk allocation of the rest of your portfolio.
It's one of the things I pay attention to a whole lot more. When you hear like, oh, this is the most shorts that we've seen in VIX in a while. This is the most shorts we've seen in the S&P 500 or dollars at 4 or 5 year lows. Like, interesting.
Exactly. Because you have such, evolving participation rates, and it's something that, I by no means have my head wrapped around, but especially, crypto Ryan Grace, monitoring a lot of these perp markets and starting to see some patterns in crypto futures when you get, some of these funding rates in the perpetual market that can kind of tell you where the positioning is.
Yeah.
We've seen that sentiment at extremes be correlated to market reversions as well.
Very good, my friend. And you know what? You actually, I know with even the S&P is down 42. It's not like it sounds like it caught a bid, but we are off of the lows of 67.91. Yep. We're up over 6,800, 68 and change. Volatility up 40 cents. Off of its highs of 21.65, which we have not gone over. It's the overnight session high, even though the NASDAQ made a new low, or even the S&P's made a new low, Russell made a new low. I don't think we're out of the woods yet for the overall market, but volatility is kind of saying that we might be near its highs there. So maybe we could be optimistic and catch a bid in this market. I would continue to watch volatility. And you know what else I would continue to do? Don't we have Liz and Jenny from the floor of the CBOE coming up after
as far as I know, yeah.
Yeah, we sure do. So continue watching Tasty Live here from the floor. You want to hear some noise, you'll be right in the SPX pit, right? That's where you do your show from also too, right?
Correct. Options Trading Concepts Live does a show every Thursday from there. And Liz and Jenny are the pioneers. They're the first ones from the Tasty that's doing it. So yeah.
Well, I just put my patent pending broken wing butterfly in SPX. That usually marks the low in the market. So we'll see if it happens again today. We're going to take, you have something to say?
I was just wondering, at the floor, are you allowed to have a kind of golf quiet, please? When they start to get
can you do that? Like that? You should try that.
Here.
You should try that. You should get a quiet sign.
You know what's funny though? I think they do get a little annoyed because whether it's us or anybody filming, they have to put the like back when he was there, you always had a jacket on.
Okay.
Now you can take a jacket off. Your trading jacket, but they have to put them on once they start filming. So
that's
they always say, jackets. Like they got to put their jackets on.
That's pretty good. I didn't know that.
Yeah.
No, that's good.
They probably tolerate it for
look professional,
Jenny,
you guys.
When you guys come in, they're like, mm-hmm.
Exactly.
Good job.
Yeah, no, they do it for the ladies. I'm sure that. Oh yeah, put our jackets on. Come on.
How do I look?
For me and Mike, they don't.
Good job out of you. Good job out of you. So good job at the market. We're going to take a quick 90-second break. Stay nimble out there. We'll be back in 90 seconds. Liz and Jenny next for the floor of the SIBO. Peace.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
everybody, and welcome to the Mardi Gras edition of the Liz and Jenny Show.
Jenny informed me it was Mardi Gras today. I actually did not know.
Why do you think I'm in bright pink?
I've seen you in bright pink. I'm not on Mardi Gras day.
I looked for purple. Couldn't find any. Do you own any purple?
Yeah, I know lots of purple.
You could have wore your purple today, Liz.
Wait, is Mardi Gras just purple and pink? No, it's any bright color, right?
You fit right in.
Like you could wear green.
Gold, you fit right in. The only thing we're missing are the beads. I didn't have any. Did you?
You can't bring those to the trading floor, Jenny.
Yeah, probably better.
You can't bring those to the trading floor. I'm going to say that right now, and if you would have had beads on, I would have taken them off of you.
Anyway, it is Tuesday, and it is kind of a wild Tuesday. So right now, SPOOs are only down 29, which I didn't think I'd see that. That's a rally, because when we walked in the door, they were down 50. I mean, they were down 50 a few minutes ago. So there's a little rally happening, only down 27 right now. Get your rally cap on.
I mean, that is kind of crazy that they're only down 27.
I know. It was a strange opening. So before the open, market was down 40, down 20. Then right after the open, unchanged.
We went green for a brief moment in time.
She said it. I didn't believe her. I was busy trying to get into my platform on the train, and she said we were green. I never saw it.
We were green for like a second. It went up 1, and then it went. I was like, now we're back down 50 cents. But then it plummeted from there. So it's been kind of a wild day. Let's take a look at the VIX.
So yeah, I've got the VIX pulled up here. We have the VIX up only 59 cents on a day where SPOOs were down 50. Would you think we'd be up more than 2%?
Yeah, but maybe, just maybe, we're done crashing.
Or what?
We're done crashing. If the VIX is only up 50 cents, 2%, maybe the crash is over.
I just saw a handful of violations walk by. Can you please? I'd like to join the floor official team. I saw a handful of violations walk by.
What was it, Waters?
No jackets.
Oh, no.
Hey, if we've got to wear these jackets, they've got to wear these jackets.
Violation.
Oh, man. Anyway, back to the platform. Here's the VIX.
Jeff, Frank, the Great, this is directly for you. Your nephew is in rare form today. He looks like he's solemnly up to no good. He looks like he's in Harry Potter. He has like little grin on his face, and I was like, he is solemnly up to no good today.
And I'm going to say happy belated birthday to Frank the Great. For those of you who are new, Frank the Great mans our chat. So if you're on YouTube and you're posting in the chat, Frank the Great is, we love him. He is an old floor trader who is manning our chat. You know, before we knew who was manning the chat, we knew it was an old floor trader.
Oh, heck yeah, we did. Which is pretty, I mean, honestly, Frank, I don't know, I don't mean to insult you. I originally thought it was Tony Batista.
Funny. So it was his birthday yesterday.
Friday.
Yesterday.
I thought it was the same day as Vanetta's.
Yesterday. So, okay, I don't know.
Frank, when was your birthday?
Wait, was your uncle's birthday yesterday? Yeah. Okay, so here, my calendar says...
Was it yesterday or Friday? It was Friday. It was Friday. We heard it from Jeff.
I don't know.
We said happy birthday to him on Friday. Don't you remember this?
I know, but
is it gone?
I thought it was the weekend. I thought
No, same day as Vanetta's.
Well, my calendar, on my personal calendar, has Frank's birthday being yesterday and Vanetta's yesterday, and I texted Vanetta yesterday, and I sent Frank an email yesterday. My personal calendar says Frank and Vanetta were yesterday.
Can we confirm this?
I'm telling you, his little cousin, don't put him on the spot. He doesn't.
It's his nephew, not his cousin.
His little nephew, don't put him on the spot. He's not sure.
We don't
Frank, send us a message. Was your birthday yesterday? Was it Friday? I've got yesterday on my calendar. I'm going to have to update it.
You know what's funny is I just went into YouTube to see if I could read the comments to see when his birthday is.
And when I texted Vanetta yesterday and
I must have had a violation because they turned my comments off and I can no longer read comments. Yeah. I got banned.
Funny. That's funny.
Oh! Jenny was right. I'm wrong. Frank, I apologize. It was yesterday.
And yesterday when I texted Vanetta happy birthday, she didn't write back, you're 2 days late.
Who would do that? You. I'm texting you on March 5th.
Yeah, wait. Oh, you can. I'll be gone on 3/3. I'm going to silence my phone. Suppose they're only down 20. Okay, I'm jumping back into the platform. Here we go. VIX is still keeping its wings up 50 cents. The high today was, let me zoom in because let's zoom in so older people can see this. That means me. What do we have here? High today was 22.96, so almost 23.
And it was probably when we were down 50, is my guess.
So when I said older people who can't see things,
what's the low?
The low today, right now, or 2101. So I took my daughter on a tour. We went on a tour of Northwestern yesterday, and on the tour, they put up this slide. They put up a slide on the board for everyone to see of all the courses in the area in the school she was interested in. It was, I couldn't read one thing on the board. Not one thing on the board.
I didn't know you were going to tell me about a class.
No, I couldn't read one thing. I just sat there and stared, and I was like,
these look great.
Yep, looks good. Couldn't read one thing. And I'm sure none of the parents could.
No, you can't.
It was insane.
Okay, but you haven't, and I do love you for this, but anytime you want me to see something on your phone, you go like this to me. And I have to go like
and then
this.
Liz goes like this. Yeah. Well, you're right. Well, no, because if you would wear glasses, you could look at it close.
Then you got to go close. No, I have to go like this.
You could. We digress. We're old. We're old. I'm 2 weeks away from 50.
I know.
And it's fine.
It's a big celebration. It's a big 5-0.
If this booze could turn around and this market would rally for the next 2 weeks leading up to my birthday, that would be a really good birthday gift.
I think.
We're getting there. All right. Back to the platform. I'm not going to get distracted.
I'm back.
She's
with
back
the
on the chat.
And somebody said we have to do 16 push-ups to redeem ourselves.
16 push-ups?
Yeah.
That's easy. We both could do that.
Yeah.
I do push-ups every night. Liz does them like one-handed.
I do.
One-armed. All right. Take a look at this booze. I'm on a one-day chart, so you can see the range. And we did have
a
high of 68.45, so 20 points higher. So we were green. We really were green. I didn't believe you. We were green today. This was only down 11. Did you get an SPX trade on at 9 o'clock today?
No, I did not, because I didn't even pay for my train ticket today.
She's lucky she wasn't taken by the Metro Police.
The Metro Police could have taken me. I got a new phone, and my Venture app was not working. My password wasn't working, and then I got locked out of it. Jenny did offer to buy me a ticket, but she didn't.
No, okay. I'm not going off the platform. We're sticking to this. We're staying on the platform. We're not going to be all over the place today. We are staying on the platform. Here we are at SPX. We have some SPX ideas today.
Yes, we do. We're in the SPX pit, so we figured we're going to trade SPX. But you know what, Jenny? Today's a day where we're not looking at the 0 DTs. We're going to look at something a little farther out.
No,
our plans might be thwarted now that we're only down 11.
I know. This trade was a perfect setup when spoos were down 50.
Yes, and I will say, this is what I love about doing a live show, is that everybody asks, and I'm saying everybody, meaning our friends from when we were in Mexico kept asking how long it takes for us to prep the show. If we were to prep it, it would be different now than it was 20 minutes ago.
It's very hard.
Live show is a moving market.
So, and we've got our amazing production crew here. They know live shows are tricky. When we started filming 15, 16 years ago, our producer wanted everything the day before. We want your slides the day before. We want this the day before. We want your trade the day before. Guess what? The trade we planned at 9 o'clock doesn't make sense right now. No. It's a good thing we know.
20 minutes ago it made sense. 20 minutes ago. So yesterday it would have been completely different.
So, okay. The trade we had in SPX 20 minutes ago doesn't fit right now. It's a good thing we know what we're doing. It's a good thing we've been trading for 35 years. We can come up with something that might make sense in this market.
Correct. All right, Liz. Let's go into we want to go 45-day. Forget about this. We've got a dot here. That means we've got a position in the 2-day. This is that good old wide butterfly that we paid 20 cents for. I will tell you the exact price we paid for that butterfly. We paid trade price 30 cents.
30 cents. And right now, if we were to get out of it,
35 cents.
45 cents. I don't think, and it's going to be really ugly if this butterfly comes in the next 2 days. So I'm going to actually, what do we pay for it?
We got this from the unusual activity report.
I know. Well, it never came in. It never really came in. But
no, but butterflies don't come in until the end.
No, Liz, we're 200 points away from it. If we paid this morning, maybe we could have got a little bit of money out of this.
And you've got wide. I mean, you got 3 markets that are.
What did we pay for it? 25.
We paid 30 cents.
I'm just going to put in an order to close it for. Darn! This morning we could have got out of this.
Maybe. I mean, honestly, this is. I appreciate your enthusiasm, but if this stays on, it stays on. If it comes off, it comes off.
I'm just going to put in 45 cents. Or you think like this is one of those cases where I close it for 45 cents.
You're not going to make it to the floor if this thing bends.
If we're actually at 6,600 on Friday, or no, this isn't even Friday. When's 2 days? It's the AM. It's the AM settlement. So this is expiration week.
Yeah. Yes.
Yes.
Yeah.
Yes. I'm going to show something. I'm going to show something that we didn't plan on showing.
Those are only down 3.
I'm going to show something that we didn't plan on showing, but people have asked me. I am getting a lot of emails since my in-laws have given me some money to manage, and I don't want to have their money really at risk. So I'm just doing very basic trades that are kind of risk-free. I'm going to show one of them because they have one of theirs that will be coming off this week.
Okay. We're not going to do SPX?
Yeah. Well, I'm doing the box, the SPX box.
Oh, gotcha.
So okay. Do you want to just since we're in SPX and we're not down 50 anymore?
We can show the box.
Let's show the box because it's topical. They have a box which I put on a few months ago. I put it on in December, and it was a February box. It's a risk-free interest rate trade.
Yes.
So if I put the February box on in December, it was a couple months out. So I need to. Their box is coming off this week. I need to put on a new box in April, May.
Yes.
And it's just something I do with a big bulk of their money. Actually, I'm doing it with like 80% of their money, these boxes.
Because it's interest rates.
So let's go out. Where do we want to go? April.
Okay, I just Googled this because I'm on the internet, so I figured. So a box trade. I'm just going to read what it says, okay?
Yeah,
so to not scare the children.
I'd love to.
A box trade or box spread in options is an advanced market-neutral strategy that combines a bull call spread and a bear put spread with identical strike prices and expiration dates to create a synthetic loan or risk-free investment.
Risk-free investment.
Okay? It locks in a predetermined profit based on the width of the strikes, making it popular for cash management or borrowing. It carries risks related to early assignment. Okay.
So I just want to see. I just want to price it out in May and see what it is. How much money they'd be getting.
So what I find fun about a box is that people price it differently. And when I had TP on, he prices it. He could have written that AI description.
He probably did.
I do combo. In my mind, it's easier for me to understand the combo than the call spread and the put spread.
I put on call spread, put spread.
You call spread, put spread. I'm combo. Because the combo is buying stock and selling stock. So, you're buying at one level, you're selling it at the next. And whatever you get in the middle is a lock-in.
Well, and I will say, you have been putting on boxes
for a long time. Yeah.
And it's again, we can't say, it's risk-free. And I'll walk through why, but all options carry risk. But this is a way that I feel comfortable.
Mine is early assignment.
Yeah. I mean,
but you
there
can't
is
get
no.
it.
You can't get an SPX. There is.
If you did a box on something other than SPX.
So I'm gonna spruce up 10.
They are, and they're percolating back here.
Yeah, it's time for the percolator. Do your beep up.
Beep up. They are, aren't they?
Oh my gosh! All right, so I went all the way to May, 86 days.
Okay.
Let's take a look. So it's pretty easy.
Get round numbers because it's easier.
6,700.
So yeah, and down at the bottom, she's doing the call spread first. I do the combo, meaning sell the put, buy the call, because I know I'm going to buy it at 67.
Well, you know we're going to be coming back here anyway.
We know we're coming back. I'm a little bit more efficient.
I scroll all the way up and finish that call spread, and then flip to the puts, and then scroll back down. Liz likes to do things fast.
But let's break this down from that perspective too. You're long the stock. This is you synthetically getting long SPX at 6,700.
Okay, 6,700 plus this debit. So really, you're getting long where it is, but
there's zero extrinsic value. You're washing extrinsic value. You're buying one at the same price that you're selling the other extrinsic value wise. So you're washing extrinsic value.
So this is 6,700 to keep things simple, and we're going to use round numbers. I can go to $7,000, $300 wide, or $7,100, $4,100 wide.
Well, let's go up. I like to go a little bit farther out of the money. So where are you?
See, so yeah, like 7,000.
Great.
So then 7,000, I'm going to do the opposite. I'm going to complete the call spread and buy the put spread. So basically, I bought the 6,700 7,000 call spread, and I bought that call spread. You can see, bought the 6,700 7,000 call spread, and then bought the 7,000 6,700 put spread. There's the box.
Long combo, short combo.
Yeah, however you want to look at it. $300 wide, and this is trading $297.10. So
just hit the lock button so it doesn't bounce around.
Yeah, I did. I hit the lock button.
Okay.
It's trading $297.10. It's $300 wide. At expiration, this is going to be worth $300.
No matter what you do, it's worth $300.
No matter, right. So it's worth $300 at expiration. So what do we have here? $297.10. They're going to make $290 on this.
Yes, using $29,715. The width minus what you're collecting.
So sometimes they look better and sometimes they look worse depending on interest rates. That's just how it goes.
Yeah, and this is for 86 days. So that's honestly, there is really no gaming of the system. If you extrapolate this out, you're getting the interest rate for 86 days. If you want to see it a little bit more accurate, you can take a box and shift it a year.
Yeah.
And you'll get more. Like if you did this exact box, if you take it and go farther out in time, if you just hit that button and go out in time. Where's the time button? There you go. You were keeping the same strikes.
So
you gotta unlock it, though.
The further out you go, the more money you'll get.
Yeah.
296.80, 296.25, 295.85. The further out you go, the more you get.
Yes. The less debit you pay is the maximum profit. Your maximum profit keeps changing as you do that.
So where was I? 290. Where was I? May.
Yeah, you were 86 days.
297.05. So again, these markets are a little wide. They bounce around. I'll put in a price. Like you kind of have to.
Tony from Mexico taught me that. You can let it come to you a little bit.
Right. You kind of have to play with it a little bit. Like, let it work. Put in your price. Let it work. If I think I should be getting, $300 on this 72-day box, you can let it work. If you're not getting filled, move it up a nickel. It's a lot of money if using $29,000 to make $300. But then this is money that's just risk-free. So they're making that little bit of money risk-free.
Yes, and there are other ways to do this. There are interest rate products that'll do this for you, but if you understand what's happening, that's what's happening here. It's interest rates.
They're better when interest rates are higher.
But interest rates are better when interest rates are higher. It's the same concept.
Yeah,
they follow along.
Right.
There is no real gaming of the system.
Right. So for people who have asked what are some of the things I'm doing with my in-laws account, I'm doing this with a lot of their money because I don't want to, I'm only using probably 20% of their money in actual riskier positions.
Frank the Great's biggest fill on the trading floor was a 26,000 lot box for an institutional customer, and he crossed half of it. Just a little FYI.
Thank you, Frank. Thank you, Frank, for that information.
It was his biggest day on the trading floor. I'm saying it because I was wrong on your birthday, Frank, and I apologize.
I'm going to go, here's the 2-year, okay? I'm just looking at the 2-year $2YY, go into this chart. It doesn't look good, right? It's not paying, it's getting lower and lower and lower and lower, so we're going to get less and less and less for those boxes. When interest rates are higher, that makes more sense. Makes more sense, and it's easier for me to say to my in-laws, I'm putting in these boxes and you're just going to get this amount of money in this amount of time. Better when interest rates are higher. I don't want interest rates to get so low that that's not a viable option for me because I just like putting their money in those boxes.
Yeah.
Yeah.
I mean, like I said, you can go T-bill, you can go BOXX. There are lots of things that you can do, especially on the Tasty platform. They have lots of them.
So to answer, they loved it. They loved it. They loved the box.
It's somebody's birthday.
Okay, so that's just to answer a question on one thing I do that. But again, if interest rates are too low, it's not going to be a viable option for me anymore.
Yes.
They're not going to be making enough money.
No.
And then I just don't want to I don't like to have people over my head saying, how much money am I making? How much money am I making?
That's the actual voices they use.
How much money am I making? So I don't like to have too much at risk in their account.
Okay, Spoo's up 11.
Yeah. Okay, Spoo's up 11. Now what? Now what for SPX?
Well, no.
45-day trade.
We can do the upside. It's down a lot, though.
It's tough. With the way the market is, and we're down to levels we saw, December, November.
I mean, honestly, you could skew an iron condor in SPX right now in 45 days.
You can. I would definitely. There's a couple of different ways to skew an iron condor. Let's take a look.
So go 45 days, which, well, actually, you're either going to go 58 days or 30 days.
I'm closing up. I have everything opened up here. Okay.
Let's go.
Let's go to the
30-day or 58-day. Because with SPX, I know we go with 0 DTEs. I would rather stick with the regular monthlies, but I don't want the AMs.
I don't want the AMs, so we'll go with the 31 days?
Well, no, you should go with the March 19th. Go with expiration.
Yeah, it's the March 20th. It's the 31 day. That's expiration.
Okay.
You know that same day of the AM settlement
is the same.
That's the Friday. So the 31 day, the March 20th, is March expiration. What would be your idea of skewing an SPX iron condor?
I don't know what Matthew's doing.
He's like
he's like Schneider.
Bob the Builder.
He's like Schneider. He's got his
Who's Schneider?
From Schneider from with that company where he was the he always had that. Come on, somebody help me out with Schneider.
Matthew doesn't know, but he does probably know Bob the Builder because that's probably, well, I don't know. Or what's the guy from the Handyman Show? Home Improvement.
I'm still thinking
Tim Allen. He's Tim Allen.
I'm going Schneider. Help me out here, chat.
Nobody knows. Okay, if I were to look at this and skew an SPX iron condor, I'd probably do a wider put spread and a narrower call spread.
I would too. $10, $5.
Sure. And do we shift it too? Closer put spread, further call spread? Every time the market's down, and I know SPOOs are up 8, but every time the market's down and we take risk to the upside in SPX, and I don't know if I can in this spot.
Schneider was from 1 day at a time.
Never saw it.
You never saw 1 day at a time?
Never saw it.
Oh, man.
No. Every time we take risk to the upside in SPX after down move, we lose on the upside risk.
Yeah.
We lose on that.
I mean, honestly, we wanted a downside. I'm just going to let the cat out of the bag when the SPOOs were down 40.
No, it's too late now.
We wanted a downside ratio spread. We're not going to do that anymore. So we don't need to retrofit something in that doesn't fit right now.
Well, I'll take a look. I'm going to take a look. I'm going to get closer on the put spread. So I'm going to say 30 delta put spread, $10 wide. 66, 65, 66, 55.
There you go.
There we go. And I'm going to go the expected move on the call spread. That's a 16 delta.
Okay.
71.25, 71.30.
310.
310. 315.
Yeah, that's not bad.
It doesn't look bad. Are you shocked that the 16 delta $5 ride call spread we got $1 for?
Yeah.
I am too. I'm totally shocked that we're going to get 25 cents.
Yeah. Ship it. Press that button, Jenny Andrews.
315. I think 315 is aggressive. I think 310.
Okay, hit it. Just hit mid-market. Let it come to us.
It's not going to come to us. Love that. All we have to do is say we're not going to get filled here, and then we get filled.
You get filled immediately.
So what we did was sell a $10 ride put spread, $5 ride call spread, collected 310.
310.
That's not bad.
What's nice about it is if we're getting burned to the upside, we have more than 50% the width that strikes.
Oh, yeah. We know if it gets into, I often think that. Let's say when I sell put spreads, in my mind, if they're out of the money and I sell these put spreads, if the stock gets into the middle of that put spread, they're going to trade for half the width of the spread. So if I sell a $15 wide put spread for $3, I know if it gets into the middle of that, it's trading for $7, then I'll probably close it and put on something else.
Yeah.
This is, what are you, shopping at a bakery?
You want to go to Twitter? I'm just keeping an eye on things for you.
Okay, let me go. Tap down on Twitter. Florida 7, Schneider on 1 day at a time.
Yep, thank you very much, Florida 7. You're the man.
As an adult, I never make a big deal out of my birthday like some people, the bat. But if you have my number, I expect a phone call.
Not a
late because we know Florida 7's birthday is November 2nd, right?
No, that's John Sinnott. He's November 3rd. We don't know Florida
November
3rd.
Birthday. No, I think Florida 7's birthday is in November. Isn't it?
Did he call you? Because I do not have that knowledge.
Is that John Sinnott who's November?
John Sinnott's November.
And we have another Twitter.
Scott Zomer.
Scott Zomer. I knew it. I knew we had one of our Twitter peeps.
But it was not Florida 7.
It's Scott Sommer, International Man of Mystery. Frank Walsh, how would y'all, and this is coming from Mr. Pillows on chat, and the YouTube chat, how would y'all manage SLV put broken wing butterfly that's deep in the money? Here, I got an idea. We've got a really...
We've got a put that's in the money too, so let's go manage that. No, but before we do that...
Uh-oh, sorry.
Did my Polish princess get some... How do you say it?
Punchkis.
That's how you say it?
Yeah.
P-A-C-K-I is punchki?
Punchki.
That's how you... so phonetically spelled.
Uh-huh.
Pakziki is punchki.
Yep.
Okay.
Yep. How would you... So
in the next pit when I went in there, they had a bunch of punchkis. I'll go get you one after the show.
So when my dad's father came over from Poland, his last name was Mozdrzierz. How would you pronounce that?
Say it again from the top.
That's why he changed it.
M-O-Z, Maz.
D-Z.
Mazda's.
M-O-Z-D-Z-D-Z-I-E-R-Z.
Mazdaziri.
Changed it. Thank God I married an Andrews. All right. So my dad's family, half of them are still Moisjish and half are Moses.
I believe it.
Yeah. But now I'm just Jennifer Andrews.
It's a lot easier.
When I met my husband, I was like, tell me your name again? Andrews? Perfect.
Ding, 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 ding.
That sounds nice. So did my Polish princess get some punchki? I couldn't eat the calories, Mikey. I couldn't do it.
I didn't. I've only seen them in the Vicks pit. I'm going to grab one on the way.
No, I went to a bakery yesterday.
Oh, you did?
I went to a bakery yesterday, and they were everywhere.
Oh.
And I couldn't do it.
They're good. They look good.
I mean,
I don't cut my toenails anymore.
Please, no.
Great thing.
Gary, don't cut your toenails in the pit.
I won't. They replaced my foot with a brand new foot. I don't have to cut anything.
Oh, good job. It's an excellent. It's amazing.
A lot going on over here. All right, let's go to SLV. SLV, we have exactly, not
if you
exactly.
have a broken wing, if you have a downside ratio spread, so their question was...
That's deep in the money.
Deep in the money. Yeah, I mean, we have a deep in the money. We have a deep in the money put. So you manage it. You have the spread. If you have that ratio spread, you have the spread, close the spread. All you're left with is a deep in the money put. So we all of a sudden have the exact same thing. It's going to make a great episode, Gary. It's going to make a great episode.
Watch out. Coming.
All right. So silver is, we were here before, and we bounced it up.
So if you have the downside ratio spread, it's break everything apart into its simplest pieces. Close your spread, and then all you're left with is an in-the-money put, and that's where we're at. What are we going to do with ours?
Yeah, so that's what we have. We have this in-the-money put, so deep in the money, there's no extrinsic value.
It's $14 away.
How do we figure out, the market's actually, honestly, shockingly tight.
No, the market's tight.
So the 80 put, and we're trading 66, 80.
You're fine. That market, you take mid-market.
1325. 1325 is parity, plus an extra nickel. So 1330 right there.
Yeah. So we close that, and we're going to
buy it back.
We're going to roll it the heck out in time.
Okay. So that's gone. Now that was like being long 100 shares of SLV. That's what that deep in the money put is.
Yep.
And when Liz mentioned the other part of your ratio spread, the 2x1, the spread part, if your spread's $5 wide, that should be trading close to $5 or
pennies under.
Yeah.
Yeah.
If it's close to expiration. Now, how do we replace that short put in SLV?
So we can look. The zebras were too expensive. We also have a 57 rank. So I say we just sell at the money puts. I mean, it's going to take a couple months to make it back. It won't be in 1 month. But let's go to the 31 day and sell the at the monies.
I think that's fair because we've got. I don't want to say, we have a little bit of a tug of war here, where I've been short silver, she's been long silver. So typically, if something's deep in the money, we replace it with a zebra, which is a synthetic stock position.
Right.
But since I've been short silver and you've been long silver, I think just selling premium is fair.
The selling premium is fair. And I mean, we could even do a big lizard if we wanted to in either direction.
So
because it's got a 57 rank and you just need to chip away at it.
So here...
There is nothing wrong with walking away from a position too, being like, I'm done. I don't know what's happening in silver.
No.
Now, in my opinion, I think a lot of the volatility has been sucked out of silver.
Oh, it has, because those 100 calls I've been selling for $3 are like
Pennies.
change. Yes, they're change now. I don't have any more short calls in silver, but I've taken them all off.
Yeah.
But there's still a decent amount of premium here where you're getting. Okay, so we can get. You said at the money.
I was just saying at the money is where you're going to get the most premium. You're getting $5.
You're getting $5. So you can choose $5 that way.
I mean, you want to do a Jade Lizard, go for it. I don't care.
Or I was going to say
I
you
would
can
just
get
like to sell premium.
Or you can get $5 this way too.
You can do either way. I'm not afraid of either side now that the vol's gotten sucked out. Where I was more afraid of the upside was when the vol was extremely high.
Through the roof on those calls.
And it did, because that's kind of saying the vol has the skew switched? Let's take a look at the skew.
Well, I think the skew,
the skew was upside. It was upside skew in silver.
Yeah, so 66.5. Let's just go up $10 or $20. 66 to the 86. The 86 is 87 cents.
Okay.
Down $20 to the 486. The 486 is 30 cents. So there is upside skew.
But not nearly as glaringly obvious as it was.
Not what it was.
So there is still call skew in silver.
61.75. I mean, honestly, you could look at both of these and say, oh, geez, I don't want to be short at 75, or I don't want to be short, or I don't want to be long at 60. But I feel that as far as the risk goes, the 75 call has a 31 delta. The 61 put has a 29 delta. It's equal. The market is telling you these are equal risk. That put and that call, they're equal risk. They're the same delta.
They're the same delta.
They're the same delta. They're the same delta. They're the same price.
Yeah. Are they the same price?
Yeah. 250, 250.
Oh yeah, when you have the delta, it's just they're skewed. One's farther than the
66 to 61, we're only $5 down,
Yeah.
and 66 to 75, we're $10 up.
Yep.
So it's
That's call
$5
skew.
down, $10 up. I just don't know. Do we want $5 that way, or do we want $5 with an at the money put?
I don't know. I am not nearly as afraid of those calls because the skew is still there. The call skew is still there, but it's not nearly as prevalent as it was.
And are you surprised it's only holding up $700 in buying power? Because we watched margin blow up in silver.
It does blow up in silver, and it can blow up in silver.
75. This will make you feel better.
God, you don't need to spend $1 because then you could lose 10.
75. Yeah. I don't know. So I say we get $5 one way or the other, whether it's the strangle or it's just one side.
Sure.
And
I mean, honestly, go for it. It doesn't matter. This doesn't matter to me. It's got a 57 rank, and if I took the mind eraser drug, I would be selling both sides.
did you listen this morning when the boys were talking about, in order to be a successful trader, you have to have a short memory? You have to just forget about
That's what I'm
old
saying.
trades.
This doesn't bother me at all. I don't mind the put. I don't mind the both sides. The problem with both sides with me in silver is then you can't get out.
Then you can't get out. That's the
only issue with this is you can't get out with a commodity, and that's why I think I trade commodities differently. Now, granted, this is SLV, it's an ETF, I get it. But your silvers, your golds, your natural gases, I like one side because then you can get out with a pop or a decline.
I agree. I agree with you. So let's just. I moved it a little bit down. How about 375 on the 64? Give us a little bit of room.
And if you want to, sell a call spread for like a Jade Lizard type thing. Sell a $3 wide call spread.
75, 78.
Then you're getting $4.30. You got $3.
$4.30 instead of.
You're getting it from both sides.
Sure. So then we're getting over $4. I can make it.
Sure.
When you have call skew, what you are battling are these. You're not getting paid enough for these call spreads. Then you can't get out of it, or if it blows through it, we don't make anything. I'm just selling that.
Like I said, I'm fine with both sides in silver now, but I do think commodities. You want I want to give myself the room to get out if you get any directional move, and I don't care which direction.
We've had down day in silver, down day. If we get it pop up, then maybe we can get out of this. We can,
and then lather, rinse, repeat. Then you can kind of go back in again. We're not looking at this that we need to make back all of our money in that one trade that we got $4 for.
I know. So, okay. So that's silver. That is silver. What? Let me see what else we had coming in Twitter. Jordan, market's down again. Yeah, that was earlier, not anymore. Short puts in the back month. Sure, if you sold them already, you could maybe be out. SPUs are only up $2 right now.
So yeah, go top down real quick.
What about Patty Handy?
We'll go to Patty in a second. Florida 7's gonna be very quick.
Wrong. My birthday's today.
You thought it was November.
Why didn't I pick up on this? I never make a big deal about my birthday, but if you have my number, expect a phone call. So it's today. Florida 7, happy birthday.
Happy birthday. Happy birthday.
Him and Michael Jordan.
Jenny, take it away.
Happy birthday to you. Happy birthday, Florida 7.
Hey, we've got lots of our favorite people in birthdays now. We got Frank the Great, we got Vanetta, we got
what
Florida
day is
7.
today? February 17th.
Yeah. Very cool. Okay, now we can get to Patty.
I just had to
give a shout out.
I was due on February 29th on leap year. I wish I would have been born on February 29th because then I'd only be like 10. 11. How old would I be? I don't know. Every 4 years, 50 divided by 4.
I was told there'd
12.
be no math today. 12.
I'd be just a teenager.
Okay, so let's go back to Patty Handy. Thank you very much.
Patty.
I did not mean Patty. I did not mean to thwart you. We do love your tweets. I just had to get to the bottom of Florida 7.
Good morning, friends. What are your thoughts on doing a poor man's covered call on the QQQs? I'm thinking about buying a call leap on the Qs and selling 0 DTEs. Yeah.
Okay, now I will tell you what I love about Patty Handy. She's a trader too, just like all of us are. This came in 40 minutes ago when the Qs were down.
Yeah, but if she's doing long term, she's doing a leap.
Oh, I know,
this
but
isn't like for the day.
No, but she might be able to get out of it if the turned around. Like when you put on a bullish trade and it's up now, where are the Qs? This morning the Nasdaq was down a lot.
I know. Markets move. That's why there's value in a live show that's kind of on the spot, on the fly.
There is value in a live show that's on the fly.
Yeah. This is crazy today. This is the Mardi Gras.
We're very valuable in the live show that's on the fly. It's like,
what is your are you throwing or going to a Mardi Gras party tonight?
No, I've got last call.
Thank God she reminded me. I forgot. We'll be on last call today. We're on last call from 2:30 to 3.
2:30 to 3 Central Standard Time.
Yeah, 2:30 to 3. We're on last call. But I have been to
Mardi Gras party. Have you ever been to Mardi Gras?
No, have you?
Me neither.
No.
It's not somewhere I really want to go.
I've been to a party where, and this is on the Three Kings. So on Three Kings, there's a cake, and everyone gets a piece of the cake.
Isn't there like a baby in the cake?
Yeah, and whoever gets the baby in the cake has to throw the Mardi Gras party.
I think this is a weird tradition with the baby in the cake.
The baby in the cake, and then they have to throw the Mardi Gras party. All right, we have something else. I'm going to go back to the platform because we need to do something with our IBIT position only because...
For capital requirements.
Yeah, we want to free up some capital.
And we also don't have anything sold against it because it rolled off last week.
We have 100 shares of stock in IBIT. You can see 100 shares at $38.48. Yep. And it's right here. And I know people will say, like, you just bought the stock there. Why are you going to sell it here? We were going to just keep the stock and sell Jade Lizards around it every week, which I'm okay with, but we could use some extra capital. So we're gonna go back to what we had before.
We use capital efficiency, and we're also going to sell premium around it. So we're going to do 2 different trades in IBIT right now.
Yeah, we're going to turn our stock into a zebra. Watch how that will free up capital. And it's easy. Is it easier to have stock? Yes. If we need buying power, if we need capital, does it make sense to turn stock into a zebra?
Yes.
Yeah.
Okay. So
because I know we're going to get an email saying like you just sold out your zebra and bought the stock.
Correct. But that's what happens when you're trading. So we looked at it today. We needed to free up some capital. When you look at an account and you need to free up some capital, we're not actually taking away any profit potential by moving from stock to a zebra. We're not.
No.
And we said when we took this, when we did it, the first thing we'll do is change it back into a zebra if we need capital.
We need capital.
We want the capital back.
So, and sometimes it makes sense, sometimes it doesn't. Here, if I sell out our 100 shares of IBIT, we're going to get back $1,500 in buying power. If I go to the March 31 day and put on a zebra, sell the 50 delta, buy 270 deltas, it's $571. So I could use, we'll get back $1,000 in buying power. We'll get back $1,000 in buying power.
With the same risk-reward scenario, meaning like we can make money one for one for the next 31 days if IBIT goes up. We also have recourse a little bit with, if it goes to 36 pretty quickly, there's some extrinsic value that we can sell.
You know what I can't shake is that you're going to have to help me. We're going to have to we might have to have a whole week on my in-laws account because now with the rates, like they're just not getting that much on those boxes.
I know.
It's going to be trouble.
I want out of that trouble. You got yourself in this mess.
It's going to be trouble. All right, so this 36.39 zebra will make money one for one as the stock moves up, just like our long stock will, but it's $570 instead of $1,000, instead of $1,500.
Only because I know you've got it up. Can you go to the website just to show where a zebra is?
Let's take a look. Okay, tastylive.com.
There is James.
Shows. Oh yeah, there we go. There's James. He's working that's our master control. He's working master control.
Working master control, love it. Okay.
Go to shows. Liz and Jenny strategy series. And here it is, 0 extrinsic back ratio. We walk through very slowly how to put this on.
Yes, you'll see that. Like I said, we put on a zebra. We trade them all the time, but this is the strategy series where we will walk through slowly. You can go at your own pace.
Yes.
It's right there. Okay.
So I'm going to put this zebra on in IBIT. It'll use $571, $570, and then I'll close our stock. I'm going to sell the 100 shares of stock that we have, and this will give us $1,000 in buying power back. Helpful.
Helpful. It's very helpful.
Yeah, helpful, right? Because I think we only have like $10,000 in buying power.
Yes.
So that's going to give us a tenth of our buying power back. Okay, that's done. Now we're going to get back to our selling weekly jade lizards around our stock. Where do we want to go? This Friday, the 6th day?
Yes.
Wait a second. This Friday is 3 days.
Yes.
Or is it the 6th day?
No, it's 3 days.
6 days.
6 days
3
is Monday.
3 days till Friday?
Yes, because it's Tuesday. Wednesday, Thursday, Friday.
We're gonna have to go to the following week. We're not gonna get enough.
You won't get enough in that. Go to the 6 days.
No, we're gonna no. So we're just gonna have to go to like next Friday, the 27th.
Fine, 10 days. Go for it.
Friday the 27th. That's next Friday. That would be my last day before my birthday trip. Next Friday. Should you have your fill-ins ready?
TP, locked and loaded.
And we'll put on. We call it a jade lizard, but it's not quite as. If I do a $1 wide call spread here for 24 cents.
Yes. Why are you looking at me like this?
I'm trying to get you involved. What do I do next, Liz?
You're moving at a snail's pace. Go buy something for 24 cents.
All right, so I'm just using that 24 cents to buy something to release capital because we didn't want to use the capital in the stock. We don't want to use it here. So I'll buy that 33.5 put.
Just to release capital. And then you can decide what you want to sell because you want to get close to $1.
I want $1, but...
Go to the 37.50.
Yeah, there we go. Yeah. 37.5, 99 cents.
Yeah.
It's a tight range for 10 days, but we don't have any risk to the upside.
And what we've been slowly grinding these where it goes up, we take it off for like 35-40%. I think we got out of our last one for 40%.
The last couple.
And we're trying to do it weekly.
Yeah. I think the last 2 or 3 we've gotten out of. If I go to our IBIT activity.
No, we have gotten out of them.
Filled in the last 30 days. And here's our stock. Our little jade lizards here. I'm in everything.
Yeah.
Okay, so
Yeah, there you go. We sold it for 97 cents, bought it back for 63. Sold it for $1, bought it back for 64. It's just been like a weekly slow way to chip away at the cost basis. Because what we have is a stock position that isn't doing anything with the 62 rank. This is doing something with the 62.
Right. At least we're getting some premium against our stock.
Yes. Yes. So that is what we've been doing. That has been something that we've been going through with. Mm-hmm. We usually put a GT. Did you get filled?
IBIT.
Yeah.
No,
you're still working it. We want to put a GTC in for that pretty quickly because sometimes it can hit.
Okay. There we go. 97 cents.
But I'm glad we've got some premium selling component too.
Right. So now in IBIT, we have the Jade Lizard in the 10-day.
Yeah.
And we have our zero extrinsic back ratio, or zebra, in the 31-day, which will replicate stock. So our position, we have unlimited upside potential. That Jade Lizard.
I mean, this is wishful thinking because I want Bitcoin up. I really do.
I mean,
and I can't talk my book.
Why is it? Oh, here it is. Okay, here it is. So this is what our P&L graph looks like.
With crossing streams, but yes.
In IBIT. Yeah. Oh, yeah. Well, this is everything. This is our synthetic stock with the Jade Lizard over it.
Yes.
So to the upside, we'll make money, and then after it gets through the call spread, we have that 1-for-1 profit potential of just being long the stock. But in the meantime, we're getting premium if IBIT doesn't move.
Can you do me a favor and take off the Jade Lizard, just so they can see with not the Jade Lizard, the zebra. Take off the zebra.
So we take off the 10-day.
No. Take off the zebra.
Oh,
the 31
take off the zebra.
Yeah. So this is what we've gotten premium selling in the 10-day. We've been doing this every week. So 6-day, 3-day, 5-day. And I understand what Jenny was saying. That's why we're at the 10-day. Because if we did the 3-day, our range would be right here.
It's tight enough on the 10-day.
But this is typically what we've been seeing. Like if you pop out, we've been seeing you're selling the just out of the monies. You don't have a wide range here, but Bitcoin hasn't really been going anywhere.
It hasn't really been going anywhere.
No.
Okay, so that is the Jade Lizard portion of our position. And if I throw in the stock, adding stock onto it, well, and it's a zebra, stock would have the unlimited downside loss.
Yes, it still has the weird thing in there because it's the 10-day versus the 31-day.
Because if I take off that zebra here, the Jade Lizard, if I take off the Jade Lizard, this is what a zero extrinsic back ratio or a zebra looks like.
Yep.
You have limited risk, and then it acts like stock, like 100 shares of stock here.
Now, the forever give me this gotcha, it's only for 31 days. It's 31 days, and we're probably going to take it off when we've got 10 days or more. Mm-hmm. Has to be adjusted.
Got it. Yeah. Got it. So that's adjusted.
Yep.
Okay. That's in.
Okay.
What? Let me.
I'm trying to see. Give me 2 seconds. So is there anything else that we need to manage? I don't think so. Everything's been pushed out.
No, I don't think we need to manage anything.
If you want to go
I wanted
back,
to look. So natural gas, we have a position, but I think it's down again today.
Kind of.
Yeah, I guess it was down. It was down more.
I believe it.
Down to 290. It got into the 2 handle today, but it's popped a little bit.
What do we have in natural gas? Oh, okay.
We did the
275, 270, 255 broken wing butterfly.
The 37-day downside broken wing butterfly.
Okay.
We have it. Did we ever get into the Aussie dollar?
No.
I know we were looking at it. No, we don't have a position. We did not get into the Aussie dollar. And I think we talked about selling a call spread in here.
Yeah.
But it's been down the last 3 days.
And that was open yesterday. Like a lot of things were open yesterday.
Mm-hmm.
Like the Aussie dollar does not close for our holidays.
Didn't close for the president's birthday. No.
So this still has a 49 rank. It's not. I mean, we can get into it. We can do an upside. We just got burned on one upside of these, right?
We had a reverse big lizard.
A reverse big lizard.
Mm-hmm.
Okay.
Mm-hmm. So
I do not mind going into there.
45 days. I'm just looking. 72.
And Ajit, I see you on Twitter. We will get to you. Bob on Fire, I see your list for earnings. We're going to read through those, but we'll do most of the earnings in last call today.
This isn't bad. What do you think? I mean, this isn't bad. Risking 390 to make 110.
That's not bad at all. Ship it.
Okay. which is then we've got something back.
And with this, what I love about this is if you kind of understand options, I can't understand that chain, but I do understand the downside, the bottom, where it says max profit 110, max loss 380. Your buying power effect is less than your max loss because they give you that span margining.
And our short strikes at the 72 level, which would be up here.
Yeah, sounds great.
So just to get back in, because we had that one trade that expired last week or 2 weeks ago, and we haven't gotten back in.
Yeah.
So that's just a short position in the Aussie dollar, but it's a very defined risk.
Yeah, I think so.
Okay, and we're filled. So that's in. So far, activity today, all symbols. We put on that skewed iron condor and SPX.
Yep.
We adjusted our silver.
Yep.
We adjusted our IBIT, and we sold a call spread in 6A. And a 6A, we didn't look. We should have looked at rank, but it's a 49.
Oh, I looked at it, yeah.
Yeah, I wasn't paying attention.
I glanced at it to make sure.
So it's a 49 rank, meaning the vol's high enough to justify selling a call spread there.
We did. Especially because with it being not an obscure product, I'm not saying it's obscure. Hold on, everything's out. I'm not saying it's obscure, but it's not something that I'm 100% familiar with. I like defining our risk, but I wanted to make sure the rank was there.
Okay. The yen is something I'm always keeping an eye on, and usually selling put spreads when we get back down. Selling put spreads or buying call spreads when we get back down. We'll see. We'll see if today's down move starts a little bit more of a trend. I don't know.
I don't know either. Tim Knight's the only one who can read that chart is Tim Knight.
Well,
okay, now can you pop back into Twitter? I know we only have a couple minutes left.
Sure.
We have about 4 minutes left. I wanted to get to Ajit's. He's got a Bloom Energy Strangle, and then Bob on Fire. So just kind of come down just to those two. There we go. There's Bob on Fire. This list, Bob, we appreciate it. We will be pulling this up at last call today at 2:30. Yeah.
2:30 we'll be on looking at earnings.
I keep saying it so that we both show up there at 2:30.
When I look at this, what jumps out at me is PANW, Palo Alto Networks,
and Devon
Energy.
Mm-hmm.
So we'll definitely take a look at these in last call.
Yeah.
And where do you think the market's going to be when we come on to last call?
So given the action today, I think we're going to be up.
I hope so. I'm afraid we're going to be down 50 and we'll be like, wah, wah.
The funny thing is I think it's an anything goes market, right? So anything goes, meaning like by the time I lose the internet from the time I walk from here to the train. I mean, if I get on the internet and it's down 50, I can't say I'm surprised. If I get on the internet and it's up 50, I can't say I'm surprised. But I do think the VIX is a precursor.
And I was looking at, and we'll get to Ajit's in a second.
Well, I just wanted to post it for him.
Oh, yeah. Okay, here we go. Here's Ajit's. Short strangle in Bloom Energy. If I take a look at Bloom Energy, we do not have a position in Bloom Energy. I know you have a Bloom Energy position.
I do. And Bloom Energy's it came down a little bit, but it's not.
It's a mover. It's a mover. He's selling a strangle. It's $139.
It's got a 77 rank. I mean, it does have a high rank. I get why you're selling the strangle.
If I were selling a strangle, I would. The one problem I have with Bloom Energy is these markets are wide.
Yes, they are.
The markets are wide.
Mm-hmm. They are, especially the calls. Look at that. I'm looking at the 170s. You're looking at 780 at 950. None of them.
Well, and look at this skew. Talk about skew. So you go from 140 to 100, down $40. $3. $3.80 for $4 mid market, up $40 to the 180.
Yeah,
you've got
call skew.
$7. So there's a lot of call skew still in Bloom Energy, but these markets are wide. Yep. But Ajit's big buy big. He's not afraid of taking risks. He's selling strangles.
I just wanted to make sure that we posted it because we appreciate, and he lays out all of his criteria. So
got it
in there. Now, can we go to the VIX? Because if we're giving predictions, I want to see where the VIX is. No, wait. Whoa, before you type it in, hold on. And I can't see it up there because I'm only looking at this. SPOOs are up 3. Where do you think VIX is?
20.
So you think it's down? It's finally down. Because remember, we were up a little bit, but VIX was still up like 20 cents.
I'm going to say 20.
Okay.
I don't know. What are you going to say?
Here's what I think. I'm just going to say, if the VIX is unchanged or lower, we shall end the day higher.
2074. I mean, 20 was aggressive because then it would have been.
It was aggressive.
It was aggressive.
20 is an aggressive move.
That was aggressive.
But if down,
but still,
right? So remember, we just saw this when we were only up here, and the VIX was still up about 20 cents.
Again, 18 is the average of the VIX. So
Still high?
VIX at 20.77 is high.
No, it's still high. I was just saying if the VIX was up, meaning green on the day, I was going to say I think we were going to be down on the day. But because the VIX is red on the day, down slightly, I think we're going to stay up today.
And if
What do you think,
look
Matthew?
at if you look at
Matthew's saying down
at expected moves, if you look at daily expected moves, so between today and tomorrow, end of day tomorrow, the expected move is plus or minus 60. Today we were down 60. And then back up. So I was looking at an old study, SPX study, looking at the iron flies and selling at the money premium, and it worked the best when we have inside days. We're not seeing inside days.
Would this be
So
considered
does that
inside?
mean then we buy that iron fly?
Would this be considered inside?
No. Well, at the end of the day, it might be.
Yeah,
but
that's
our
what I'm
range.
saying. But at what time does the inside-outside
I don't know,
hit?
but with these wild days, I might flip the cards over and start buying the iron fly.
It doesn't make sense.
Because-
Flip the cards over.
Right. If I wouldn't sell it, then I'd buy it.
Yeah, correct. Because you can do both sides.
All right, that's it. We're out of time. We are out of time. Have a wonderful time at your Mardi Gras party.
Thank you. You too. Frank, I'm going to try to get her a punchki. And I think I said it right.
Yes, punchki. I guess. I mean, that's how my family pronounces it, but I don't know.
Well, you have the most authenticity into this.
I know,
And
Mikey
do.
does. Mikey, the Polish warrior, does.
Yes.
Everybody, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you today
See you
at
at Last
2:30.
Call.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. We are back. Monday was yesterday. Headed off, President's Day. We were just talking about getting some outdoor activities in. But welcome back. We're here. We're thriving. We're live. This is Options Trading Concepts Live. And we've got Thomas here talking a little bit about the futures market.
Tommy.
Yeah. Tuesday Tommy. How was your long weekend, everybody?
It was good. You know, it was really warm out, as you guys know. Really tempting to get out and do a lot of stuff around the house, but everything is still like so soggy and soaked from, the snow, the rain. So we still got out, enjoyed the weather. It was nice. Cooking dinner, opened the windows, got some airflow through the house instead of smoking the place up. So, yeah, good weekend. And the week feels weird because it's already Tuesday, So
I saw a woman with a tank top on yesterday.
Yeah. There you go.
That's a little far.
It makes me mad when I get off like the train or something and it's going to be 70 degrees and people are wearing like beanies, winter hats, coat. They're all like
70
acting
for
like
sure.
It's a blizzard, but I'm wearing a hoodie.
I think a one day 60 degree, maybe 1-2 days, and it's 60 degrees, and like that's the high at the apex of the day, and you're wearing like a tank top and shorts. You're going a little too far. Like leave a little something. Just wait, just a little bit. Like I don't want to get too excited. I don't want to get too excited. Right. I'm not going to wear a tank top. I'm also not going to wear a coat. That's for sure. Like
we're getting teased.
You know what I mean? Like,
Yeah, it's supposed to be colder later this week. So at least we got a little bit of tease of what's coming. And now, from a scientific perspective, the ground is warm enough to where even if it snows again, it's not going to stick.
Yeah.
So that's all that really matters.
True. Yeah.
We're getting the daylight too, 2 minutes a day. So.
Yeah, when is that? When does that change?
March like 9th or something around there.
So it's not that far.
Spring forward.
Not too far away, yeah. And then we're in the Goldilocks zone for the next few months here. I have to talk about this before we talk about the markets. Did you guys watch the new Game of Thrones episode?
I didn't. I've seen
Wait,
memes.
what do you mean? Like, the show you're watching?
The
no,
show.
I haven't. No, I haven't watched it yet.
You have to watch it.
Yeah,
his mind is blown. He can't even talk.
It really. I watched it and I was like, "What did I just watch?" That was the craziest thing I've ever watched in my life. And now it's the highest rated episode of Game of Thrones ever.
Oh, yeah.
And like it's the highest TV episode rated ever.
Really?
Yeah.
We need it after the prequel. The first season it was all right. House of Dragons, it was okay. The second season I was like, when is this war gonna happen? Then I lost interest. So it's good to hear.
Yeah, this one is a pure storyline and it's very good. So you gotta check it out.
Mikey is like 3 for 3 with show recommendations for me. I'll go with it.
I'm telling you.
Yeah.
You're not going to be disappointed.
I'm gonna have to check this out. Yeah, I haven't watched any of it. The closest I come is isn't the guy that is on Industry wasn't he on Game of Thrones? The guy who's Yasmin's
Jon Snow.
Yeah, him. Yes.
Yeah. What's his name?
I don't know his real name, but
it's on the tip of my tongue.
Yeah. Kit Harington.
Yeah.
That's his real name. Okay.
There you go.
He married the redhead on the show, right?
I think so.
Yeah.
That happens more often than not. I mean,
you're
close
together
quarters,
every day.
a lot of months.
What are you gonna do?
Yeah.
But yeah, lots to talk about in the markets here. Flying around. As you might imagine, the market started down 50. NASDAQ was selling off 2. Bitcoin was down, and now the E-minis are flat. Everything is just by the dip. Micron was sub 400. It was at like 395, and I was like, ooh, maybe I should just close this because it's only a matter of time before we rip higher above this 400 short call. I didn't close it, and now we are well above the 400 short call. So
yeah, it's accurate. It's true.
Very, very sad here, but still have 3 days left, and as long as we get a little bit of a sell-off here, at the very least, I can roll it out a week or something like that. But I'm hoping for some more turbulence in this market and get out of this MU position. Maybe we might get lucky here with a 400 pin at expiration on Friday.
Wouldn't that be something?
We'll see.
That's pretty much about the only thing I'm holding for at this point.
Yeah.
Let's roll the dice. Let's see what happens.
It's crazy. Silver making moves to the downside, down 6%. Natty gas down 5%. Gold down 3%. Big moves there. Bitcoin, ETH, both down 1.5% and 3% respectively. Crude oil down 1%. To the upside, really not much at all. Nothing more than 1% on this futures watch list I'm looking at, aside from XRP futures up 4%. So kind of another day of concentrated movements in these markets. And we're kind of running out of earnings to talk about. There are some, though, after the close today. You got PanW, Palo Alto Networks after the close today. And then later this week, we have a handful others. But really, I think the ones that we'll be focusing on are probably next week. You've got Home Depot. You've got Workday. You've got NVIDIA. So some bigger names next week. Some more fringe names, but still popular names this week. We can field any questions you've got or trade ideas, of course, if you're watching live on the YouTube channel. If not, head over to the tastylive YouTube channel. We're streaming live there. I've got the referral program pinned to the top of the YouTube chat. You and a friend both get $100 if you bring someone in and they deposit $2K. So check that out. But yeah,
real strange day, honestly. I mean, because there's a headline that came out this morning, right? Something about Iran or whatever, and the markets did not like it. Well, who really didn't like it was gold and silver. Those things tanked, and the oil was up earlier in the day, and that tanked. And we really haven't recovered. Those three assets haven't really recovered since. Bitcoin tanked as well, but it did recover some. But markets have been all over the place. What is the range? We've had a 94.5 point range in the yesterday.
Yeah.
I mean, that's a move.
Yeah.
Right? Like, and again, I think we were down like 50 at one point overnight. So, and a lot of volume here today, 1.5 million already. Usually by this time, we're trying to get to 1 million. So, I don't know, man. I continue to say, like, I know we all pay attention to volatility. Of course, volatility matters. But for me, when I look at the bonds have been hanging in there. CEB's up to 118, ZN up to 113. Obviously, the 10-year yield is under 4.1% now. I think that's the real story more than anything about trying to tell us what's going on in this market right now.
Yeah. I haven't traded either of those, but they're definitely coming to the forefront of opportunity here with some bigger intraday ranges and some big realized moves that, like you said, kind of tell the story here, especially when you see the swift reversal from the lows. And you don't really see this unless there's change in the markets. What do you think, Thomas?
Yeah, I mean, I think the market, our outlook, the economic outlook, it's getting a little better. The labor market worries about that. It's kind of cooling off. So it looks like we have a good outrun. I mean, the rates going down, it's beneficial to this administration, the economic outlook. We have a little more certainty on what's going to happen with rate cuts. We got 2 fully priced in for this year, maybe a third. I think 2 weeks ago we were talking about it. I was about to pull the trigger on a ZN long, and I said, my past few trades haven't been good. So I was sticking out. Of course, this time it's doing what it's kind of forecasted to do or what people were expecting it to do. But I think definitely going to have to keep our eyes on this. I'm not sure if I would take a long position here, but maybe after a little consolidation, if we get that, maybe I'll do an iron condor. Volatility, stays in the high teens, which is about as good as you do for bonds most of the time.
I bought a put spread in March last week, 118, 116. I mean, this move has been faded plenty of times. We'll see what happens.
Yeah.
Remember me for this one. Okay? I'm taking the bullet for all of us.
Love it. We've got some futures content for you today, as always, on this Thomas Tuesday. Real quick before we get to that, currency's not moving too much in our favor. I need the dollar to explode to the upside ultimately, and it's just not happening. But we've traded small in here. We can hold these positions. We'll see what happens, and we'll take off some winners if we see them. And for now, we pray. Dollar franc, just got to have that higher, significantly higher. over the next couple of months here. But I did close that SPX butterfly, the 100-point downside butterfly that we put on the SIBO floor, I believe, last week ahead of the weekend, and bought that for $6.10, sold it for $7.80 right on the open, really.
You put this on Thursday, right?
Yeah.
You had one, you'd close it, and then you reestablished this. Yeah. Okay.
Yeah. Reestablished into the rally, closed into the sell-off. Now the market's flat. So, yeah, I mean, anytime the market sells off, I'm probably just going to close these because the next couple of days we get a rally, or intraday we get a rally. And until that stops, I'd rather secure the value and re-enter. But, yeah, that was the only thing I did today. But looking to play some new trades on the show today as well. So what do you got for us, Thomas?
I was going to talk a little bit about soybeans. We did get like the weekly export inspection figures. So it's a weekly figure. It's slow. It's high frequency, which is good, but usually doesn't move the market too much. But it gives us insights into trends that are happening. So soybeans, they've been doing really good lately. We're coming up to this November high that we had back there. It's at like 1172, currently trading 1137. In the past 2 weeks, we've had a lot of upside. A lot of this is to do with President Xi and President Trump's meeting coming up in April here. We previously agreed to, China buying 12 million metric tons. That figure, they're saying that Trump is pushing for an additional 8. It's not in writing yet. It's not like hard-coded, but it's looking more and more likely that it's going to happen, especially with the political implications. So right now, the U.S. administration, they really want to help out farmers, especially ahead of the midterms. Farmer sentiment, if you look at like political polling and stuff, it hasn't been the best. And that's because, tariffs, it impacts a lot, especially retaliatory tariffs. The first Trump administration, soybean farmers got kind of decimated because China, one of the repercussions they did was completely stop buying soybeans. They're buying soybeans again, which is good. They've been getting a lot from Brazil in place of the U.S. Brazil, the weather's improving a little bit there, so this might be capping some of the upside for soybeans. But if we go to the first chart here, we'll see soybeans compared to the previous week, they're looking pretty good. They increased. The green line on this chart is soybeans. You got February 12th here on the right dot. It's increased from the middle dot, which is the latest week, February 5th. Then that one on the left is the year prior. So we're up a lot from the year prior for this week. Year over year, though, the total volume, it's still down. But this is a good trend to see. It's increasing. And we really, though, this isn't what's driving soybeans. Slight improvements in weekly exports. It's all about this anticipation for this meeting coming up in April. And a lot of people think that President Xi is going to make that concession and say we are going to buy soybeans. So what's been happening in China's soybean market is they've spent years and years trying to get soybean production up. It's risen to about 20 million metric tons per year. However, they've had a lot of trouble getting it higher. And now the policy there is kind of shifting to just stabilize that and rely on Brazil. And now they need the U.S. too if they're going to stabilize that production. You could say the first deal with soybeans, it included a clause that was something like, I don't know the specific language, but it's like, if prices get too high, then we won't buy them, and that was a clause that they could kind of get out of it. A lot of people think that this new agreement is just going to be straight up like, hey, you're going to buy these soybeans no matter what, we'll buy them. This is concession. And in return for other tariffs, they're going to get a lot more back. China's going to get a lot more back. So they'll likely have no problem making this deal. And it's a big bullet point for the negotiators to do this. And actually Trump's, looks like he's taking the lead on these negotiations. So the market needs to price in 8 million metric tons more soybeans. That's around 350 million bushels. If you look at the stocks for the USDA, the US stocks, the ending stocks, that would pretty much completely wipe out all of our stockpiles. the current purchase is 12 million metric tons. It's going to eat down on the old crop, which was harvested last year. This new crop, of course, is going to be harvested in the fall. Farmers are going to be starting to get out the next month and start planting these. So is this going to give farmers confidence to, keep the soybean acreage high? Because that acreage does have to come up. So if we start seeing the prospective planting reports, which are going to start coming out in March, right after WASDE, I think it's March 13th next month, we do want to see an increase in soybean acres planted. That'll show that farmers do have confidence that this deal is going to move forward. If it doesn't increase enough, that's still going to be a bullish thing because it's going to show that perhaps we won't have enough soybeans to get taken out of this year's ending stocks. So we're coming up to this November high. I think we'll keep pushing up to it. The question is kind of what happens if we come up to that. Does it serve as technical resistance or anything else? So for myself, I have a long call spread. It is in the April 24 contract, 1160, 1170. So it's just a bullish directional bet on soybeans. I have 66 days left in it. And, I think it's a pretty good bet right now. And it's a bet on pretty much a political bet. It's not really what's on the exports. It's showing what's going to happen in these negotiations. I don't have corn up on the chart, but corn, it actually saw, if we're looking at the red line up here, from the last week it decreased. From a year ago, it's still a little under. But this week actually came in above trade estimates, so 1.4 million tons. That's against a trade range of about 870 to 1250. So that came in over, although corn, having a negative response today to that. So, the market's not liking that beat. I don't know why. Usually you get a beat, you're exporting more, it's going to be bullish. Corn, we had that really big drop back in January 12th. We've kind of had a trend higher. So IVR on corn is 42. I'm looking at selling a put spread there, something around 420, 410. I think you kind of get that resistance if we drop again back to the January lows. If you go under that, you're going all the way back to August. So, I think I might put on that trade as well. But overall, I'm pretty bullish soybeans and also corn as well. So I don't think there's too much to talk about there. I haven't seen too much happening. IVR is really low, 15. So, it's not too exciting. The corn and soybeans are what I'm going to be trading. If the IVR on wheat comes up, I'll trade that, but there's nothing too much there. So it's all about April and, what happens from now until then. You'll probably just hear more speculation on this deal, but it looks to me like, there's too much fallout if the deal doesn't happen. Trump, he wants to really help Republicans in the midterms. And to do that, this is a big thing for him in rural areas, is to get those farmers happy so that those farmers know, hey, we're going to be able to sell all our product. We're going to have a good year. Things are coming back, especially since last year, was kind of not the greatest year for farmers. So I think a lot of this momentum, it's going to continue to be driven by that speculation there. And, like what could happen? They're not going to come out and say, we're not going to do this deal. That would be politically disastrous. So I think, there is implications to make sure it happens. And once, especially, we clear that November high, I think we can go even further. So I think to be bullishly positioned right now, it's a pretty good speculative bet.
I like it.
Yeah.
And we were just talking about things to get involved in that are not related to tech stocks or AI. And these are two trade ideas, really, that could look nice. I just got filled on both of these positions, corn and soybeans. The nice thing about these two products right now is the K contract. The two option expirations settled to the K contract, so the 66-day and the 38-day. So with corn, I went with a diagonal spread, bought the 425 call in the 66-day, sold the 450 call in the 38-day. and that was a debit of $750. So max profit, probably $200-$300 from a theoretical standpoint if we get a nice rally. And then soybeans, same story. Nice settlement here with the long 66-day, short 38-day. And I just went with a calendar spread here. So I bought the 1200 in the 66-day, sold the 1200 in the 38-day, which is right at the expected move. And that one is a $418 debit. Similar story though. If you get a rally up to 1200, probably looking at $200-$300.
Nice.
Yeah. But yeah, just playing for that dynamic implied volatility exposure, and we'll see what happens.
It's good to get away from tech stocks once in a while.
Yeah.
It's true.
Every so often, we will dabble in the corn and soybeans and crude. Beautiful. Well, thank you for that analysis. And so when does the actual report come out that you were referencing?
The WASD next month is March 13th. It's always that second week. And then the week after that, you get prospective planting. So it's what are farmers going to be planting this year, things like that. But the Trump-Xi meeting, I'm not sure when in April it happens. But, that's definitely going to be something big for not only commodity traders to watch, but the market in whole, because that's a big, big thing for this trade deal that finally needs to get fleshed out. The thing is, they need to do it before midterms because they don't want that uncertainty of everyone, not only farmers, but everyone being what's happening with trade. A lot of small business owners, they're being impacted by a lot of these things. So it's not only for commodities, it's for the market in whole.
Yeah, makes total sense. So maybe we'll get some movement, see some markets telling us what's going to happen prior to some of those meetings. But yeah, either way, both defined risk, both diagonal and calendar spreads, taking advantage of the near-term IV and inventorying delta in the longer-term cycles. And yeah, we'll post those to the follow page on Tasty Trade shortly. Lovely. All right. Checking out the YouTube chat now. How would you trade NVIDIA earnings?
Wow.
Great question. This is definitely one where I'm going to wait until next week and see where the market is. I mean, the market has had a massive range today, all things considered. 100-point range almost. Yeah, 94-point range in the E-minis. And the NASDAQ is just as volatile, almost a 500-point range in the NASDAQ. Looking at NVIDIA specifically, we've got earnings coming up February 25th, so next week. And we're looking at a 13-point, 14-point implied move in that weekly cycle with an $184 stock price. So pretty close to 10% of the notional value of the stock price for that earnings cycle. We'll see if that holds as we get closer to the earnings announcement next week. I'm sure it'll drop a little bit, but still pretty decent implied volatility. We're seeing NVIDIA just sitting in this channel here between 190 and 170. Hasn't really moved in either direction outside of that, except for beginning of November when it reached that peak of 210. So yeah, I'm always going to probably lean towards the upside in NVIDIA just because the general public probably wants to buy this thing more than sell it. But we'll see where the markets are at, how the markets are behaving as we approach Feb 25th. What do you guys think?
I don't know. Hard to argue with the double calendar. I mean, they've been working. Yeah, you're right. I mean, I'm kind of the same way. I like to lean upside, but it has been helpful to have a little downside lean in some of these earnings, particularly this time around. What do you think?
Yeah, I mean, I'm not sure I'm going to play NVIDIA. I mean, it's down 2-3% year to date. It's just pretty stale. Software stocks getting hit again today. I don't know. There's a lot of speculation around, is it over? Is the AI supernova or whatever we're calling it? Is it coming to an end? Is it going to stabilize CapEx? Even then, what's the returns look like? Does it justify these kind of valuations? I do want to scoop up some of the software stocks though, and I think I mentioned to you I wanted to scoop up some Salesforce last week. Mm-hmm. It's down again today. I mean, I don't know. I
know. I have it.
yeah. I mean, I want to sell a put spread, and there's a lot of IV in there.
Yeah.
I don't know. I'm still spooked though. I think I don't know. After a big sell-off like this, it's a little scary. I'll probably dabble and get a little bit here though. I mean, to find risk, what's the worst thing that can happen?
It's been a tough trade. That's
Yeah,
for
it
sure.
has.
It's been a tough trade.
Yeah, you could see something like you can see an earnings report in Salesforce similar to Coinbase. Coinbase, this was like when Bitcoin is selling off aggressively. Hood had just reported it was down 10%. Coinbase is down 5%. Coinbase reports terrible earnings and the stock rallies. So like it could be a situation where the market's expecting a really bad report in Salesforce, and if they can report a less than terrible report, then the stock could rally, even if they miss numbers. That's kind of the environment we're in right now. So, yeah, I think anything's on the table. But to your point, if you are spooked by the possibility of a further sell-off, staying defined risk, keeping that risk small, that's your best defense, of course.
It's like you're down so bad that the market feels bad for you, so your stock pops up a little bit.
Yeah.
Essentially, is the thesis.
Walmart earnings on Friday before the market opens. Feb 19th on Thursday before the market opens. So, yeah, $128 stock, $7 implied move. That's really low for a big name like Walmart. So I probably won't trade this at all unless something speaks to me tomorrow. But I'll probably keep the powder dry and go somewhere else, especially with Walmart trading near highs. I'm not sure what to make of it. You guys have any lean?
No, I don't. I was just looking at it because you had pulled it up.
I mean, Walmart's doing pretty good this year, definitely outpacing the S&P 500. I think the tariffs, it was actually a good thing for Walmart because if you're a big player, you have a lot more room to navigate cost and everything, inventories. So, I mean, I'm kind of interested to see some white papers on like looking back on all this and saying, this was actually helpful to a big retailer, which is kind of discouraging in our economy that, tariffs get put on and these mega corporations do better than smaller companies. But that's one of the side effects. But I mean, I think it's a good stock long term. I'm not trading it, but they've been doing good. I mean,
you might be right. Since December, even Target, which was like really down in the dumps, has done better as well. So there's probably something to that. I'm just, Costco and Walmart, I'm just interested in them due to watching how money has flowed out of tech into those two, into XLP, right? Like we've seen that. That's probably the biggest interesting thing to me. I haven't determined any way to trade Walmart and or Costco if I want to. I'm just curious as to how that HD is another one we've seen money flow into. So.
Yeah. The DIY sector and your classic suburb companies.
Is it funny that as soon as you said DIY and you have the stock up, I'm hearing the commercial and the song. Like I'm hearing it. Man, they're good.
It's good marketing.
They're good.
Love to see it. Yeah, a lot of these stocks picking up some steam, and a lot of them have earnings coming up. Lowe's and Home Depot, both next week before the market opens on the 24th and 25th. And Target, looks like beginning of March. This will be one of the later cycles for this earnings season. But yeah, lots of movement in there. Very interesting. I like to see these rallies, especially if you've been buying Target at Lowe's and Starbucks at Lowe's and Home Depot and Lowe's and Walmart. It can be a nice strategy when you pinpoint these products that are sitting at lows, like CRM we just talked about, Microsoft. I mean, Microsoft is sub 400. It was trading at 550 2 months ago.
Yeah.
And it's Microsoft.
Yeah.
So lots of opportunity for bullish cases for sure. You just got to keep your risk defined. Don't go nuts with it. And ideally, give yourself some ability to throw in some tranches if you're wrong on the first time. Let's see. What else we got from the people? Goss. Iron Condor, Jade Lizard, binary biotech play. Very juicy premium for the risk. What is this?
Goss. What the heck is that?
$2 stock. Nothing to do.
Iron Condor?
Can't do it.
Buy that thing.
Yeah, I would just buy the shares or buy a leap. mean, you might as well buy the shares at a $2 price point and not get involved with the options at all. Just in case something goes crazy. Like if the stock goes to 0, you're going to lose the same as your leap. But at least you have shares in that case. And if you buy shares and it goes to 10, you're going to make way more on your shares than you would on an option where you're paying 50% of the notional value and extrinsic value. So this one is a pure share play for me if you're going to do anything.
Mm-hmm. Just looking at their drug. I don't even know what they do. Pulmonary arterial hypertension. Yeah, that sounds like a lot of studying is what that sounds like.
I've got 3 iron condors on an SLV, all $10 wide, short puts at 80, 75, and 66. Should I take the loss or any alternative? No. I mean, you technically can take losses and book the losses, but depending on where you're at, if you're in March, you have plenty of extrinsic value in all these strikes still. Even the 80 strike still has over $1 of extrinsic value. So if you believe, and you're pretty close to the actual implied move here, even with implied volatility on the lower end from where we've seen it. But yeah, SLV, if you're in March, 30 days to go, anything can happen. And you've seen this thing rip higher dramatically. So yeah, I think this squeezy type move is likely over for the time being, but doesn't mean you can't get realized volatility still. And your spreads are defined risk. So if there were any that I would be closing to save yourself or remove risk, it's probably the at the money one, even though that's the highest probability of expiring out of the money, just because that one is not near max loss, where the other ones are near max loss. And you can't lose much more and you can gain everything back. So up to you. But if you're in March, I think you've got plenty of time left. And just the fact that your 80 strike is near the implied move tells you a lot about the product itself and where the market expects this thing to go from a volatility standpoint.
Yeah, it's still having big ranges. The average daily range in here over the last 9 days is 6%, 6.26 to be exact.
Yeah.
It's probably been close to that today.
Pretty wild. What do you think of the precious metal space? You leaning in any direction?
You know, I got out of gold last week. I'm flat on precious metals. I'm still in copper, which is kind of moving similar to the precious metals on a day-to-day basis. You know, copper down 2.5% today, so it's giving me a little hit here. Yeah, I'm gonna stay out because it's just not making sense to me anymore. You know, I think the buy the dip, you know, it's kind of over. I mean, I don't want to say over, but for me, I think it's over right now. If anything, I might put on an iron condor, really, if we get, you know, a little more consolidation. Yeah, I'm just not seeing anything there. I think it's finally time for me to sit out on precious metals for a bit.
It's fair.
Mm-hmm.
Yeah, I mean, we've seen vol come down. If you look at slv.iv rank, you will see where we were, sitting well above 100 IV rank. And now we're back down to the middle of this range, closer to the bottom of the range in recent times over the last month or so. So definitely seeing implied volatility come out of the silver market, but still SLV, there was a point in time where SLV's IV looked like GLD's in the 30% range, and we're still not there. So regardless of IV rank, still plenty of premium to sell if you're trying to sell premium in this market. I like the idea of a strangle. I like the idea of iron condors for that reason. We actually have a strangle in here. I've got the 87 150. This 150 is worthless. I'm looking to roll this down into a rally, probably closer to the 100 strike. But a rally into the 100 strike is going to really juice up this value. And now that I look at it, actually, I probably won't unless we get a big rally closer to 85 or 80. Where this 100 strike goes from 30 cents to $1.50, something like that. Like, I'm not going to roll this down for less than $1. So we'll see.
Yep.
We shall see.
We shall see.
We shall see. Yeah, good point by Theta Trader. If you have a defined risk trade that's at max loss, there's no reason to take it off. Even if you're assigned, you can just close the position as a whole sell out of the shares, buy back the option, or sell out of the option, I should say. Your risk doesn't change as long as you have that long defined risk option. Farmers have been talking about soybeans a lot the past month in Iowa. Ooh, some boots on the ground information.
Iowa, yeah, that's soybean nation up there.
I like it. Yeah, anything to get us away from these tech stocks, I think it behooves us.
Yeah.
Give us some alternate volatility exposure.
Just so weak. I mean, when you look at the Mag 7, I mean, all of them are down year to date, red year to date. It's telling.
Yeah, is Google still the best of them, or?
I think it is still the best of them, yeah.
Yeah, I mean, Google is right at its 100-day moving average, kind of near a zone of congestion from back in November. Not worth it. I don't think it's worth it, though.
Yeah, this thing has seen its day.
Yeah.
That's for sure. Apple, though, up a nice 2.5% after that liquidation event last week.
Mm-hmm.
So, yeah, you're seeing some capital flow into these things still. How would you trade a crab trade on GLD if you wanted to trade the FOMC minutes?
I just put that one on that we were talking about. I just put it on this morning.
April, March?
I did the April, March. Yep. Long the 450 strike. Because remember, I was thinking about 450. I was looking at that area. Got long the 450 in April and $15 wide in March.
Like it.
Just this morning. A little under 750. Yeah.
Yeah, I like these a lot. Yeah, these are nice trades because if you look at the Theo, and then is just pulling in my other positions now. Let's just push this out to March 6th. So if you hold this for 2 weeks-ish, this is what you could be looking at. So long the 450 call in April, paying $1,900 for it. And then the crab components in March, selling two of the 465s, buying one of the 480s, 15-point wide package here, symmetrical strikes, but your long options pushed out to April. Inventory, some bullish delta there. But yeah, paying $1,900, but your net debit is $7, which means you're reducing cost basis by $1,200 with the sale of these short options and the protective long option that you're buying. So ultimately, buying this $1,900 option for $7 gives you a lot of upside room and neutral room to profit because you're reducing cost basis so much. And this Theo risk graph assumes that you'll hold on to some extrinsic value here, even if we stick around this sub 450 level, as long as we don't drop too far. So yeah, nice defined risk way to take advantage of this. And all I did was push the theoretical risk graph out a couple of weeks. And you can see if you get any kind of rally, or even if we're just flat here, you're looking at about a 50% return on capital or return on debit paid. So $300, $350 if you hold it a little bit longer.
Mm-hmm.
I like it.
But are they asking about specifically 3-day to 1 day? I mean, they're asking about playing it for FOMC minutes.
Yeah, you could do a similar thing. I personally, if I'm playing the minutes, I like to give myself or bring myself to Monday, because you're still going to get a big vol crush on Friday. Like if you look at this 40.9%, but then you go to Monday and it's baseline at 34%.
Mm-hmm.
Also, you have this almost a similar implied volatility here, 12 points for the weekend, 11 points for Friday. So if you're trying to get out of a volatility crush on the option you're buying, I would just go to Monday. Even if you're doing a really short-term one, you can see this here. Buying the Friday option, you're paying $440. Buying the Monday option, which gives you that implied volatility for the weekend, you're paying $1 more. I would do that all day. So even if we do this, if we look at the 6-day, buying the 6-day 450, and then you could go to Friday. I might do that. You do the 450, and then you might have to make it a little bit more narrow, but still, like, you're going to pay a very low debit here. If we go 450, 460, 470, you're paying a $3 debit for a 10-point wide diagonal spread. It's going to look very similar. So we got to bring this back to today and then just push this to Friday. And here you go. This is your 0 implied volatility adjustment, 450, 460, 470. However, there will be some kind of volatility crush in your long option here. So if we crush this 10%, bring this down to 24%, you're still looking at a nice winner if you get a rally here with a small debit. So I like this kind of trade too. Anything that takes advantage of the short-term IV, and you can see you're still reducing cost basis aggressively here. Instead of paying $500 for a naked option, you're paying $3 and you give yourself a nice predictable range or probable range for the product to go to the upside. Can you discuss how you would manage a year-long trade if the upside call is tested? Well, first, the upside call has to be tested, which would be a 500-point rally in the E-minis. But really, all we would do is just move it up. That's it. So like if the 7,200 strike is tested, and right now that's outside of the probability of happening. But if it is, 7,200 is tested, I don't want to have upside risk. I would buy this back and I would move this, my short put to 7,100 or 7,150. And then I'd sell a call here above it to get basically a scratch on my roll. I might end up going out a month from the March to the April cycle, but that's basically it. You buy back this strangle that's tested on the upside and you shift it to a strangle that's tested on the downside. And that's it. It's literally it. If you want to stay bullish, that's all you can really do. Because if you're under hedging and you're just moving the put up and then the market keeps rallying, now you have an in the money short call and eventually you have one short contract on, and that's not where I want to be. Home Depot has a song? Yeah.
I don't know. I'm just.
They all have a song. They have a jingle.
I just got the lows.
It's like the
dun able to get it out.
Yeah, Home Depot has a little jingle.
They all have earworms.
Yeah, they all have to do it. It's all just marketing. You know?
Yeah. Accurate.
Oh my God. Jared says his dad had the Lowe's jingle in his phone as the ringer for years. Next level dad mode.
That is definitely next level dad mode.
Incredible stuff.
Nothing says dad more than that.
I like it. Is it finally time to go long on Netflix? Aklo, same question.
You did the trade last week. I actually followed you.
Yeah, we did get long Netflix last week. It's basically trading where it was. It's down $28, but we just went with a straight up diagonal spread. Bought the May 80 strike, sold the 90 April, and both those options are right around the same price. But $4 for a 10-point wide diagonal spread, similar to what we just looked at in the near-term GLD crab trade. Anytime you can pay under 50% of the width of the spread. So this is 10 points wide. We're paying $4. Anytime you set yourself up like that, you give yourself a nice upside profit potential. But yeah, I think staying defined risk here makes a lot of sense considering this thing has not been able to buy or bid at all.
It's almost halved from back in July.
Yeah.
Yeah, it's crazy.
Struggling.
But if you get a little pop here, diagonal spread, calendar spread. I like the diagonal spread in this situation just because it's still cheap and I don't want any upside risk if you get a big reversal to the upside. So diagonal spread is easier to manage in that sense. And then Aklo.
I haven't looked at that name in a while.
Yeah. Aklo has earnings end of March. And these markets aren't that great. Right at the money in April, you're looking at $1 wide. March, 50 cents wide. So I'll probably hold off on this one. I don't really have any strong lean on this anyways. What about you guys?
No.
Okay. Hard.
No. I'm done playing around in Aklo and Bloom Energy. Like I'm good for now.
Yeah, I closed when I was investing in my IRA back in like 2016, 2017 for a few years, and then it's the first time I've heard about it in a while. So
Yeah. Yeah, I think given this swift sell-off here and the lack of liquidity in the markets, when you're trying to force something in an illiquid marketplace, that's usually when you're like, why am I in this at all? But yeah, I like Netflix. We're long Netflix for sure. SMH Iron Condor in March. SMH Iron Condor in March, 330, 350, 424, 40. Okay.
I'm sure it works.
Yeah. It's working now. Getting a little tested here on the upside. Within the strikes, but it's acting like a butterfly a bit, considering rolling out to April and widening to 30 points to keep a similar credit. Yeah, I mean, your pop is 56%, so you're a little bit better than a butterfly feel. But yeah, you're really close to the short call spread here, so it's not going to move too much in your favor unless you get a big sell-off closer to the middle of the range. If you bought this back and you move it to April, looks like you pay $850. So if you just go and replicate this, $350, $330, and then bring this up to like a $450, $470, you're going to give up a little bit of premium. It just depends on what your net credit is. Because like this, if you're paying $1 debit to move it out and move it out of the implied volatility that's in the near-term cycle, it's tough. You also have 15 more points before you are tested on the upside call. So it's a tough one. But yeah, if you're just replacing the value, you'd have to create a scenario where you're collecting $850 in the April Iron Condor. Let's see. Have you made any adjustments on your MNQ strangle or holding?
Holding. Haven't done a thing. We're holding it, baby.
Yeah. Nothing to
do. Yeah, nothing to do. Short of put here into the 6,800 area, which has been the lower bound over the last, almost 3 months now. 6,800, sorry, in ES, of course, corresponding the same area level, just below 25K and MNQ. So, yeah, just holding. Not doing anything. We're at the lower bound here. Yep. Just sitting.
Just sitting pretty.
Yeah.
Yeah, that's the nice thing about these trades, is you really don't have to do much at all. Like, we've had this on for multiple months, and I've only made one adjustment.
Mm-hmm.
And sometimes that's just what the market gives you. Where can I learn to trade options at an exceptional level?
Exceptional level?
So I don't think you need to pay for a trading school. I think you can learn anything you want on tastytrade,
That's right.
tastylive. We have free courses on tastylive. There's courses on tastytrade. And then once you have more questions about certain topics, you can just search for them on tastylive and go from there. But yeah, I think you can get by pretty easily.
Are there any reputable trading schools? It's us, man.
Yeah.
I mean, not to be that guy, but I am. And I know he won't say it, but you got to go check out Mike and his whiteboard. Like, that's something that I would think somebody who's really wants to learn exceptional level, yeah, check it out.
Yeah, appreciate that. It's
You're in the right spot.
Beginner stuff, visual stuff. That's the little key, is just breaking it down visually and not getting bogged down with all of the nitty gritty of the technical characteristics of these options. If you understand extrinsic and intrinsic value and how they might change with market moves, you understand all these other concepts in subtly. That's really all that matters. Extrinsic value is the most important thing to understand. So I would focus on that first and go from there.
Charles, you're in the right spot. This is the place.
This is the place. Free content.
Mm-hmm.
No reason to pay for it. Couple more here. Let's see. What about a zebra in IGV?
I mean, I'm just going to say it's not a bad idea given what's happened, but you're definitely going to be. I don't know what to think. Look, I've got a couple of software plays on, but you're going to be in the mix. You're going to be waiting on this trade a little bit. I don't know if this is bouncing back right away. That's the thing. Nobody knows what's going to happen, but I don't think about IGV. I'm looking at these markets. These markets suck, honestly.
Yeah. Usually the names that are not spoken of very often are going to have pretty bad markets, but there's exceptions to that, of course. What else we got this week? Market Watch. Looking at a little calendar here.
What? You mean general market or earnings?
Yeah, we got jobs numbers on Thursday, PCE on Friday. We did have CPI last week. Didn't really result in too much, but
was that just minutes on Wednesday, whatever it will yield tomorrow. Let's say Wednesday.
Yeah, the minutes could be interesting, but yeah, I think going back to that trading the near term stuff, like if you're using SPX or E-minis, going with a short 3-day, long 6-day, I like the way that sets up. Especially when you look at the big vol collapse in the 6-day cycle relative to the 3-day. You can see it here on the MES cycle too, like 567 for Friday and then 590 for Monday. Premium isn't that much different. So buying the 6-day, selling the 3-day, I think is the way I would approach it if you're trading for anything this week. But looking at Friday's implied volatility, you do have a little bit of a bump here on Friday, 44% relative to the low 30s, mid 30s for the next couple of days here. So that could be related to GDP or PCE numbers coming out. A lot of stuff coming out at 7:30 Central. Home sales, 9 a.m. Central.
It is also February expiration. Speaking of expiration, tomorrow morning, the February VIX will expire. So you're trading VIX options for February. Make your decision on those today. You don't really want to ride VIX options into expiration. It's not always fun.
Yeah,
it's not.
But yeah, you can move your positions a little bit further out if you're trying to catch a rally here in the VIX products. But yeah, either way, it'll settle to cash. Just real quick, looking at the FedWatch tool here, 92% chance we do nothing for the March decision. April and June, actually April looks similar, 73% chance we stand pat. June is the first cut that's projected, but it's only a 50% probability. So a coin flip right now that we get a 25 base point cut. We will see what Glenn has to say about that tomorrow. Glenn. But yeah, I think that is it for us. We want to kick it a little early here. Reach the bottom of the YouTube chat. Appreciate y'all. But yeah, click on that link at the top of the YouTube chat, tastytrade.com/referral. Check out the referral bonus. You can get up to 24 of them in a year. So do it. But yeah, that's it for us. We'll post those trades on the Taste Trade follow page shortly here. We are violently long soybeans and corn. Defined risk though. But it is nice when you have that overlap of the contracts that settle to the same underlying contract. So the 66-day and the 38-day, if you're buying the 66, selling the 38, it's going to act like a traditional diagonal spread, which is always nice in terms of taking advantage of the near-term IV, defining risk, et cetera, et cetera. But if you want to reach out to us on Twitter, you can always do that. I'm at Trader Mike EP, Jamal's at Jamal Chandler, and Thomas is at FX Westwater. Stay tuned though, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit of a shorter week. Hope everybody had a really good President's Day yesterday, long weekend, but we're back to grinding in the market. With that being said, we'll get into everything today. Gus, how we doing, brother?
Doing good. As far as short weeks go, I really prefer to have the Monday off instead of the Friday off. It's like it pays itself forward. You know, if you have the Friday off, you get a 4-day week, which is cool. But then as soon as the Friday is over, it's just a normal weekend. But when you have the Monday off, the whole weekend, you're like, oh, I got a short week next week too. It's like
I would say I had the same consensus even in school. I'd rather go to school on a Friday than go to school on a Monday. So I kind of rather save that long weekend, dive into a Tuesday. It's always fire.
Yeah, absolutely. Yeah, and it just pays itself forward. I like to be looking forward to things.
It does. Good.
I'm a happy camper. I saw lots of discussion about Wendy's and Frosties and what you nefarious individuals are doing behind the Wendy's restaurants. Wendy's is sliding big time today. They announced over the weekend that they're closing 300 restaurants, I think was the number. Somebody can correct me if I'm wrong, but several hundred Wendy's restaurants closing down. I think Wendy's could go bankrupt. I think Wendy's could go away, honestly. They're in a really weird spot in the fast food space. I feel like I don't know anybody who's like, oh yeah, Wendy's is my favorite fast food. I could see them falling by the wayside sometime soon, as sad as it makes me to say.
No, I gotta say the fofofo, long live the fofofo. So got the 4 for 4s through the college days, got us through.
Yeah, they don't have them anymore.
No. The baggie, the $5 baggie, whatever they have.
$5 biggie bag.
They're getting creative with the marketing.
It's a worse deal. It doesn't roll off the tongue. You know, a 4 for 4. Yeah, they could have just downsized it and gone 5 for 5. Just throw throw a cookie in there.
You could have. Could have thrown anything in there.
Yeah.
But I mean, I got to say, Wendy's still solid. Shout out to the junior bacon cheeseburgers. We used to get those growing up a lot. Those were a childhood staple.
Just shrinkflate everything. Yeah. Shrinkflate the junior burger. Throw one less nugget in there.
They're already shrinkflated, bro.
Shrinkflate the fries.
You can't shrinkflate them
and
anymore.
Add a cookie, just a little tiny cookie.
Have you
5
seen?
for 5.
Have you actually seen how small their little patties are?
I have. Yeah.
They're big difference. I've also gotten older and I've grown since I was a little bit of a kid. But I also think the patties have gotten smaller as we've enlarged our physical bodies.
Sure. So yes, there's a relativity aspect to it.
Yeah. Sure. What's going on, everybody? Theta Trader Greg, JT, Grumpy Mike, Mitches. Let us know what you're trading and what you're looking at today. I got to say, McDonald's fries is always going to take the reins, though, as we get into the Tasty Trade platform here. What would you say your favorite fry is? Burger King, McDonald's, Wendy's? I mean, all the above. Favorite and then worst. Let's do that, because I got my worst.
Oh, interesting. Well, I mean, I guess my favorite probably just has to still be McDonald's, as basic the answer as that is. I also have a special place in my heart for the Chick-fil-A waffle fries. I'm a big fan of the way that you can kind of scoop the sauce with the fry when you have a waffle fry, a lot more surface area there. Yeah. Worst is a tough question. I mean, Burger King is pretty bad. I haven't had any fast food in a little while. I would have had much stronger convictions about this.
I'll throw mine out there so you get your thoughts on it. I think In-N-Out has some of the worst fries I've ever had in my
terrible.
life.
Yes.
I mean, some of the worst fries.
Agree. And they're so fresh. Like, I understand what they're going for. They're cutting the potatoes right there.
I don't understand what they're going for.
They're not crispy enough is the deal. Just leave them in the fryer a little bit longer. Yeah. Go a long way.
Slept on. Popeyes fries. A little bit slept on, guys. Don't sleep on the Popeyes fries.
Are good, but they got so many other sides.
They have a lot of sides.
It's a lot to consider.
I tried their strawberry biscuit. It actually went crazy.
Oh, interesting.
Yeah.
I haven't given that a go
It was
yet.
like a strawberry, I don't even know how to describe it. It's a sweet cinnamon roll, kind of a strawberry flavor. Needed a little bit of water with that one.
You need a little water with all those biscuits. And yes, Frosties, Wendy's still does well, for sure.
I got to say, I worked at Sonic for like 3 years, first job. And I got to say, Sonic, probably still one of my most favorite fast food places. For lunch every day, I would get the mozzarella sticks. We'd get the discount. And then I think a year in, we were able to get 1 free meal. So shout out to the mozzarella sticks. Shout out to Sonic. Didn't mean to not throw you in the conversation. Got my boots wet with them first. So.
Love it. We can jump over to the Tasty Trade platform here and take a look at Wendy's and compare it to some of the other fast food restaurants. I haven't looked yet. I'm interested to see if McDonald's is catching a sentiment move. Wendy's, bad year, made worse by this restaurant closing news. Not what you want to see. Is McDonald's getting any sort of sentiment bump here? It's also been having a little bit of a rough patch, but doesn't seem to be.
We've got a lot of opinions in chat. I guess you are Culver's deficient. That's one of the funniest comments I think I've read.
You are Culver's deficient. I do like Culver's a lot. I have eaten more Culver's.
My sister loves Culver's.
A lot more prominent up here than it was in Texas.
I'm pretty close to a White Castle.
You're right on top.
I'm not vibing with the White Castle though. First time I seen White Castle, and we'll get into it here in a moment. First time I seen White Castle was on the Undercover Boss show. From like way back in the day. But anyways, went to one for the first times and completely different from what I would have thought it would have been. Not the biggest fan. No judgment. Though.
I'm a big fan of White Castle.
Really? Okay.
Yeah,
what would you usually get there? Maybe you need to put me on.
Just cheeseburger sliders. Yeah, I mean, cheeseburger, onions, pickles, good stuff.
I bet.
Go crazy.
Less.
Yeah, and they're so easy to eat. I can put down on those things. Yes. And they're a little better if you're a little less than sober. I will say that. But
completely valid. So anytime after 11 p.m.
Yeah. Cool. It's nothing good happens after midnight except White Castle. White Castle's still pretty good.
Good slogan.
As is Taco Bell. Yum Brands, really similar trend in McDonald's here. Also kind of sentiment sliding here. I wonder if the market is interpreting this Wendy's news as just broadly bearish for fast food chains in general. But if anything, to me, I think that it just frees up more market share, although I'm not nearly convicted enough to trade on that information. But yes, very, very similar charts between the two here. BK, worst fast food? Carl's Jr. Everybody's got very strong opinions here. Yeah. Shake Shack for the win. I like Five Guys fries. That's a crazy take.
I had Shake Shack yesterday. 2 days ago.
Oh, yeah?
I haven't had Shake Shack since I got food poisoning from Shake Shack here in Chicago 2 years ago. This is the first time I had Shake Shack since.
Very nice.
I feel good.
I had a similar experience with Panda Express when I was very young. It took me a long time to get back around Panda, but I love
it. Slapped when you went
Express.
back, though. Yeah.
What are your thoughts on Hood allowing private markets that was usually retail to investors were excluded and usually only open to accredited investors? Oh, I see what you're saying. Like investing in private markets. I actually hadn't seen that news break about Robinhood, but I like it. I mean, I think anything that gives retail investors more access to more markets
level the playing field.
Is a good thing. Yeah, and there was all sorts of little third-party services that were popping up that would essentially be the accredited investor for you and like syndicate through the public and let you get involved with private companies. But it was a lot harder. I hadn't seen that.
That'd be so sick.
That is cool.
Imagine though, you could start raising funds through social media, and there are ways for these creditors to be, for their files to be looked through in a completely different structure way for the public to get involved. I mean, that would even help other creators.
Yeah.
Like, that's an interesting way.
It is.
Never heard of that angle before.
If Wendy's were to go bankrupt, what would the Wall Street bets guys use for memes? Or would the prophecy then be fulfilled? I don't know. They could. I'm sure the Wall Street bets guys have no shortage of things that they can use for memes. I'm sure that they would pivot into it. And yes, Wendy's does have some of the best social media out there for sure. I am excited today because we have more developments in the ever-evolving thing with Paramount, Skydance, Warner Brothers, and Netflix. Netflix has granted Warner Brothers 7 days to hold discussions with Paramount. So Warner Brothers and Paramount both rallying on this information. Paramount currently trading up about 6%, and Warner Brothers currently trading up about half that at 3.5%, so a little more than half. But yes, both companies responding bullishly to this news. I understand why on both fronts. The Paramount front is obvious. It would be good if they can land this deal. The Warner Brothers front, a little less obvious, but it's simply that the deal with Paramount would be better. I think it's interesting that Netflix has to grant them permission to do that. Netflix essentially trading down about 0.5% on the day, so market isn't interpreting this as super bearish, but also how much more bearish could the market possibly be on Netflix? I mean, look at this thing. So yeah, interesting situation for all parties involved. As a Paramount holder, I am quite pleased. As also a Netflix holder, I am a little less pleased. But whichever way this winds up breaking, it'll go positively for me. And my thesis on Netflix is a bit broader than the Warner Brothers deal, while the Paramount thesis is more centered around that. So I would be much happier to see Paramount land it. But yeah, I didn't realize that Netflix was going to have to grant these permissions, but it seems that the legal jiu-jitsu that Paramount has been pulling this whole time has finally worked. Netflix was forced to just concede, give Warner Brothers the ability to talk with them for a little while, and both companies responding positively to that.
Huh. Well, Netflix still sliding a little bit on the day. See if we get a change of course here.
Yeah, would love to see Netflix catch any momentum at all. It did put some longs on there maybe 2 weeks ago now, but have plenty of time on those, so not super worried. In terms of the broader market, we're trading down just a little tiny bit on the S&P. NASDAQ, same situation. Down a little bit heavier. The rotation out of tech stocks continues to be a defining factor of the market over the last couple of weeks.
Yeah, and vol expanding a little bit, especially over the weekend. Maybe get a little bit more volatility there. But it's kind of nice for us to cool down a little bit on NASDAQ and SPX, you know?
Yes.
A bit of a slowdown.
Yeah, and vol was a little bit elevated this morning, has slid a bit. But we got, some of the, a little bit of local highs on volatility. We had some earlier this month as well. But aside from these two wicks, it's the highest that we've been since November. So, slightly elevated volatility. I am still short VIX, pretty tight on my dates on those positions. Where are we at here?
so interesting with the VIX too, because it's like, although volatility clusters and although we're rising slowly, it's like if we get a rally, an afternoon rally out of nowhere, it could kill VIX, and you have that window to get out of that position. So, anyways, VIX is an interesting product.
I'm not remotely concerned about these positions at this time, even with them being 7 DTE and relatively far out of the money. The VIX collapse just comes through so quick when it comes through. So I just have to hope that sometime in the next week we get a good rally out of this, and VIX will collapse back to 16, 17, and I'll be just fine. That is, I have a short call vertical here that's 7 DTE, and also a naked put that I left a little more runway on just to wait for whenever that hard collapse comes through and those premiums get juiced a little bit.
Yeah.
Still feeling fine about that. Elsewhere in the portfolio, AB, my Pelosi stock, is having a pretty solid day here. We are up, 1% on the day. But we are starting to really see these call side premiums get elevated. The ask has really increased today and pulled the mid price up and is pulling my entire position up with it. So investors clearly feeling a little bit bullish. Options traders, that is clearly feeling a little bit bullish as the asks become elevated. Has slid a little bit, opened up a little closer to 2%, but happy to see that moving in the right direction. Still down on the position though, so
we got time.
If anybody wants to get a better entry than me, you are still able to. Pelosi has 85,000 shares. She's never wrong.
I'll never forget. I think Luis one time helped me get like one of the most perfect entries on Carvana. It was like squeezing him like crazy for like a week, 2 weeks, and then I was like, oh, I'm kind of now interested. I was like, I'll get short. That's how it plays out sometimes.
Sometimes being delayed. I actually did that with Jamal and CoreWeave.
Oh,
he was talking about CoreWeave forever. It was sliding and sliding, and then finally I was like, you know what?
It looks attractive.
Yeah, this seems like a good spot for me to get involved with CoreWeave.
Yeah.
I do still have that on.
It's funny how sometimes the best opportunity will just pop out to us without us looking for it. But sometimes we'll really try and just weave out an opportunity somewhere.
Yeah.
It's like looking at the clouds, like forcing a shape in there.
It is.
And just letting the shape come out to you.
Yeah, 80-85 short put vertical for me in CoreWeave. Starting to slightly test those levels again. I'm not liking this break to the downside. This looked like a pretty bullish consolidation happening here, and we've since given up that setup, but still feeling fine about it. My entry was down here somewhere in this range in late November, as it just seemed like we were getting just a little bit oversold. These stocks that are really trendy, really hyped up, I never want to get involved anywhere in this range because the run could just stop at any time. But there is usually some reason for the hype, and so as they become oversold, I sometimes think that there's good opportunities, and CoreWeave is one of those that I decided to jump on.
Yeah.
What else? Frontier, doing well. Could use it over 6, but liking it. Hopefully they just come out and announce a merger with Spirit. That would really be so great for me.
Yeah.
And then Meta was hurting me earlier today. Deeply long Meta, as you can see here. Laddered up with various expirations here. Got 60 DTE, would need it over 650, needed over 715, 121 DTE, and then I have some serious leaps for December 2027, looking for the 800 level. So feeling good there. And then Starbucks continues to put together some good days. Opened higher today, is lagging a little bit now, but well outside of my range here. What is this? I got 75, 80, so all kinds of room. 80 level is all the way down here. Feeling pretty good about those at this time. One of those ones that I wish I would have dated just a little bit shorter. Still a lot left to go there, but this is a 2x1. So as we get inside 100 DTE and particularly inside 45 DTE and Theta really starts to eat up these two on the short side, I'll be looking good there. Sitting good.
Starbucks finally starting to catch a little bit more of a bit. I've grown. The reason why I like Starbucks is because of the consistency aspect. Once again, I remember a day after we were talking about the inconsistency with Chipotle, I went to Chipotle and I got the worst portions that I've ever gotten in my entire life. Like a day after our conversation, my opinion is absolutely skewed. I'm on the side of the points that you were bringing up over the last couple of weeks, especially when I had an experience on the opposite side of the bell curve. So with that being said, it just reminded me of the comment to here, haven't had McDonald's in about 12 years, don't want to go back. Yeah, 12 years sober, brother. Like, keep it going. 12 years sober for McDonald's.
So sick of hearing about Paramount. Can Warren Buffett please just ask Berkshire to deploy their cash hoard and take everyone else out? Man, that's what Paramount is really trying to do, is just they're deploying. I mean, I think at this point it actually might be an overpay. They just keep hiking this offer higher and higher. They really want to land this thing.
Yeah.
And at some point it has to become a bad deal for them. But that's
not a big deal, a bad deal.
Yes, a bad deal. Or maybe Elon, he'd probably announce a plan to stream shows worldwide by reflecting them off the moon or something. That's true. That's so based.
He would definitely do it.
Yeah, satellite projector into the sky.
Elon's going to literally try and do Elon's going to try and compete with every industry, literally, with X. And I'm interested to see how far he's really going to take it, because he's trying to make it a 50 trick pony.
Yes, and to a degree, Bezos is trying to do the same thing with Amazon. He's right. They keep on expanding out. They're getting into the robo taxis and all these different.
So recently, Elon made a comment, and X made a comment. They wanted to get into where people could start investing, right, on a social media platform, which is wild, right? You need a whole bunch of crazy back end stuff. So it's like hearing about things like that. It's like I've never heard. That's like hearing Amazon trying to do something. It's like sounds so out of the wheelhouse. Everybody said that once, right? Like you just brought up Amazon, you just brought up these other founders too. Sounds crazy until it's done. So we'll see.
And I know one of the original pitches with the X rebrand as well was going to be peer-to-peer money transferring. Like he wanted to start to get into that Cash App, Zelle.
He was involved with
which obviously he founded PayPal,
right? Absolutely.
So he's got plenty of experience in that field, and he wanted to, people don't seem to acknowledge enough that he really wanted to call PayPal X back in the day. Like he's been sitting on this forever. Sure. Just finally got to pull the trigger once he acquired Twitter.
100%. But with that being said, we can go ahead and jump into the Tasty platform here, and we'll do a little overview, and then we'll get into TradingView right after.
You guys only on for 30 today. Yes, Futures Power Hour is back today, so we will be kicking over to them at 12:30.
He still didn't bring Vine back. I don't think we need Vine. I think Vine would die today, unfortunately, just because we have TikTok. I don't think it would catch enough steam. Unless
Vine, it was the novelty of Vine was sort of what helped it. But I mean, when Instagram rolled out videos, I mean, that was sort of the beginning of the end for Vine. And now with a giant video competitor in TikTok that's overtaken Instagram in the short form video space, it's I feel like it would be really hard for Vine to survive.
100%. Lastly, though, on that topic, I'm really curious to see who's going to be able to compete with YouTube. YouTube is one of the competitors that hasn't had another competitor compete with them because they're such a big dog. Once again, said the same thing about Google. We know Google owns YouTube. Said the same thing about Google. We see OpenAI, all these other LLMs come in and compete with Google. But lastly, on the topic of socials, just really curious who's going to be able to compete with the long form video format application like YouTube.
Well, yeah, I mean, YouTube has almost ascended to a level where it's like their competitors are streaming services. It's like Netflix is YouTube's competitor.
Absolutely.
That's how I'm substituting those things in my life. Is I watch a lot of YouTube, so I don't watch as many TV shows, and I feel like I'm not the only one in that boat. But yeah, it would be very hard for anybody to come in and take some market share in long form user created video content from YouTube at this point. It's so dominant.
Be interesting. Elon should launch himself into Mars. That would be awesome. Yeah, no, I'd watch that for sure. But no, with that being said, we didn't even take too many trades today. We took one little scalp. We'll get into the TradingView platform here in a minute, but we actually swung these futures contracts last night. All right, not something I'll typically even do, but we swung these ones to the downside, and I was very uncomfortable doing it. If I'm keeping it a buck, I don't really like swinging futures contracts overnight. But we were a little bit more convicted to the downside, so I'm happy that played out. But for the most part, don't like holding the futures overnight just because the risk is a lot higher. And especially if you don't have a clear defined stop on overnight, you just don't know the overnight risk that you might get. So with that being said, we did a little bit in the micro NASDAQ, so we're happy about that. We use that as a cushion as we get into the week. And then we had some short delta on over here in gold. We had sold an out of the money call spread, so we had some short delta on in there. Gold is down 14.5 points today. So it's not to say that this is for sure a dead cat bounce yet, because we could still be consolidating. Over the last 10 days over here in gold, we've just been trading within this range. After we had the first crack of momentum, we put in a low at around 421, 422 on GLD. And then we had a little bit of a dead cat bounce, right? Dead cat bounce. It's only a dead cat bounce in hindsight, but so far it's playing out into be a dead cat bounce. So we'll see how it plays out. But the dead cat bounce high up into about 468, and then now we're pulling back at about 20 points. So, we'll take the little pullback, not touching silver at all, but almost wish we had bought some puts on SLV again. But I'll take the call spread. Beggars can't be choosers. I'll take it.
Yeah, I was pleased to just catch the full extent of that down move, and I did have undefined risk, so I'm totally content not getting back into the metals. I feel like I took a big swing, and I finally took a few big swings and finally got the home run there. So not super inclined to get back involved with that. Theta, to answer your question, IBIT, how would you get long here with a longer term investment? Shares, long call, January 2028, leap, other? I like the leaps myself. And in fact, I am long those January 2028 leaps that you mentioned specifically, January 21st expiration on that cycle. I also have Jan 15, 27, June 17, 27, December 17, 27, and then January of 2028. But yeah, I think leaps are the best way to do it. Obviously, relative to your conviction, but if you believe strongly strongly that Bitcoin is going to recover, and I can see that you're saying you're replacing actual crypto in the taxable brokerage account. I think leaps are probably the best way to attack it. The call side is just beaten down so much right now. There's good gamma on these. You know that if Bitcoin recovers, it's probably going to recover parabolically, and having those leaps and just letting those call side premiums get juiced would offer big returns for you. So yeah. However, if you're in the specific context of replacing the Bitcoin, that's obviously not an option with an expiration. That's something that you were holding for the long term. So shares could certainly be a viable option as well. It obviously moves proportionate to Bitcoin. So if your original conviction was in holding Bitcoin, then perhaps shares are the way to go. But I personally have chosen to attack it with the January 2028 leaps.
For 70 longs.
By the way, Gus, always make sure you log off that computer. Gus was on YouTube on Friday. Well, I was certainly logged off between Thursday and Friday. Somebody would have signed in. So these computers just have the full. I'm just logged in. It's like a Chrome user on here. So at any point, anybody could theoretically walk in here and just log into my Chrome if they so chose. But,
no, that's funny. I thought you were in chat on Friday.
Oh yeah.
Dan put something in the chat. He didn't know it was saying Gus. He was like Gus, and I was like, God, I thought he was on the plane or something.
yeah. Production must have just must have just signed into my Chrome user on this on Friday, but not my fault. I do my logging out. I'm good about it.
No, with that being said, other than that, we have the QQQ position on. We sold an out of the money call spread. I can't talk today. It's the beginning of the week. Give me a break. But I sold an out of the money call spread on QQQ. Got a little bit more short delta on in there. And then we have SMH too. We got a little bit of exposure to the semiconductor assets. So we'll see how these ones play out. 31 days left till expiration on all the contracts that we have here. So gold, most likely going to hold that one for sure to 21 days at least to see what happens. QQQ, probably going to be in the same boat. And I think the semiconductors, ETF, SMH, probably put a little bit more thought into. Not my favorite position. Don't mind taking that one off and deploying the capital elsewhere. So with that being said, we can go ahead and jump over to the TradingView platform, and we'll do a quick analysis on kind of what NASDAQ is looking for the day. But this was a swing short from yesterday. As you can see, we were a little bit indecisive at this value area low. We then shorted a couple contracts. Really, what we were just looking for is we started to see the weakness, right, from this value area over here. We were just looking to target the other level of value, right? So when we woke up, after we woke up into weakness, we covered our position down here. And then over here in the morning, we were looking to see if we could get a continuation to the downside, but with how far the market had already, number one, gapped down, and then number two, broke out to the upside in the morning and then continued to sell off, I was not shy about cutting that position fairly quickly just because it feels like you're kind of getting short into the hole after a massive gap down and then after a sell-off in the morning, taking out those pre-market lows. So not something I was too comfortable sitting in too long, but the opportunity was there. Again, overnight is a tough trade to hold through, but it's always nice when it works out. Market has been a little bit choppy, especially into today. As you can see here, whenever price is kind of sloppy around one of our value areas, that's when you can kind of just know to not be very impulsive and even maybe wait for a little bit more clarity. That's kind of how my mindset has been today. Whenever I see the market just shooting inside a level of value, break back out outside of the level of value, right? Trade back inside a level of value, trade back outside a level of value. This type of price action isn't something we really want, right? When it's really hard to decipher if we're trading in value or out of value, we can't tell if price is shifting from balance to imbalance. And if we can't get that read, you're not going to be able to have any confidence in your conviction. So that was kind of the boat that we were in today. If price can get up here to this value area high, it'll be a little bit cleaner just because price hasn't even traded up there yet. So that'll be extra information or data to perceive if price can even get there. But until then, we're just going to sit on our hands. It'll be interesting if price can come back down here. We'll see. We'll see how price responds. It's just a lot of uncertainty right now. Price was very choppy. So just sitting on the sideline till then. But that's what we got for the day, brother Gus.
Yeah, absolutely. I don't know what just happened, Jared, to answer your question, but yes, we've flipped through to green on SPX. VIX has collapsed a little bit. That position has suddenly flipped green in my account. Not all too sure. Yeah, if anybody's got their ear to the ground on the news, feel free to share in chat.
Yeah, about 3 minutes ago, you might be able to take off that VIX position soon. About 3 minutes ago, we spiked about. Oh, another thing, volatility is up, right? The market gapped down overnight. One thing that I noticed right away is though your risk has absolutely expanded. So if you're using the same position size, Just keep in mind that if the market starts to whipsaw, you could be down an extra 40, 50, 100 points, 150 points without even realizing because volatility shifted over the weekend a little bit. And this is a perfect, example of that. I mean, just 3 minutes ago, right? We're on the 1 minute chart. Or about 5 minutes ago, we're trading at what? 24,665 to a high of 24,779. The market popped on a little pop like this. That's over 100 points. You know what I mean? So it's like even on one contract, that can do some damage. So if we're using a mini, not even a micro, it can definitely force us to manage our risk. But it's nice to take note of that as we get into the week so that we don't become frustrated on something we didn't recognize and then ruin the rest of our week. Does Walmart report this week? Let's double check. Let's see what Walmart's up
tomorrow.
to. Do they report tomorrow?
Thursday. I'm not sure if it's before open or after close, but they report
gotcha.
tomorrow is the answer.
Gotcha. Before the bell, February 19th.
Friday before open, we're being told. I thought it was tomorrow.
I got you. What's today?
Sorry.
What's the date?
Thursday is what I meant, is what I was trying to say. I'm all confused on my days with this short week here.
What is today? Today's the what?
Today's the 17th? Yeah.
Today is the 17th, yeah. So Thursday before the bell, we'll see what happens.
No, we're about at our time here.
Yeah, we are coming to a close.
So Bob Rinder, that reminds me of I saw an AI company called Rinder had a $1.5 billion funding round this morning.
Rinder. Reminds me of that company.
$1 billion funding round at a $1.5 billion valuation. They have like 8 employees.
It reminds me of that company Skender.
Yeah.
Below.
Yeah.
I thought that's what you were
I don't think they're remotely in the same industry, but yes, does sound very similar.
Tomato. No. With that being said, anything else top of mind before we wrap for the day?
Yeah, no, nothing else top of mind. Hope this vol crush continues for the sake of my positions. I'm curious to see what's causing this little pop that we're getting once we get out here.
Yeah, we'll see what we get. We'll see how these prices respond. We'll see if we make any higher highs for the day. We got a few hours left to market open. That's going to do it for today's segment. Thanks for taking the time to hang out with us. Bob, Steve, Jared, eMedia, Grumpy Mike, everybody, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Tuesday, February 17th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, good to see you again.
Good to see you, my friend. Markets seem to be punching up just a little bit here for us as the show is beginning. This is a nice development.
We're trying to get off the lows here today. We start the week with a little bit of volatility. Jamal, you and I spoke about that this morning on Let Me Explain. We're going to talk a little bit more about that vol, which for a third day in a row, VIX is trying to jump through 22. It can't stay up there. Maybe that's a good sign, Jamal, that we've reached our tolerance for the amount of uncertainty that's being priced into this market. Some problems or opportunities with the shape of the volatility curve, perhaps. My focus, though, is if we're shifting into this higher vol regime, what does that mean for broader markets? Is the dispersion trade back? The second half of February tends to be unkind, Jamal. But this morning you were saying that you were a little bit of a dip buyer here. How goes that expedition into those murky waters here on Tuesday?
Well, like I said, I have been a dip buyer at these levels. I haven't specifically been today, but I have been in general. And I mentioned, like, I've already gotten long at this area. You talk about ES 6,800. This has been the area where this has been the lows. And obviously the top side has been 7,000, where we keep getting rejected. So, you know, it's been tough, right? But this is kind of the area that we've ebbed and flowed in for the last 3 months. And it's funny how fast 3 months can creep up on you, but that's exactly how long it's been.
It's been 3 months. You're a dip buyer here, and I'm having a little bit of trouble swallowing that pill here today for a seasonality reason, which sometimes it bites you in the butt, sometimes it doesn't. Last August, I went into the month with a little bit more of a cautious stance, and I had to abandon that 2 weeks in because we kept grinding higher. And good thing that I did. Maybe I'll make that same mistake here in February, Jamal, where I don't buy the dip initially because of seasonality, and I'll find myself putting on new S&P longs closer to 7K than 68, which, you know, that's not ideal. But here's what's kind of grinding my gears right now. It's the seasonality for the second half of the month. We did talk about this briefly on the show, but I figured a visual representation here on Futures Power Hour would be better than us simply discussing it like we did on Let Me Explain. EquityClock.com. I like to use free resources for retail traders when available, because if I can show it out here on the screen, they should be able to recreate it at home. Equity.clock.com seasonality SPX past 20 years. You're looking at a back half of February that effectively erases whatever gains the market has produced year to date at that point in time. And that slide continues into the first week or so of March before then you get your, spring rally into your summer melt up into your, then maybe a little bit of fall digestion before the market tends to bang on up into the winter months. Jamal, I know that the market ignores seasonality on any given month. It's an average. It's really what actually occurs. Do you feel like we're in this wall of worry window, though, where this could become something that's self-actualizing, where there are just enough fears on the table that prevents the market from cracking through 7K NES here for a few more weeks?
Well, that's one of the things I was going to say is what happens when there are no gains to this point in the year? What happens in those years, right? I mean, that's the difference. And again, like you said, it's an average of seasonality. You mentioned the wall of worry. I think it's so crazy. This is one of the few times, Chris, where I don't really understand the wall of worry. There's all these different fears surrounding AI, whether it's the amount of spending or the amount of jobs it's going to take out of different sectors. That's probably been the biggest thing. Along with every now and again, a geopolitical situation. Again, we just heard about some news out of Iran as far as, the U.S. and the nuclear deal that they're going to have. So that's another, storyline that seemingly has been erased for the time being, right? But it's like these little stories that have been stacked on one another, which we always end up calling the wall of worry. There's not as many. And so I guess truth be told, like we're really not down as much. We're kind of flat year to date. It feels, though, like things are a lot heavier than they are when you look at the software names. You look at the fact that all the Mag 7 names are not positive year to date. So it feels like we're in more of a troubled area, but realistically, we're not. And is it really the worst thing in the world that we've been in a 200 handle range in the S&P 500 for the last 3 months? Not really, right? But it just feels ugly on some of these days when we do get rejected at 7,000, the way that we fall, the way the volatility jumps up, all these different things that happen. It's really not that bad. Outside, again, when we will get to later, seeing the way that the bonds have moved, I think that's probably the more scary thing, which I said earlier this morning. I continue to notice again, but other than that, things aren't really that bad when we look at it.
Yeah, that was the first thing that jumped out to me over the past few days, looking at the charts. Gold and silver staying sluggish. Stocks not exactly breaking out given the backdrop of the news flow. Not surprising. Bonds, CB going from 114 to 118 in the span of a week. I don't think that was on many people's bingo cards. You and I had a trade on from 2 weeks back that actually looks a little bit better now, thanks to this recent move in bonds. We'll talk about that in a little bit. But before we get there, we do need to go over to the equity market, which is seeing vol stick around. I do want to start there, although we do see an S&P 500 that has since turned positive on the day. The VIX started this morning trading right around 22, just a shade under it. It did jump to a new high relative to where we were last week, up to 22.96 today. We're currently back to 20.24. So more than 2.5 points off the high here, Jamal, is not nothing. And I suppose from the open, we're down nearly $1, a full point, 96 cents. And that is a good development here as the session goes on. Volatility futures themselves here likewise moving below the open that we had on Friday, if only to show whatever concerns that were percolating this morning may be subsiding. What concerns could those be? Well, there are some headlines out about Iran in the U.S. where today's meeting has yielded the promise of another meeting. Oil prices are down a little bit here, and bonds have given up some of their gains. We look at the long end of the curve shortly, and you're going to find that safe haven bid is somewhat diminished. So, Jamal, that's the first time since I've turned back on my platform after the other side of the weekend that I've seen 4 green percentile changes here for ESNQ, YM, and RTY.
You're right. Did we just get some news in the last couple minutes?
We'll have to check that out. And Josh, if you see anything on the screen, please let us know. But as the intrepid dip buyer today, what more do you need to see perhaps to keep this party going? Is this a market that feels like it's producing a stable turnaround from your vantage point, given the fact that, well, you're leaning long deltas already?
Well, I mean, I do want to see bonds retreat, but besides that, this is probably the first time in the last couple of days as we're sitting here that I'm seeing the G contract in VIX futures that's trading under the H contract. So that little tiny bit of backwardation is gone now. And again, notably, that H contract has been trading under the G, but it's over once again. So that's kind of interesting. It's the first time we've seen this. Something definitely must have just came out. I mean, it's weird. Like, or did they just all of a sudden decide that markets are down too much and decide to give them a lift? I don't know. But seeing volatility retreat some is definitely the biggest thing, I would say.
Yeah, you just looking at the spread here between the G and the H contracts, the pairs capability on the platform, you could see in recent sessions how that did turn positive. And now we're seeing the spread go back to negative, and that's ultimately a good sign. We want to see a market that's giving us a little bit more of a contango. So backwardation leaving the volatility futures curve would be welcomed, of course. That would be something that the market could maybe hang its hat on. Is this an inverse head and shoulders pattern down here? That's one of the points of chatter that I've seen on socials and in the chat today. Is the market trying to carve out a bottom? Because you can make an argument left shoulder head, right shoulder here. There's probably more work to be done to get me in that camp, although maybe not much more work. We have our 1 week moving average, the 5 EMA, sitting up at 68.87 right now. And if you're able to punch through there today, you start to look at a market where we've cleared out the left shoulder, ostensibly swing lows, so to speak. We've started to reestablish ourselves back through an area where the market pivoted at the end of January. And it's still an ugly looking chart, but it begins to feel a little bit better. There was the idea, Jamal, that we pointed out earlier today on Let Me Explain about a potential directionally neutral opportunity here in the S&P 500. That's hard to believe almost 70 points ago right now, over 1%. But the vol is contracting. I think that's the main point here. The IVR this morning was near 33. It's now back to 27. So the range holds. We'll see what the day yields on the other side. But 15, 20 more points, you get a very different sense of how this market feels coming out of the other side of the holiday weekend.
Yeah, I mean, this is a positive development. And again, we still got, we're only, we still got some hours to go here in the market. But this is a positive development. Once again, though, just a pretty sizable range today, 94 points, which is in the ES, which is what, percent, almost close to 1.5%, not quite, but it's we've seen some ranges more recently, and that lets you know volatility's been hanging in there. Again, I think we have to see these futures stay the way they are. It is interesting that we are coming up on a VIX futures expiration. We often talk about those. I said this morning, I would like to see a research piece, I think at some point, taking a look at any movement that we get before, after a VIX futures expire. Again, we got one expiring tomorrow morning with the G contract, and H is going to be the new front month. So that's something to keep an eye out for. But I mean, this has been the area, Chris, 6,800. It gets scary. It gets nerve wracking. The market eventually, for some reason or another, bounces. Whatever fears that we were talking about, whether it's related to AI or whatever, is eradicated. Somehow we get close to 7,000. We start inching there. It feels like we're going to eclipse it. And then we get rejected violently at 7,000. That's been basically the better part of the last few months.
Thinking about that VIXpiration, because if VIXpiration occurs right on the other side of meaningful event risk, like after a big round of tech earnings, plus we'll call it CPI and NFP, which maybe you could argue we just went through. Once the elevated hedging demand clears the books, you could make a case that volatility supply returns to the market. People aren't bidding it up as much. They're not holding on to it. And so perhaps you could see a little bit of relaxation at the end of the week. On the other hand, if you're going into a VIXpiration cycle where vol is seemingly elevated just because it's up, and there's no real singular catalyst that you can point to, then you're probably not going to get an unclench on the other side of it. And that, to me, last week, I was on with Liz and Jenny, hopping on Friday morning with them for the morning show, Jamal. And I was looking around saying, what's driving this tick higher in vol? Is it Iran? Can't just be Iran. This has been in the headlines for weeks. We've known that something potential is happening for weeks. Why today of all days? Mm-hmm. It feels like the market is just getting a little bit more unstable, a little bit more fragile. Maybe dispersion's back. I know we talked about that today earlier as well, but if dispersion is back, you really don't want to just be directionally, beta directional. You want to take risk-defined bets. And so if I'm looking long here, am I doing the thing where I'm buying the out-of-the-money calls in the S&P 500 to establish a position on the long delta side? The answer is no. I'm probably doing something that's more like a short put spread here. But I'm not going to take blind swings because this is not the environment with which S&P 500, just being long the S&P 500, tends to outperform other directionally neutral or vol selling strategies. You did touch on something, though, that we haven't really looked at here. I'm curious what your take is on the software stocks. We have not talked about this in maybe you and I ever. I know we've talked about this in other venues, you independently of me here on network. But software is getting clobbered again today. And there was some hope, it feels like last week or the week before, that maybe things were stabilizing. Is this just more AI eating the world? Is that what's happened over the past month?
That's been the story, right? And, I've dipped my toe into two names, CRM and Snow, trying to get long those. But look, none of these charts look good. In Microsoft as well, none of these charts look good. It seems like a little bit of overblown fears. We've seen stuff like this in the past. And there's multiple ways it can end. These stocks end up much lower. They take a bigger haircut. Or this is just a little bit foolish and they eventually bounce. Obviously, I'm betting on the latter because these are some massive names. CRM, you could argue, has been struggling for some time, but Microsoft has been one where it's really been since October that it started to struggle. You can add a lot more names to the list. Obviously, you got an ETF there, but Intuit, when you look at some of these individual names, it's been a decimation for sure. And so I think you got to really be careful and pick and choose. I don't know. This one seems a little bit overdone to me, honestly. But when you see names take such a large haircut, big names too, massive names, market cap wise, take such a large haircut in a short period of time, it can feel like it's overdone. That said, I don't think you want to go out and get long every one of these names because this is kind of what's going to happen when you talk about AI. When you talk about anything revolutionary, there's going to be some winners and some losers, and there's going to be some people who haven't really caught up, who are not keeping up, and they're going to get left behind. And I think that's exactly what we're seeing here in this situation.
Not even like Intuit's earnings have deteriorated. Just a point of reference, we'll go to first quarter of last year. Their EPS was 1084, share price was 601, PE ratio was 55.5. Most recent data that we have, EPS is $14.74. Share prices are $3.79. So EPS is up 40% during this time span where the share prices have been cut in half. The PE ratio is now 25.78. The brief bit of time that we did talk about this 2 weeks ago, Jamal, I know a lot of people are bottom fishing in the software names, like an IGV, for example, that software sector ETF, because, hey, by historical measures, these prices, these stocks look cheap. Mm-hmm. Wouldn't you argue that in, say, 1910, railroads looked cheap by historical standards for PE ratios? What if we just passed through peak software, which I think we could argue that we were just through peak software as an industry? Do we apply peak era valuation metrics to this new world order? And so what if these are not 50 PE ratio stocks anymore because they can't get that kind of growth? What if they're only 15 or 20 PE ratio stocks? I'm not bottom picking here myself, but it just, you look at IGV, you look at Cloud, which is the cloud computing ETF, not a ton of trading volume here, but more of something to look at rather than trade. Still holding to the lows. The NASDAQ is really the one that's struggling, and it's the MAG 7 stocks. I know we're up today, technically. This is not a pretty looking chart either, by any stretch of the imagination. That looks like multi-months of recent range consolidation have just broken to the downside. So this is very much pick and choose your adventure. If you're a bull, it still feels like the Russell and the domestic economy stocks, your transports are the ones that are feeling a little bit like they're on more stable footing. Everything else kind of feels like you're catching a falling knife at the present juncture.
It's true.
At least among the big names, which transports here, that looks pretty dang good, having just broken out.
Well, this one got hit a little bit last week, right, with that big move in CHRW, right? And so there's obviously some other areas where we've seen this whole AI eating everybody's lunch situation take place. A little bit in commercial real estate last week. Realistically, it's hard to really come up with the exact strategy you want to do. You could bottom fish, risk defined in some of these software names. You could also play to the downside, risk defined as well, just in case some of this continues. One of the, pick and choose your names is however you want to do it. You could also look to get long some of those consumer staples names that have been benefiting as a result of this tech slowdown on some of these names, right? You look at XLP, we've seen that chart, craziness. Walmart and Costco have been really strong more recently. And so I think those are areas as well. I think, that's why we've been churning in this area when you talk about ES between 6,800 and 7,000, because exactly that dispersion that we just talked about between tech and software to the downside or just kind of flat. We look at the Mag 7s versus what's going on in some of these consumer staples names that have been really strong more recently.
Yeah, staples have been on a really good trend over the past years, really throughout 2026. So far in February, a little bit of sideways chop, but certainly outperforming many of their counterparts, quantum computing, AI, software, fintech, right? Those really have had a bad month to date so far. Telecom, we talk about little strokes of potential green shoots in the market and dispersion and a lot of domestic economy focused stocks doing a little bit better here. I don't know, Jamal, find me a time in history where Dow Transports and Telecom separately are both within a stone's throw of all-time highs, if not already sitting there, and it's been a bear market.
Yeah.
So that's why this whole focus on the dispersion trade today, to me, with the volatility readings up in the 20s and the way the indexes are churning, you can even see the dispersion here. IVR, 35 for the NASDAQ, 23 for the Dow. This is still the AI is eating everything story, and it's just touching different sectors and spreading to different areas of the market. I think you and I could both say that we'd hope it wouldn't come into maybe the brokerage space for people who produce content
for sure
for a few more years. But right now, this isn't just the tenets of a market that would ostensibly be bullish for small caps and mid caps. They are still persisting. So long deltas in the Russell might still work. That's where I'm leaning right now. I see a triangle here, Jamal, at the other side of an uptrend. We know what to do when we have triangles at uptrends. We look for bullish breakouts.
Nice. You're jumping
I'm
into
looking
those,
for a bullish resolution. Well, look about that beautiful support there. Last few sessions, bouncing off the blue line again, like at the start of 2026, our 50-day moving average, holding right above our 1 month, 1 week, which both have positive slopes in a triangle. I think that we could take a little bit of if we're going to be bulls, I think this is the place to be the bull. Don't bottom fish. Run with the winner.
Yeah, no, and that's your play. That's the way you make your bread, right? You usually look at those like those are on the way up. Those are the ones that you're going to go with that trend. I mean, I totally understand it. I wonder how long this outperformance is going to happen though with these, not specifically these guys, but like the consumer staple stuff. I mean, are we supposed to be on an individual basis, names? Are we supposed to be chasing the Walmarts and the Costcos? I've wondered about that today. Because like you said, with a lot of the tech names, it's been tough sledding for sure. And tech has just run out of steam for the time being. Of course, this is the great year that I decided to do my year-long trade in MNQ. But again, that's just volatility for the most part. I don't think the world is ending because of the way, like I said, that we've seen this dispersion. Sure, it may mean that NASDAQ is weak for a while to some degree, and it probably could use that. It could use some sideways trade. That's really what I'm playing for when I have that year-long trade. But to see the consumer staples, I can see them be strong. I think it's about time that they do get some love because they have been really weak for a while.
I'm just thinking, look through some of these, SAS names out there, like a Monday or an Asana, or my personal bane because I loathe Jira, Atlassian, which is.
I remember Jira. Let's not go there.
Let's not go there. Atlassian down 45% year to date. I mean, so it's just, if AI can touch it, it's getting hit hard. Cloud computing horizontal SAS is down 29%. year to date as a subsector. The only thing outperforming it worse to the downside is CRM, customer relationship management and marketing software, like your Adobes, like your Salesforce, Intuits, Oracles, SAPs, Twilios of the world. Turnaround today, though. Nice little bit of a turnaround here. Are we out of the woods yet for the NASDAQ? I mean, hard to say anything good about the NASDAQ technical setup here, given how it looks compared to the others. The uptrend from the November and January swing lows, we have not been able to crack on through that in recent rallies. And that's unfortunate because it also is where the 50-day moving average sits. And that's where the 1-month moving average sits. So I don't know. I feel like we need to get through 25,500
for sure.
If bulls really want to feel comfortable, like we're back in the narrative driver's seat on the NQ side of the equation. It's just a more difficult reach right now, given the thematic influences that we're seeing in some of the subsectors of tech.
Yeah, for sure. We got to get through that level and we got to remain above there, right? And that's been the thing. We've been getting rejected at those areas, whether it's that and NASDAQ or whether it's 7K and the S&P. So until we do that meaningfully, I mean, and I don't know what it's going to take to get it to stay above, but until we do that meaningfully, I think you still got to be a little bit cautious.
I have my long deltas in RTY. I'm still sitting long ES through MES. That position's getting chopped up. It feels like Nick Batista's put a curse on me. He mentions 68.50 in any conversation we have multiple times a day. We can't get away from 68.50. If it was in the ESZ5 or now ESH6. Don't mess with Nick Batista. He'll put a pox in your house, Jamal. You mentioned the bonds here today. This is probably the most concerning part of the market right now. Forget equities trading lower. Bonds are a safe haven asset. Why on earth have they gone vertical here over the past 2 weeks, Jamal? Surely I missed something monumental.
I don't know, dude. I really am not sure. And you know what? I've told you before, I'm tired of trying to figure out the moves in bonds. What I am going to do is when I see something that is out of the ordinary, I am going to try to play the other side. And this is what we've been waiting on. Remember, going back a couple of months, I don't know if I don't remember if you feel the exact same way, but I know I swore off of trading bonds. I couldn't figure it out, right? I just couldn't not figure out what was going to happen, whether or not they're going to raise rates or not. And even if they do and say they're not, what the moves were doing in bonds didn't make sense unless it was an iron condor. That was about the only thing that made sense to do. In the absence of volatility, what do you do, right? Well, finally, now that we've had this big move, and I didn't have the call spread that you had on, I think. I didn't have anything else on in bonds. I saw this move and I was like, I'm getting long a put spread now. I'm trying to play for the adverse move because we've seen that happen throughout the year. That's the one thing I'm going to try and do. And if I'm wrong, well, it's going to make for one hell of a story because if bonds keep going to 119, 120, they're either doing rate cuts or something's gone really wrong, right? So either way, it's going to make for a heck of a story. But I feel like this is an interesting area, especially getting up to 118 in ZB. I feel like this is a fascinating area. So I put on a put spread last week. I originally had like the 117, 115, and then we kept going. Now I have the 118, 116. I think I rolled it late last week. I'm in March, 38 days. Let's go, man. Let's see if this thing can fall back down.
What could produce such a move in bonds in such quick order? Rare is the occasion we see yields move like this unless something dramatic's happening.
Tell me.
Maybe it's a general deceleration in U.S. economic data. The labor market data hasn't been great. I know we had non-farm payrolls recently, but we are back in the throes of another government shutdown, which is fun. New York Fed nowcast after jumping meaningfully from mid-December, which had 4Q growth at 1.7% to a high of 2.74% over the span of about 5 weeks. It's since leveled off at 2.71. That does not seem like a big deal. 2.7% growth is good. Atlanta Fed GDP now, which was up at 5.4%, has since slunk back to 3.7%. And so that slump here, Jamal, we're going to get an update tomorrow. It just directionally, the data getting less positive. The data is not as good as we hoped it was. Recession concerns rising. I don't know if that's where we're at yet, although weaker stocks, stronger dollar, stronger bonds over the past 2 weeks would certainly comport with that view. Maybe that's where the market's skating to. all I know is that the intrepid traders that you and I are here on Futures Power Hour, many moons ago, we decided to take a look at a 118, 120 call spread when bonds were looking like they were peeking their head back above 116 here in the middle of January. And for the better part of the last month and a half, month, we'll call it, that trade wasn't working out. And now it is. So with 3 days left to expiration, Jamal, we could flip this for a cool $15.63. It's been a really, really good use of that portfolio margin here.
I remember you doing this
power.
trade now that you bring it. I remember when you put it on and I'm like, you go right ahead. You're crazy, man. Like, I can't figure out bond moves. But you were right. You're just early.
$15.
Look, the smart ones are usually just early. That's what it is. That's usually how it happens.
Yeah, and the smart ones also make money on those trades.
Not always.
Not enough to cover a sandwich at the local bakery. But okay, so what's the worst thing that happens here? I mean, this thing, bonds could pull back dramatically, right? Do I really want to risk saying modest?
Well, wait, why are you going to take it off when you
right
got FOMC meeting minutes tomorrow?
There is that. Fed's been pretty supportive.
Well, you got to lose
the
here.
economy. That's kind of where I'm at. This thing can't really hurt me. So there's no reason to take it off. If it bounces another point, it becomes something that maybe turns from a $15 winner, $150 winner, maybe a little bit more.
I mean, at this point, you got a better chance of that thing going to 120 and me having egg all over my face for this long put spread. Honestly, I don't know if we're out of this yet. I mean, we're bouncing here in the middle of this day that still has a VIX expiration on the other side of it and a equity option expiration 3 days from now. So, that's a lottery ticket you're holding right there.
Two of them, in fact, because the reverse iron fly, which has been the fly in my drink for the past several months, going back to mid-December, it finally started to move away from 112. And now there's 3 DTE left on that as well. It's a little bit long in the cycle. It's not a vol selling play. So when it's not a vol selling play, Jamal, I tend to shift away from the 45 and 21 day out cycle. Otherwise, if it's a typical tasty trade, I stick to the methodology that our research shows is the way to optimally approach the market. So another bounce up, 113 and a half, 114. All of a sudden, that reverse iron fly worked out just like a charm. Whether or not I can unload the position, there doesn't seem to be a lot of liquidity in the strikes in which I'm operating. So we will cross that bridge when we get there. Treasury auctions this week. Today, nothing. Tomorrow, 20-year bonds. Thursday, 30-year tips. So tomorrow obviously carries a level of interest for us here. What's the demand for treasuries, which held up throughout January, even when yields were pushing 4.4%, right, in the 10-year? What's the interest from abroad now that we're sitting closer to 4% of the 10-year, right? That should be the metric by which we operate. If demand evaporates, yields probably can't keep falling. Time for the fun part of the show, which actually I take that back. Producers, cut that line. The whole show's fun. We're talking about metals now. We're going over to the place where a little frustrating today. We're back to 49.20, which off the lows here in gold. Gold off 2.5%. Session earlier, we found ourselves at 48.54. We're hugging that 1 month moving average, which is at 49.19. So we are there right now. Sideways consolidation. We are trading at the same levels we were at on February 3rd, at the same levels we were at on January 22nd. So Jamal, we've posted a fairly sizable gain thus far year to date. Consolidation seems to be the name of the game, as it were. Some silver linings over the past week. Gold vol has started to inch up. So the contraction in vol that we had seen that defined the market late January onwards, and vol contraction windows like we saw in October typically coincide with pullbacks in price, or at least sideways chop in price. That is playing out here. It's not like the market is giving everything up. Being bullish probably means selling put spreads on dips rather than looking to buy calls, because in environments like this that we've seen in the past, being bullish with out of the money call exposure has just been a way to give away money. Mm-hmm. We learned that lesson last summer. I think it was you and Nick and Ilya were expressing some sort of bullish exposure through selling puts, whereas I was doing it through buying calls. And you guys made money, and I lost money, even though we were both ostensibly long deltas. So structure here matters more. If vol is rising back, that is something we want to see before a rally resumes again. Gold isn't over, but it's hibernating, we'll call it here, as we make our way through the middle of winter.
Well, I mean, truthfully, the hard part about it is, like, if you really wanted to buy calls in gold, it's almost like it'd be hard to do in regular GC. They're really expensive. But you basically have to buy at the money, little in the money, right? To not really deal with the vol upside possibly coming in, which is going to happen in this kid situation. It's not what we usually see, obviously, with gold, but in this situation, it is well above and beyond the normal volatility situation in gold. So vol is going to come in some. It's probably easier to, like you said, sell downside in some situations. I don't necessarily know if I'd feel that comfortable selling downside right now. I think, more than anything, luckily I don't have to think about it. The one thing I do just really focus on is our position that we have, the gold, the call spread that we have out in April, 5,000, 5,100, still have that on, plenty of time. There's a lot going on. Obviously, there's a lot of volatility, a lot of movement over the last several weeks, holding on to a position like that. But I tend to believe that it's not going to be as violent as it was to the upside earlier, but there's still some upside left in gold and silver to some degree.
Yeah, I mean, we could take the position off right now, the 5,000, 5,100 call spread for nearly a $2,000 gain. There's no reason to do so.
No.
It's got plenty of time. There is, of course, for others here, we did have a 4,600, 4,625 call spread. That could be flipped right now for $1,400, excuse me. Not as much as it was previously when gold was trading at $5,600 an ounce. But patience has been our friend here in gold and silver for the past 2+ years, so we continue to exhibit it. These trades continue to work, and we're going to roll those profits into the next leg of the gold trade here, Jamal. There's no reason not to. If volatility is 50 IVR, heck of a lot cheaper than it was a few weeks ago to get some out of the money exposure, as far as I'm concerned. That may work in gold. It's not working in silver, though, which really just still a very ugly looking chart. Nursing a loss here, of course, from a position put on at the end of January. Haven't been tempted by the chart enough to put something new on the long side, though, because we just haven't cracked through any sort of key levels that would suggest we're back in the uptrend or we've broken the downside impulse. I'm looking for that sign, that signal, maybe a bump in vol, maybe a downtrend in vol that breaks. I'm not getting it yet. I guess we could say if there was a level for the market to maybe try to find some stability around, it would be around 74. It was a pivot point here in January before the market launched and lifted off from a low of 73.53, and that run culminated to move up to 121.79. I'm not saying that's going to happen here again, but if there were a place for the market to kind of find some support, it feels like we have a few dollars here to work with. Lows at the end of December, swing low in the middle of January. That gives you $69.50 to $73.50. $4 range of support in silver these days, given how whippy and violent this market's been, I don't think is egregious to suggest. Whereas maybe a year ago, you'd have looked at me with like, what are you, nuts? A $4 support zone? That's crazy. So I'm watching. I'm waiting. I'm not acting yet.
I agree with you. I actually think it's tighter. I think it's a $2 support zone. I think it's between 72 and 74, which essentially, for those who look at SLV, I mean, it's essentially the same area we are right now, where literally I think that's why we're holding the way that we are here in SI, and whether it's SLV, it's essentially this same area, 66, 67. So this definitely is an area. You can see it's kind of churning right here, and it's trying to figure out where the next move is. Personally, I hope it's higher. I mean, I think the market is a lot more fun when these are running higher. Again, I don't think it's going to happen with the same velocity that we saw earlier, but I think it's a lot more interesting of a trade, and the market is much more interesting. The fascinating thing about all of this is really all happening without the dollar doing a whole lot. However, today we did see a move from the dollar that has since faded pretty hard. And I think that's what was leading to some of the destruction earlier today in the metals. But for the most part, this has been somewhat dollar agnostic, both of these gold and silver, which has been fascinating. The ratio, of course, we've seen a big change in that. That thing was like 45 a couple of weeks ago. It's back upwards to mid 60s now, which I think is something that has to happen in order for these to sort of return to somewhat of a normal trade. I mean, the silver being that much, that ratio being that low, I think is very, it's not sustainable. I mean, this ratio usually hangs out in the 70 to somewhere between 70 and 100. I think that's kind of the normal area. That being said, I think we're going to see gold outperform at one point, and that's one of the reasons I still like holding on to our call spread.
The gold's off the lows. Copper is really taking it on the chin over the past 2 weeks, which means some exposure I have here is probably not going to work out. Certainly the 7 DTE stuff, sayonara. We could unload this for a quick little $600 loss. The 37 DTE, still the short put spread here. That's got some work to do. Why these levels? Well, Jamal, I see like 550, 560 on our chart. Just looking at the price action since late November. Resistance, some support in play. If we break through 550, 560, it's going to be in trouble. But that move that we've seen, we were just over 650 a few weeks ago, right? Weren't we at the end of January during the metals craze?
Yep.
Copper is one of those more growth sensitive commodities. And there was that question that we threw out there, and too bad we didn't act on this premonition. But the idea was thrown out. Why isn't copper going as crazy as gold and silver? Like, if metals are going nuts and this is a super growth positive environment, why wouldn't you want exposure to the growthiest of the growth metals? And it never really followed to the upside. And it's really struggling here. It didn't melt down the way gold or silver did back in January, but it can't really hold on to anything. And outside of the Iran pressures, are we seeing crude oil making significant new highs? I mean, we now have a second carrier strike group moving into the region. Is oil through the highs that we were in back in January when the commodity craze was happening? No. So they're moving bonds, right? There seems to be some sort of impulse over the past week that is a little bit more negative growth-wise. Broadly speaking, the economy, and it's showing up in the commodities too. It warrants a reconsideration of a number of approaches from my view, and it's why some of the positions I've been taking on, like the copper one, haven't been making money. Maybe vol here can be the clue. It's not showing any signs of significant stability yet. So silver needs to go up, copper going up, vol going up, gold is already rebounding. This is an ugly period for the metals, and there may be no way around it for the next few weeks.
I mean, silver was up about 160%, so some reckoning was due. I mean, it was a little carried away for a while there, and the volatility absolutely exploded. I mean, at some point or another, it was going to calm down. It was a matter of time for sure. That said, I still think it's an interesting trade. They're still moving around quite a bit. I always look at daily range, and daily range obviously has come off quite a bit. 14 days, the 14-day average daily range was 5%. Now 9 days is on the order of 3%. So we've seen these volatility measures go down for, that's wrong. That's for gold. For silver, it is much higher. It was, the 20-day range was 12%, 14-day range 13%, and obviously that includes a little over 2 weeks ago, but now it's down to 8.5%. So that's still quite a bit. Like, it's not like it's completely died, right? I mean,
only 8.5%.
And today it doesn't necessarily, I don't know if it fully shows it. It should, though. I think we've had close to a 6% range today, probably.
Yeah, I've got
higher than that, actually. Yeah, I mean, okay. So, yeah, I mean, these are still big ranges. And I think it's still, as long as you have that kind of big range of volatility, you could see something. Now, if all of a sudden that shrinks, which, again, it's entirely possible, it could start to shrink a little bit more, then the idea of playing for directional is going to be really, really hard to do. But, I mean, I tell you, it's so fun in that you've had so many different ways to play it, whether you use /SI/GC, whether you use GLD and SLV to be able to sell vol. SLV has been one of my vehicles of selling vol. I had two strangles in there, still have one on. It's a little underwater at this point. I got the 75 100 strangle in March because this thing is so liquid. and the markets are so good, be able to do something like that. And like I said, I'm $9 underwater on it, but it is March. I got some time. That volatility was crazy high, man. I sold it when volatility was 100. And I don't mean IV rank. I mean the actual volatility was 100. That's how crazy these things were.
Gold right now, I'm looking at its 5-day average trading range. It's $212. At its peak at the end of January, it was going into February, was $372.
Mm-hmm.
Today's 5-day trading range would be higher than any 5-day ATR that we've seen in gold going back to, this is going to be really boring.
Yeah. I mean, look, this is a big move, honestly,
Financial
today.
crisis.
When's the last time you saw a big move like this in gold and silver? 2%, 5% downside, down or up?
I don't know, like last week.
But the market was down too, though, right? That's my point. The fact that we just flipped higher today is kind of interesting.
It is a good thing, right? We want to ultimately, for stocks to have a significant rally, my thinking goes that you need to see gold and silver struggle for a little bit. People need to stop seeing shiny rocks as more appealing than, having a slice of all future cash flows of all publicly listed companies in the S&P 500. So it feels like there was a catch up there at the beginning of the year because everyone's banding around the charts. Oh, look, gold has outperformed the S&P 500 since 2000. And you have a bunch of folks saying, oh my gosh, I can't believe I should have owned gold. Buy some gold.
Yeah.
Well, the central bank activity hasn't halted or ceased. So there is that in our sales, perhaps. The Iran meeting went well today. This is one of those meetings, Jamal, that probably could have been an email because it was a meeting to agree to meet at another time. It's been 2 weeks. I can report that the Ayatollah is not responded to anything from Futures Power Hour still.
The nerve of that guy.
If you follow me on Twitter and I DM you, you don't respond, like, why do you follow me? So we have crude oil bouncing here off of 62. It's the swing level that we had back in January 14th. You could see it pretty cleanly there on the chart. I'm still leaning long deltas, Jamal. Volatility is obviously off the highs from where it was just a week ago, even if we haven't seen prices move all that much. IVR now at 38. When, look back a week or two, you'll find that at the same prices, IVRs were up in the 70s. Maybe we've turned the corner. Maybe Strait of Hormuz is definitely in focus. China and Russia have announced that they will be conducting military drills in the Strait of Hormuz in the near future, which is a great place to do such things. Feels like a flex with U.S. carrier strike groups in the region. Who knows, Jamal? Fun things like this have led to other conflicts throughout U.S. history, throughout American history, global history, I should say, human history, broadly speaking. Either way, 50-day moving average here is starting to come into focus. If you get down below 61 for now, the 1 month holding up at 62 and change is keeping oil intact. I think this is the place that we want to look, though. Oil vol. Oil vol needs to get back down below 25 in the IVRs for us to say that the geopolitical impulse that has carried us here in recent weeks has faded. We come into the year with IVRs in the teens for oil. And I think that really should be our North Star right now. Until we get those low IVRs once again, Jamal, we can't say that the Iran story is over. But the second they dip down there, forget what you see on Bloomberg or CNBC. The market is telling you that the story's finished. It's just not finished yet.
I tell you, Chris, death taxes and crude oil dipping back down after geopolitical tensions has been something, well, two of them you can always count on, but the third one, you've been able to count on that ever since January of last year. We've seen that quite a bit, and we've talked so many times about how the Iron Condor was the way to play it. I listened this time, and I actually have had the Iron Condor on for the past week and change now, and it's been working. Like you said, implied vol was up. It seemed like a good opportunity. Went with 58.68 as the short strikes and just 1 point wide, and that's the trade that I still have on now, and we're sticking to it. This has happened quite often. If you look over the past year, you'll see a bump up in oil, due to a geopolitical situation. It may stay up there for a couple of trading days or so, but at some point or another, it relents. This time around, I was wondering, because of the way that the chart does look, it's been more than a couple of trading days, and you wondered if oil was finding a new range in the 64 to 65. That could still be the case, but after this morning's news, it took a big hit, and so I'm thinking it might be done for the time being.
There is an outstanding position in here in the 70-71 call spread, which was put on predicated that there could be some conflict with Iran and the U.S., and this is when oil was trading closer to $60 a barrel. So it's eroding. We could take it off today. It's a $30 loss. No big deal, right? A little bit doubling, I suppose, the gains that we had in ZB after all this time. So either way, though, I think it's worth keeping on. It's still at 28 DTE. There's enough time. It's retaining enough value, so to speak, that as a hedge against some of the news flow, I'll keep it there. Once again, though, encourage people to look back at the history of these conflicts. This is another Monday where, because there wasn't a weekend attack, oil prices have come in. That has been the rhythm here in the market over the past few weeks. The Trump administration historically has liked, first term and thus far in this term, has liked to operate on the weekend so that they can kind of control and massage the narrative prior to markets reopening Sunday night, which tactically, I guess, makes sense. You don't want the markets freaking out and signaling to the broader public that something wrong is going on. Let people calm down, cool off. That's why the Maduro news, Jamal, didn't exactly really shake things up. We had the news on a Saturday morning. By the time markets opened Sunday night, there was a day and a half to contextualize it and rationalize things. So I'm going to stay long right now, but it's a hedge. So things go sideways. Natural gas, obviously not touching, because this thing has not worked out well for me. I've been trying to get my head around it. We're back down towards the lows prior to this insane polar vortex that swept the nation for what felt like a month.
Yeah.
42.5 IVR. We're sitting near low IVRs, really dating back to early December now. Jamal, do you have anything doing here, or should we just move on to currency and wrap this up?
Yeah, I got nothing going on in here, and I'm not touching it. You kind of figured we were going to get back down to this level, right? Once this type of situation happened with weather. No surprises here, but I got nothing.
Earlier today, the dollar was performing a little bit better. It's since turned the corner somewhat. The Australian dollar has poked its head back into positive territory on the day. The British pound, which was off about another 40 pips or so, has since rebounded from its 50-day moving average. It hit its lowest level in 3 weeks. Some poor UK jobs data over there sent the pound trading a bit weaker. Some resuscitated BOE rate cut odds coming into the purview for the month of March, drawing my attention here. The dollar, broadly speaking, though, has been on a little bit of a bounce the past 2 days. Are we out of the woods? The line that we've had on the chart comes against the late December swing low. We broke through it here in January. We broke down to new multi-month lows here in January. The rebound back has not been able to clear out the former swing low. The series of lower highs and lower lows thus remain. So today's action, we were up more. We failed at our 1 month, just as we did here in the first week of February. Is this a triangle forming here, Jamal? A triangle after a downtrend, after consolidation that would signal more dollar weakness ahead? Possibly. Don't like what I'm seeing here. Obviously, it could take a little bit more shape, but right now, Jamal, if I'm looking at these charts, I'm looking at a yen that has maybe broken out and now consolidating after a breakout, a pound that's pulled back to key moving averages and is bouncing, the euro having corrected to a 1 month to a 50 and now bouncing again. We're away from a flight to safety in bonds. All of a sudden, U.S. yields look like they got a little bit softer, and maybe it's time to get back anti-dollar.
Yeah, I mean, I'm in the Tasty FX account. I'm long a few things that are long dollar essentially, but I mean, overall, where is this thing going to go? Talk about the dollar. I mean, if we're going to start a rate cutting cycle after June, that's going to spell more trouble for the dollar, right? But then at some point, how far down can you push this thing before it starts to rebound, which is what we've kind of seen a little bit more recently. So those are the things, those are the two, that's the angel and the devil that I have on my shoulders, right? Like those two scenarios. It's interesting to get long dollar because it seems to be so low here. Not too long ago, it was at 4-year low. But how much higher can it climb when we're going to start cutting rates? This is the thing I can't reconcile, Chris.
We need other central banks to cut their rates faster than we're cutting ours. What's next on the calendar? Tomorrow, Wednesday, February 18th, FOMC meeting minutes are the number one thing that I think most people that are tuned into the macro world will be paying attention to. There's a smattering of U.S. economic data in the morning, however. Housing starts, building permits, durable goods. Durable goods are interesting right now. That's a very tariff-sensitive piece of data. Recent months, we've seen it up and down double digits as tariffs have gone on and off like a Mr. Miyagi type of policy adjustment window here. Tariffs on, tariffs off. It's a bad joke. But we now find ourselves looking at durable goods. Items with lifespans 3 years or longer, appliances, airplanes, automobiles, yada, yada, things that require big capital outlays, things that consumers don't make unless they're feeling good about the future, which if you look at consumer sentiment, recessions don't start because consumers stop spending money, though, Jamal. They start because of declines in business investment, and thus far, we don't have any such indication of that occurring. We'll see what the FOMC has to say tomorrow, though. Maybe they can help that 118, 120 call spread make a little bit more than $15. Jamal, we're done here for today. I'll see you later on. We'll see everyone later on here on Tasty Live. But for now, we're going to take a quick break. Dr. Jim Schultz, he's up next with From Theory to Practice. You're watching Tasty Live.
As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then I actually had an experience. So for all 4 years of my college career, I tutored students in accounting, economics, and finance. And most of the time, the students would come to me and basically to do their homework for them. And I would usually send those people on their way because I wanted people that really wanted to learn. Senior year, young girl comes to me. Her name's Carolyn. She needs help in microeconomics. She is completely lost. Her graduation hinged on her performance in this class. Obviously, she wanted to graduate, but I could feel this natural desire, this yearning to actually know and understand the material. I mean, I had to explain marginal revenue to her at least 38 times before she finally got it, but she got it. We go through the whole semester, we say our goodbyes. A couple days later, I'm standing outside waiting for my friends to come pick me up. I get a phone call and I missed it, but I felt my phone buzz to tell me I had a voicemail. And I looked down and it's from Carolyn. And literally, that 60-second voicemail changed the entire course of my life. So she basically said, Jim, I just want you to know that I'm gonna graduate this Saturday, and I'm only gonna do it because of what you did for me. I'm only gonna do it because of the patience and because of the time that you took with me. I never would have made it without you. I will never forget what you did for me. I hung up the phone, and I had a feeling inside of me that I'd never felt before. And I said, wow. I said, I need to explore this. I canceled plans with my friends immediately. I went to the computer lab. I started researching PhD programs. I said, I want to have more of this experience. I said, I think this may be what God wants me to do. Most of financial media is all based off of story and direction. And it's really interesting because
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Jim Schultz
and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday Synthetic Monday edition of what it is that we are trying to do, man. I'm so glad that you guys are here because it is only because of you all that we are able to do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, if you're a bull, you guys can kind of commiserate and sort of celebrate together because it looked a little scary out there for just a wee little minute, but we are indeed back. And of course, you can drop whatever questions you have for me in the chat, and I'll try to get to as many as I can right around the second half of the show. And remember, your number one objective today is to pump the algo in the chat. So Josh, bring us into the market. Let's have a little look-see. Man, it looked a little, it was something earlier, man. I don't know what they were doing out there, but all is right in the world. Even S&P's up 24. Risk-free instrument, also known as the NASDAQ futures, extremely high risk. Product up 31. You got the boomers up 100. And you've got the Russell 2000 futures index up $8.90, $9 on the day. You got bonds up a little bit. You got notes down a little bit. You got oil down a little bit. You got UB40 up a little bit. Shifty's getting beaten up a little bit. Gold down $149 on the day. It's kind of a big move. And silver down $4.40 down to $73.55. Man, it's crazy. Is it not completely ballistic bonkers that we were at 120 in silver like 4 weeks ago? Like 3 weeks ago? Was it even 3 weeks ago? Let's look at the tape, actually. Here, I'm very curious now. Was it even 3 weeks ago? I don't even know if it was 3 weeks ago. Let me look at silver. Let's go to the chart here. The trusty old little chart. There you go. This is a daily chart, right? Yeah, daily chart. This was, so we hit a high of 121 on January 29th. That's like 3 weeks ago, guys. That might not even be a full 3 weeks ago. That's bonkers, crazy stuff. Silver went from 121 to 73 in 3 weeks, less than 3 weeks. Man, that's some fart coin stuff if I've ever seen it. Silver down to 73.57. Gold, similar path. I mean, gold was all the way up to 5,600. It's now 4,900. And so down to just a crisp 700 points. And so obviously pour one out for your neighborhood and local shifty. He or she might live right down the street from you. You don't know. And so, so gold and silver, they've seen better days, but again, it could be worse. It could absolutely be worse. Volatility on a daily today. Volatility's down now. Volatility was up significantly earlier. You've got volatility futures down 70 cents, and spot volatility, the old VIX, is down $1.30 on the day. You can see earlier today, VIX was all the way up to 22, right? Yeah, almost 23 earlier. It has now sold off to under 20, right into the 19 handle. If you need another reason for why we do what we do, I present to you exhibit quadruple Z for why we do what we do. Volatility doesn't want to live on the higher end of the range. It doesn't want to live in the 20s. It certainly doesn't want to live in the 30s, 40s, 50s, 60s, 70s, 80s. But it doesn't even really want to live in the 20s. And so when volatility starts ticking up and it hits 20, 22, 23, 24, there's no telling that that's the end. There's no telling it's not going to go higher. Nobody knows that, unfortunately. But statistically, probabilistically, it's like, man, starting to position yourself to take advantage of the more or less inevitable volatility contraction that is likely around the corner at some point in time. Could be later that day, could be the following day, could be 6 weeks down the road, whatever it might be. Let's position ourselves to take advantage of that by keeping in mind, position sizing and capital allocation and my risk parameters. Like, let me check all the boxes, or at least as many as I can, to put myself in a good position to where if I am wrong and volatility keeps going higher and extrinsic values keep going higher, then I'm not going to have to necessarily get out of a position before I wanted to, or before kind of the plan dictated that I get out of the position. And I'm emotionally charged up on every tick and every 10 points in the NASDAQ and what have you. Like, nobody wants to be in that situation. We've all been there. It's a rite of passage. Every trader has to go through that. Like, you think that you'll be able to kind of weather the storm, but man, when you're oversized, it is not good at all. So, all right. So volatility down on a daily today, but it's been pretty, the market's been pretty back and forth, man. Like, you can see that. Silver was down to 71, I think, earlier. Yeah, silver was 71, just under 72. Gold was down into the 48s, right? 48.50 or something. Yeah, 48.54 was your low. You had, the NASDAQ was obviously, it was 400 points lower at some point. You've got the NASDAQ was down to 24,449. So yeah, it was 400 points lower than it is now earlier. S&Ps were, they were all the way down to 67.91. So I didn't even catch that. They were under the 6,800 level. Whew, man, like if you need a clear-cut sign that the apocalypse has arrived, S&Ps under 6,800, I'm not sure you can get clearer than that. Like, I'll see if I can muster something up to give you a clearer sign, but I'm pretty sure that's about Windex crystal clear if I've ever seen it. So that's ES, that's NQ. The Russell was obviously struggling, or everything was struggling. Even the boomers were struggling. Look at this, man. The Dow was all the way down to 49,240 earlier. And the boomers, this is their time to shine. Right, a synthetic Monday, a Tuesday, that's a synthetic Monday. This is when the boomers are absolutely at their best. They've had the 3-day weekend to get nice and rested up. They give it all they've got on Tuesday, and then they shut it down, right? 5-day weekend right afterwards, and it's perfect. It's a perfect scenario for the boomers. So I was a little bit surprised that they were as weak as they were a little bit earlier. But anyway, I digress. All right, so let's talk about a couple of things that are happening in the portfolio. Don't worry, there's only 37 minutes left in the show. It'll be over before you know it. And so let's go ahead and let's talk about a couple of things. I see you guys in the chat though. Man, look at Alaska Synthetics is in the house. Man, look at that stuff. That's some good stuff, man. I see you guys. I see Isari's in the house. Man, I see Isari's here. Baker's here. Man, Wolf is in the house. Man, I appreciate you guys. Grumpy Mike is here. Oh yeah, they were running the Carolyn. The Carolyn story. Basically the reason why I went on the path that I went. I'm not going to rehash all that because it was just on the promo. If this was like a Friday, like an extra wide lanes edition of the show, maybe I would. But I will just say this. Yeah, that was a really radical moment in my life. I remember it like it happened, 10 minutes ago. There are certain moments that I remember that it's like they happened earlier this morning. That's one of them. Obviously, my wedding day is one of them. Red Sox down 0-3, 2004 is another one of them, of course. And so when I think about the Carolyn situation, I'm like, man, that one phone call, it legitimately changed the entire trajectory of my life. It's crazy. It's really crazy to think about. And, I would probably I'd be a stockbroker, man, if it wasn't for, I'd be a financial advisor, right? I'd have my little shop set up at Raymond James or whatever. I'd be like, man, come on in and let me help you. Help me help you. Like, help me help you to help you reach your financial goals. Yeah, sure. I'm just going to put you in a bunch of market indexes and collect a paycheck every couple of weeks. But man, let me help you help yourself. So that could have been my trajectory. But instead, here I am with you guys. And we're just lighting stacks of cash on fire. And so it's way better. I think it's better for everybody. But anyway, I digress. I think we're digressing off of digressions at this point. But I see you guys in the chat. I'll try to get to as many of you guys as I can. I appreciate you guys so much. So, all right, let's go. Let's see. All right, so man, we got a lot of things going on in the portfolio. Look at this. How many trades we got? 15 trades? That's a lot of trades, man. We are kind of bursting at the seams here with the number of positions. I talked about that last week. I typically like to live between, 8 and 12 positions. Usually over 15 is a little bit too much for me to manage, especially since I'm trying to talk through these on the show with you guys. And I'm trying to, I don't want too many things to slip through the radars to where it's like, I had a chance and I missed them. And that certainly happens. It happens to all of us, who are actively trading in the markets. But I try not to let that happen too regular, just because I don't think that's a great experience for anyone. But let's go ahead. So a couple of things. So number one, let's talk about, we got to shoot from strength today, right? It's a Tuesday, synthetic Monday. I feel like we need to shoot from strength. And what better way to shoot from strength than to talk about the do nothing strategy? And so AMD is down $2 right now, but man, it was a whole lot worse just earlier today. AMD was all the way down to 194. A few days ago it was down to 190 or whatever, and we already talked about that. But it was down to 194 just earlier this morning, right? And it looked a little dicey. It looked a little ominous. The clouds were darkening. I saw the 4 horsemen on the horizon, and I'm like, this is it. Like, we're almost, 9% off of all-time highs? I don't know how it could possibly get any worse, but I have a feeling we're all going to find out together. And then all of a sudden, it all turned around. Okay. Doing nothing, the do nothing strategy, it's easy to do when it's all working. It's easy to do when everything is just strawberries and sunshine. Where it's like, oh yeah, I'm selling puts and the stock's just meandering higher, or I'm selling strangles and the stock's not going anywhere. It's like, yeah, the do nothing strategy is amazing. Like, why didn't I think of this before? This thing is absolutely crazy, right? Like, I should do this every single time. That's when it's easy. The do nothing strategy really gets tested though when it's like, man, I kind of want to do something. When it's like, man, I feel like I should do something, which is not to say that you shouldn't do something in those situations. There's plenty of moments when reducing risk and rolling untested sides and controlling directional bias, whatever, is the move to make. But doing nothing really shines when you're like, man, I kind of don't really want to do nothing right now. I kind of want to, get out of my seat and do a little something. Right. I kind of want to maybe, get out of my seat and be a little active in the markets to make some adjustments around the edges. There's a time and a place for that, of course. But if you like your directional bias and your size is in check, I was going to say if you like your size, which I guess that applies too. But if your position size is in check, you like your directional bias, you don't feel like you're oversized in the position, and you like how the overall risk parameters, kind of set up for that position and the overall portfolio in the aggregate, then doing nothing is oftentimes the move to make. And so I just wanted to highlight, again, I don't know what's going to happen. Nobody knows what's going to happen. This thing could completely blow up in our faces. We've done it before. I'm sure it will happen again. And it could happen here with AMD. But I just want to point out that right now in this AMD position, it's kind of not so easy to do nothing. It's not so easy to just sit on our hands and kind of let the strategy work. But in my opinion, that's where the do nothing strategy really earns its stripes. Like that's where that guy really begins to shine, when you kind of want to do something, but you choose to do nothing instead. So anyway, there's some AMD commentary. Let's also talk about, look at Boeing. Man, look at this, is going to be fun. So Boeing is set to expire here in 3 days, and we have a long call spread on. And you've got Boeing up $1.48 today. It is right on the cusp of greatness. Got Boeing at 244.44. It doesn't get much more feng shui than that. We need this guy over 245. And so we need it up just a wee little bit more, just to kind of jump over that hurdle that is the long call strike on this call spread. And once it does that, then we'll be in a much better position to potentially turn this otherwise losing position into potentially a scratch, into potentially a winning position. And so with only 3 days to go, something is going to happen with this position one way or another. It's either going to expire worthless, we're going to roll it out into the future, or we're going to close it for a profit. We could potentially close it at a loss, but I'll probably go ahead and let this guy go all the way to expiration if needed for 2 reasons. Number one, it's a defined risk strategy, and that is kind of my default setting with the defined risk strategy. I'm in it for the long haul if need be. Which is not to say I want to deviate from that and call audibles when I think it makes sense. But right now, I don't know that it necessarily makes sense. And so I want to size myself on order entry such that I can stay in the trade as long as I need to, such that I never feel the need to get out early to quote unquote save money or save capital off of the maximum loss. That's just the way that I look at it. You may look at it differently, and that's totally fine. That's what makes a market, as they say. And so for us right here, we're going to sit tight. We're going to sit tight. We're going to do nothing. The only thing I think I might do is try to roll this for a credit if we can do that. I don't think we're going to be able to do that now because it's just not high enough. I think if we tried to roll this to the next cycle, to like March, I haven't looked at this, so I don't know what the number is. I'm going to say it's going to be about a 30-cent debit if I try to roll this guy out to March. So let me go ahead. If I go to roll out, whoa, $1.64. Wow, well, we're definitely not doing this. Now, $1.64? Man, I mean, that's what I would expect it to be if Boeing was like $10 lower. Man, that's crazy. Man, and the markets, I mean, they're a little bit wide, but they're not that wide. $1.67 now? What is this, man? This is crazy. $1.67. I thought we were shopping at Walmart, man. We're shopping at Whole Foods. Like, I thought we were shopping at Winn-Dixie, man. Like, we are absolutely at Publix. This is some crazy, crazy stuff. $1.67. That's crazy. All right, so we're going to pass on that for sure. Well, so we sit tight. We do nothing in Boeing, and I'm still shocked at how much that roll was. But that does highlight, though, one teachable moment that you can kind of extrapolate out to any of your vertical spreads. If you have a vertical spread on, long or short, it doesn't matter. If you have a vertical spread on and it's not working, which is the case for Boeing right now, if you're in that spot, if you go to roll it, into a future cycle, even if it's just another week or it's another month or whatever, you're almost always going to have to pay a debit to do that. And just think about it logically, right? You're in a trade that is losing. You're in a trade that is on its way to maximum loss. If nothing else changes about that situation, you're going to absorb maximum loss. Again, a long vertical or a short vertical, it does not matter. If you want more time, if you want to extend the duration of that trade, that's obviously good for you, right? If I could be in this trade for another 7 days or 28 days or what have you, that's obviously going to be beneficial for me. Okay. If I want that, if I want to extend that duration, that's going to cost me something. I'm going to have to pay for that privilege of having more time in the trade, when essentially my maximum loss is fixed. And so this is how the markets work. If I want another 28 days in this trade to give it a chance to come back, I have to be willing to absorb a greater maximum loss. That's what it means when you roll for a debit, by the way. When I roll for a debit, I pay $1 or $1.60 like we see on the screen right now. That's another $1.60 that gets tacked on to my maximum loss. So remember, vertical spread, the maximum loss and the maximum profit are essentially fixed. And from the standpoint of, when one changes, the other one also changes. That's not necessarily the case with undefined risk. It is technically if you push it all the way to the limits, but we don't really think of it that way simply because, the maximum loss is more undefined. But if I have a vertical spread on like this one, this is such a good teachable moment. So let's hang on this for an extra couple seconds. I have a $10 wide vertical. Right. In fact, so we already know that this is $1.60. We already know we're at Publix. We're not at Winn-Dixie, which that's probably a good thing. But if I clear this away, if any given day you find yourself in a Winn-Dixie, something went very, very wrong that day. And so if I go into my Boeing trade here, let's see, I paid $5.15 for it. Here you go. I paid $5.15 for this Boeing trade. If I roll for another $1.60, that's going to mean that I essentially paid $5.15 plus $1.60. So that's going to mean I paid essentially $6.75 for the trade. So right now, right, I have a $10 wide spread that I paid $5.15 for it. That means that my maximum profit, let me grab a different color. My maximum profit right now is $4.85 because it's the difference between the width and whatever I pay for it. Right, so it's $4.85. Okay, great. If I go ahead and roll this for another $1.60 and I change my total debit paid to $6.75, that also changes my maximum profit parameter. Now it's only $3.25. It essentially gets reduced by the amount that I roll the trade for. Right? That trade increases my maximum loss and it reduces my maximum profit. And so you have to understand it's kind of gotcha. Right? Now, you might be thinking, well, wait a minute, Jim. I thought for every gimme, there was a gotcha. For every gotcha, there's a gimme. There is. You have more time. Right? You have an extra 28 days or 21 days or 30 days, whatever it is on the roll. Right? And so you get more time, but you now have a greater maximum loss and lower profit potential. So you have to decide if that makes sense. Most of the time, it doesn't in our estimation, especially when we're talking about a roll for $1.60. If I was rolling for like a nickel, that'd be a different scenario because that's essentially not changing the maximum loss and maximum profit parameters too greatly. It's essentially the same trade, but now I have an extra 20 days or 30 days or what have you. But the tricky part about that is that only happens when, you're essentially on the cusp between a winner and a loser, which we're not there yet. Boeing is still a losing trade. And so that is why you're seeing what you're seeing here. So anyway, hopefully that helps a little bit. So, okay, so that's Boeing. And then, oil's come back a little bit. So oil is just inside of our short call strike now, which is super nice. So we'll sit tight on that guy. You've got MES. We've got this short put. That's looking good now. You got MNQ. We've got this short put. Again, looking good now, coming under fire earlier today. But thankfully, that was all in the morning before the show. So it's almost like it never happened. GDX, this guy is now inside of our strikes as well. That's in a good spot. And then you've got, GLD. This guy's not coming back. We're going to have to buy this thing back unless, I don't know. Maybe it is coming back. Is this guy coming back? Maybe. I don't know. It's already pretty close to maximum loss, so I'm not going to close it now. There's no reason to close it now, in my opinion, because it's only 40 cents away from maximum loss. The maximum mark price on the strategy, is always equal to the width of the vertical spread. So it can only be worth another 40 cents. So there's only 40 cents of risk left in this trade. And so, in my opinion, we'll leave this guy on. All right, we'll leave this guy and we'll see what the market has in store for us. Because again, and Josh, thank you for reminding me of this before the show, but I'm pretty sure tomorrow is Fed minutes, right? And listen, guys, come back to me if you're multitasking. So I've been trading since 2007. I've been studying the markets even longer than that. I've looked at a lot of data points. I've looked at a lot of economic drops. These Fed minutes that are coming on down the shoes tomorrow, I've never seen a more impactful number that is going to drop tomorrow at 2 o'clock Eastern time. And so if you don't have your affairs in order, I don't think I can help you. I don't think anyone can help you at this point. Now, you've got about 24 hours to go. So I would go ahead and make use of those 24 hours and I would get done what you can get done. I mean, wills, living wills, passed away wills. I'd get all the wills done, checked off, and just get that stuff out of your mind so you're set to go for the Fed minutes tomorrow afternoon. But who knows? I mean, maybe the GLD position will come back. And so we'll leave that guy. And then you got Hood, you got Meta, you got Star. Look at Starbucks up $1.50. That's amazing. And so SLV, Snap, Tesla. Yeah, I mean, it's all good, man. We'll come back to all that stuff later on. Now, I want to see where you guys are at because I see it's kind of fun having so many positions too. We got a lot of things to talk about, which is pretty cool. But let's go ahead. Let's see, where are we at? Man, I appreciate you. Where are you guys at? Let me surprise and delight somebody. Oh, here we go. So, E-Media, I'm going to surprise and delight somebody at the end. I see you guys at the very end talking about bunkers and things like that, which, I mean, you guys help each other out now, right? Again, it's too late. But just so when you're at the very end, like in the final moments, you can have the peace of knowing that you tried. I mean, you didn't try that hard because you waited this long. But still, at least you made a mad dash to the finish line at the very, very end. And so I appreciate the camaraderie that I'm seeing there in the YouTube chat. And the algo appreciates it too. But I see E-Media is, this is a good question. E-Media says, Dr. Jim, do you teach on the side at a local college or online? Let us know. That's a great question. And no, I do not. I mean, this is it. This is, this is what I do. And so my teaching and my instruction is with you guys. And so, I really, really thoroughly enjoy that time in my life. And, I miss it in a lot of ways because it's really special to be face to face in a classroom with young, young men, young women. And it was just so amazing to like a very, very formidable time in their lives when they're all trying to figure out, where they want to go. And I primarily taught business students. So not all finance students. I mean, I taught finance, like concentration classes too. Like we did an investments class. I taught a derivatives class a couple of times. I mean, I did all that kind of stuff, taught MBA classes and that kind of stuff. But most of the time it was just general business students. And that was always really fun because they're trying to figure out what they want to do. Some of them had it made, they had their minds made up and some of them were still kind of searching and trying to figure it out. And it was really, really cool to be a part of their, their young, kind of the beginning of their professional lives. And I miss it. I miss it in a lot of ways. But no, I do not teach anywhere other than with you guys. Let's see. Can I go ahead and surprise and delight somebody else? Where am I at? Actually, well, no, let's just go back to the beginning. Here's a great question coming in from Orgdenu. What's going on there, Orgdenu? I appreciate you, my friend. Orgdenu says, hello, Dr. Jim. I hope you had a great long weekend. What is the delta you recommend for short puts? And if you think it's a good idea to put 5 or 10 delta wings on naked puts, thank you so much. Yeah, so, so generally speaking on a short put, I think, starting your analysis somewhere around 30, 35 delta is going to be a really great spot for a lot of people. And so like, let's go in here right now. Let me go into like IWM. So if I go into IWM, I go to, I'll just do March with 31 days to go. That's fine. So like if I was going to do something in IWM, like right now, right? I mean, the IV rank is 27. It's actually not too bad. I mean, I'm going to hold off on this just because, I kind of want to see how things go with the most important Fed minutes drop of our lifetimes before I deploy a whole bunch of additional capital. But 27 IV rank is pretty decent. It's pretty solid. If I were going to go in here and sell a put, I might be looking at about a 35 delta. So now I'm selling about the 257 strike. And so, I would sell this for, it looks like about $4.80 or thereabouts. And now obviously my circles are all messed up now. But if you start your analysis at 35 delta, I think that's a really, really good starting point. Now, one of the things you'll notice here, let me actually clear that away. One of the things you'll notice is that, if I sell this 257 put, I collect about $4.80. Okay. What if I rolled my strike up? So closer to the stock price, higher delta. So now maybe I go to like a 45 delta, right? You're going to see I'm collecting even more, but now my probabilities are going to go down. So this is the most classic gimme gotcha exchange that exists in the marketplace. right? When you adjust the strike on really any position, but specifically a single leg trade like a short put, it's very easy to see. When I go up in my strike selection, so the put is at a higher delta, the credit I collect goes up, but the probability that I have on the trade is going to go down. So now all of a sudden, instead of being at, if I delete that really quick, if I sold a 35 put, my probability of profit was 72. If I roll that up to a 45 put, my probability of profit is only 66 now, but I'm collecting a lot more. The buying power is a little bit more. The buying power has gone up, which makes sense because there's not more risk in the position because the strike is closer to where the stock price is. But you can see it's still an extremely high probability trade. The P50 is also very, very high. But you could also go in the other direction, of course. You could move the put from a 35 delta to like a 25 delta. So maybe I roll it all the way to the 251. Now I'm collecting less and my probabilities are even more. My buying power is also going to go down because there's less risk in the trade because the strike is further away from where the stock price is. So how do you decide? How do you choose? That's largely going to be up to you or Denu and everyone else for that matter, right? I think a 30, 35 delta is a great starting point. You can end there. You don't have to continue beyond that point. You may think, man, that's a really good balance between the two. So I think that's a really good strike selection. If you generally like higher credits, then maybe bring the delta up a little bit. If you are generally okay with lower credits, but you like higher probability, and maybe you like things that are a little bit more hands-off, you're not necessarily trading, throughout the day, or your schedule doesn't really allow for you to do that, then moving the strike out makes some sense. I also would actually say, as I'm saying all this out loud, one additional thing to consider is your skill level and your experience level. Generally speaking, I think newer traders choosing lower delta strikes is going to make a little bit more sense because it is going to be a bit more hands-off. There's not going to be as many day-to-day decisions that you have to make. Now, there's one big caveat with that. I don't necessarily think that going to like a super low delta, like 5 delta or 3 delta or what have you, is going to be a great move because yes, 99 times out of 100, it's going to work perfectly. But man, that one time out of 100 when it doesn't, you're going to get hit in the face with delta. You're going to get hit in the face with Vega. Like it's going to be potentially some pretty nasty business. And so, somewhere between, let's say 20 and 40. 30 is my anchor. If I like higher probability, I'm down closer to 20. If I'm okay with lower probability but higher credits and maybe I have a bit more skill and experience, maybe I'm going closer to 40. And so that's how I generally think about it. Now, what about buying wings? The second part of your question. I don't generally like doing that because it does kind of muddy the waters. Like you can see right here, like if I go in here, like right now I've got this, this 25 delta, right? So let's say, and you can see the buying power is $4,000. So let's say I go all the way down till I find a 5 delta, my first 5 delta. That's going to be right here. They're 225. So I buy that guy, right? You'll notice the buying power is, that's a decent amount of savings, right? You're saving about 40% buying power. Now we're all the way down to what? 2,300, right? My probability is still high. That's not really changed too much. My P50 is still high. That's not really changed too much. But I've got to pay another 58 cents for this long strike just to control the buying power. Other traders will look at this differently. Other traders on the network will look at this differently, which is good. I view that and I classify that as a good, positive thing because it allows you guys to decide what makes the most sense for you because that's what we're trying to do. We're trying to teach you guys and show you guys different things to think about, and then you've got to blaze your own trail forward through the forest. I don't like it because I don't like paying that 50 or 60 cents, especially not in a margin account when I don't even really need to do that. Now, if I was in an IRA, that's a different situation. If I'm in an IRA and I'm cash secured, now you're buying 5 deltas, 3 deltas, what have you, to limit that buying power. Now it makes a lot more sense because the buying power savings are so significant. Here, it matters. It's the biggest calling card of buying that junky put. But I think the 50 cents here, 40 cents there, 65 cents there, and you're talking about significant money over the course of a quarter or maybe a year. Not to mention when you go to roll it, it becomes a bit clunkier to roll into the future. So in a margin account, not something I typically consider. I would rather just move into a smaller product if I have to. Because you might be thinking, Jim, I want to do SPY, but it's too big. I can't do it. I got to buy those puts. Move into something smaller. Do IWM. Do some of the X products like XLE and XLU or XLP or whatever. And so that's how I would answer that. And hopefully that helps a little bit. It's a really great question there, Daniel. So I spent a few extra minutes on that. And by a few extra, I mean that was a good 10 to 12. And so Grumpy Mike in the house, Carolyn, I think it was Carolyn, if I remember. Carolyn is to blame for Dr. Jim. Yes, that's correct. She most certainly is. Again, if there was no Carolyn, I would be your Ray J guy. I would 100% be your guy at Ray J. And so there you go. Wolf is in the house. What's going on there? Wolf Baker says, I love this Dr. J story, man. I appreciate you, man. My friend, thank you for tuning in and checking out the story and just being a part of the network. So thank you there, Baker. I appreciate you so much. Sergio's in the house. What's going on there, Sergio? JT, I used to tutor the same concepts. Micro econ is still the most struggle with class. I know, man. I know. Like, it's crazy stuff. Like, when you get into like micro econ and you get into like, monopolies and oligopolies and monopolistic competitions and like perfect competition and dead weight loss. And like, I remember all of it. I mean, I couldn't forget it if I tried. I mean, I couldn't necessarily reproduce it for you right now, but the ideas they're in my head, at least loosely, and they're not going anywhere. When I was actually, when I was at the University of Memphis and I was going for my PhD in finance, we had to take a minor and we didn't even have a choice in the matter. We had to take economics. And so I actually minored in econ as well. And I took a bunch of microeconomic classes. I took econometrics classes, and I did not really enjoy those classes at all. And I wasn't very good at them. I mean, I joke about the B- stuff around the show, but we were consistently getting B- in those classes. And I was like, that's okay. Like, let's just keep the lights on, man. Let's just keep moving forward, because I'm not going to become an econometrictician, an econometricist. I'm not going to become one who does econometrics. Like, that's not going to be the pathway forward through the forest that I go. And so let's just kind of keep the ball moving down the field here. And then that's going to be that. But yeah, econ is some tough stuff, man. Even at the intro levels is tough stuff. But when you start going like a few steps forward down the path through the forest, it gets a little hairy. And so Edward Lond in the house. What's going on there, Edward Lund? Hey, Will's in the house. Dr. Jim, I hope you had a great long weekend. Yeah, we did. We had a really good long weekend, and it was awesome. And we got some things happening there with the lettuce. We got to clear that away. But yes, thank you there, A. Wills. It was awesome. I got to chase my kids around, and my assistant, my intern for the show, little Amelia May, she's going to be 6 in 3 weeks. 3 weeks from yesterday, she's going to be 6. She's very clear of the concept. Very clear of the concept. Very clear of the birthday concept. Very clear of the party concept. Very clear of the gift concept. And so it's going to be fun. It's going to be a whole lot of fun. And we're very, very excited about that. Greg Lutton in the house. What's going on? iPod Touch is in the house. What's going on there? iPod Touch, NASDAQ up 35. And so you almost had him again there, iPod Touch. You almost had him this morning, right? NASDAQ down 350. It looked a little bit dicey there, but we are back, baby. 100% back. And by back, I mean, we're probably going to close on the lows today. Ramsey in the house. Hello, Doc. Glad to be here, man. Thank you for being here, my friend. I appreciate you so much. Theta Trader. Wow, they cut him off mid-sentence. Sorry, Dr. Jim, but the middle of your sentence interrupted the beginning of the bumper music. That's pretty funny. You know what? You know what it is? That's my fault, because Josh is counting me in, and I think he's actually doing a really good job of counting me in. But I have to get used to the different people that count me in, because their cadence is always different. And I got used to John's retired now, and John was absolutely amazing. But one of the things I learned about John was he would count me in. He would always be a couple seconds before. So like when he would say like 2, like 5, 4, 3, 2, 1, when he would say 2, I'm already live. Like, we're already doing the thing, man. And so I think Josh might be a little bit closer to reality, which might be the first time I've ever said that about Josh. And so that's an uptick, I think, for him. But anyway, we'll figure it out. We'll muddle through. Alaska Synthetics Monday. I like that. Yes, I appreciate you there, my friend. Thank you for being here. JT is in the house. Cost, revenue curves, elasticity seem to be what I tutor the most. Yes, you're getting into some elasticity. That's some serious stuff, man. So I actually did. Josh is trolling me. I actually did some elasticity segments on the Skinny on Options abstract applications in the morning with Tony and the artist formerly known as Tom. And so we had a lot of fun with that. I used to bring that to Tom, and he hated it. He hated every little bit about it, but that kept bringing it. I'm like, oh, man, this is great. Let's do it again. Let's do a part 2. Let's do a part 3. And so, yeah, we did all that stuff, man. That's some hard stuff. Let's see. Brian's in the house. Commence algoification. I appreciate you, my friend. Thank you so much. Go, Mr. Jim. I appreciate you there, Edward Lon. Thank you, my friend. Alaska Synthetic says these SLV bull call spread not doing too well today. No, it's not. But, you do have SLV. Yeah, it's only down $3. It was down a lot more than that, though, right? I mean, this guy was down. It was all the way down. Yeah, it was down another $1.50, $1.40 earlier today. And so the fact that it's back, I mean, it's back to 66. 40 when it was all the way down to 65 is not bad. I mean, silver futures are still 73. Yeah, 73.30. So it's hanging in there. Like it's 100% hanging in there. And so, hopefully you're sized correctly and you can exercise the do nothing strategy if you see fit. And there you go. Lobo Doe's in the house. What's going on there? Tom Cruise, Jake Nicholson. That must be an inside conversation that I am on the outside of. Here we go. Fred Donson. Dr. Jim, when you have the opportunity, please provide your complete position display. So I think you're referring to, you're talking about like each individual position? Yeah, we can do that really quick. I mean, here's MCL. I can't fit it all on the screen though. Here's MCL. We've got a strangle on. MES, short put. Right? MNQ, short put. AMD, we're short the 210 put. That's in the money, right? Again, the do nothing strategy is in action. AMZM, we're short the 200 put, and so obviously Amazon being up today is good. Boeing, we already talked about that. GDX, we talked about that. GLD, we talked about that. Hood, we have a strangle on, 7105. And so 75, 76. Meta, 63, 60, 635, 645, short put spread. And so we need Meta up a little bit more from 640. Starbucks up $1.40. Again, this is our investment style cover call that we've had on for a very long time now. And I don't think it's going anywhere anytime soon. SLV, we have our own strangle on that's actually doing pretty well for itself. Snapchat, look at Snapchat down 8 cents. I mean, that's basically green. We're 100 shares of Snapchat. And then Tesla down $6. This guy's coming home to roost at the end of the week? Yeah, it is. Wow. Okay, so we need Elon to do something. He's going to have to get on the horse to do a little something to get this guy back. But anyway, those are all the positions there, Fred. I appreciate you, my friend. Pop Zap says roll your SLV to 320. My SLV? Or are you talking about mine's already in 320. Oh, I think you're talking about who was that? That was that was Alaska. Alaska. So yeah, I mean Alaska, if you're not already in 320, I would probably consider doing that, like Pop Zap said. Let's see. Eberlon in the house. There you go. Let's see. Grumpy Mike. I always thought it would be fun to teach college econ. It's all theory, a bit of math. Doesn't change much. Just teach and hang out with the young people at the bars. You know what's funny? Oh, this is really, really funny. So the very first class that I taught at the University of Memphis, I was a second year PhD student. This is the very first class I taught. It was a summer class. I had just started. I had just met Autumn. We had been on like a couple of dates. And one night, I was actually friends with one of the students in my class. And so we actually became friends before he realized like I was a doctoral student at the University of Memphis. And then he was like, hey, I'm in this finance class in the summer. I'm like, dude, I'm teaching that class. And so he's like, that's crazy. So we had a good laugh about that. It was a really good time, whatever. But the class was amazing. But they used to all the students went bowling, or a lot of the students went bowling, like every week or whatever. And so they invited me to go bowling. So I actually went bowling with them, and I brought Autumn with me, and it was so fun. And so yeah, I never went like drinking with my students. That's kind of I never crossed that line. But yeah, Grumpy Mike, I have a feeling you would be a phenomenal teacher, phenomenal in like a not really kind of way. And so Too Late Jake is in the house. Good day, Dr. J. I'm here to update my Fade Dr. J fund. Yes, my friend. And so, I mean, you know what to do. You've been here long enough. Like, you know the deal. Like, you know what you're trying to accomplish and how you're going to best get there. And it's going to be, to fade Dr. J. Definitely. And so, Edward Lon, where's Bitcoin? Where is Bitcoin? They're still doing it. Bitcoin down 680, down to 67,000. Okay. So there's your Bitcoin commentary. Isari in the house. Jim, I've just seen a partial video of your God moment where the girl thanked you for teaching her where she would not have graduated without you. Very powerful. Awesome, bud. Thanks for sharing. Yeah, again, it was an amazing moment in my life. And I'm very, very thankful that the good Lord led me down that path. Very, very thankful. And so, I mean, just think, man, if that never happened, you guys would not have all of these actionable trades to fade on a daily basis. Oftentimes it's multiple times per day. Right? It's usually 1 or 2 per show. And so, man, I am here for you. Don't you guys ever forget that for as long as you're part of the network. And so, see, Julian in the house. Dr. Jim, it's good to be here with you today. Can we go bullish on oil? Well, I'm kind of neutral on oil. I mean, because I've got this strangle on. I mean, oil's down a little bit. I mean, I'm neutral. I'm actually a little bit bearish because I would like it to be more centered between the strikes there, and it's kind of hugging that short call strike on the top side. But I mean, I think sure you can get bullish some oil. I mean, oil about 60. I mean, if you were to look at like a chart, I mean, it's kind of chopping around right there. Kind of got a little barcode action going on there in MCL. I mean, sure. I mean, I think you can play it either way. This is the beautiful thing about premium. And this is the beautiful thing about, selling options like what we do as kind of the foundation. By all means, take a directional shot from time to two and from time to two. From time to time, or a time or two. That's what I meant to say. And I said from time to two. So it's not like this is live or anything. Take a directional shot from time to two, right? And, that's perfectly fine. But as the foundation, the basis, I'm selling puts. I've got room to be wrong. I'm selling calls. I've got room to be wrong. I'm selling strangles. I got all kinds of room to be wrong. And so that's what I would do there, Julian. If you want to be bullish, maybe sell a put. Maybe sell a put spread. And so that's how I would view it. And so let's see, Edward Lond, what president? I don't know what that's in reference to, but I appreciate you there, Edward. Ranch is in the house. What's going on there, Ranch? Cameron Vincent is in the house. What's going on, my friend? I appreciate you so much. Rand says Wendy's hurts his stomach. You're probably not alone there, my friend. Not at all. JT says, I wanted to get my PhD so bad that I could teach. Econ specifically is highly competitive, though. I went to a not so great school. This is a family-friendly show. But I had professors in econ from very prestigious schools. There you go. I dodged a bullet on the financial advisor part. Oh, I did. I don't know. I mean, I've got a lot of friends in the industry and, I kind of take the other side of the way that they view the world, but they're great people. And so you never know. But yeah, econ is very, very competitive. I do know that. Extremely competitive. Having kind of been on that side of the fence as a faculty member and then also as kind of a graduate student. Let's see. Where are we at? Oh, you guys are talking about some 3-month-old grease at Wendy's. There you go. Pop up. Need Google says, let's see, Pop Zap says, I need Google to stay above 300. Come on, boomers. You can't be. Now, come on, man. Pop Zap. This is basic stuff. This is basic boomer stuff, right? Basic boomer etiquette. You need a move in Google. That's not a boomer move. Right? You need a move in NVIDIA. That's not a boomer move. No. You need Procter & Gamble to do something. They got you. You need IBM up, man, they got you covered. Don't you worry about it. But Google? Nah, man, you're really, really kind of asking for too much there, I think. But good luck to you, my friend. Let's see, Stan Lucian in the house. Let's see, NVIDIA. Seems like another trap. Nice rally into earnings for a bunch of people to be assigned shares and drop after earnings next week. Yeah, I know. NVIDIA is a little tricky. Oh my gosh, is it over? That's crazy. It's already over. I cannot believe it. I really can't, but I see you guys. Look at Peter's in the house. Ash Finn in the house. Man, MP's even here. RC Mindset showed up. Man, Jared Kramer's here. I see Joe. Man, I see Bogus Family's here. Saturday Night's in the house, man. I appreciate you guys. I appreciate you guys so much. Thank you guys for being here and being a part of the show. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hey everybody, Tim Knight here. Welcome back from the 3-day weekend. We've got pure trading until Good Friday, I guess, so that's good. It is at the moment, pretty quiet day. The NQ is down 1/100th of a percentage point. We had blasted higher in the open and then collapsed and then worked our way back, and now it's just kind of a mixed bag. Most of my shorts are down right now, about 70%, but certainly not the juicy profits from earlier. But all in all, a good market and chart friendly and a lot of individual opportunities out there. We might as well get started. So let's just jump in and kind of catch up with one another. All right, well, the ES is completely inscrutable right now. I mean, look at this. We are at the same price now that we were in October. We have been grinding around with less and less dynamism since then. You know, big swings and smaller and smaller and smaller. It's just kind of limping its way into the middle ground of that range. So what any bears out there want to see, of course, is a cut below the lows we had seen last Friday. We need some kind of catalyst for that. It's not going to be earnings. Those are done. There's no giant economic reports. The CPE comes out Friday, which is something. But as of now, it's kind of worked its way into equilibrium. So not much cooking there. One great success for me overnight was Japan. I mentioned on Friday when I last saw you that Japan had gone sky high, and I hadn't shorted it before, but I was gonna short it. Actually, my biggest position was IWM short, which I covered. And the second biggest position was EWJ, which I covered also early today, because my spidey sense early on was that this is gonna get reversed. It's still down nicely. I mean, EWJ is down over 2%. So even if I'd held on, it's still a great trade, but I got out earlier today just to be done with it. If it crawls its way back up to the gap, I'll probably jump right in again. And the gap's right up there, obviously, from Friday's low. But yeah, Japan worked out nicely because all those stocks, like here's another example, South Korea, they're just exceptionally high. They've had a tremendous multi-100% run since April. And these aren't like, specific biotech stocks that cured cancer. These are like broad country funds that cover everything. And still, you're looking at multi-triple digit gains. Closer to home, the diamonds are up 1/5 of a single percentage point. This trend line is so important. It's anchored to the Liberation Day low. And the past couple of days, as you can see, actually, there's been 3 instances now. It's like to the penny. We'll call it to the penny. There's probably like 1 penny of space between those two. Look at that. 3 different instances where it gets just to the trend line, and then somewhere come some buyers to spring things up. If we can cut below that, that will get things rocking. a little bit. And at the moment, looking at the futures, the diamonds and the ES are both up about 1/5%, whereas a little more wobbly is the NQs, a little bit in the red. One item which has been a harbor for folks to rush into lately has reversed. The consumer staples XLP was at a lifetime high today. And we've got a nice big bearish engulfing pattern on that. And so that maybe that hedge trade, that safety trade, that flight to safety has had it stay in the sun for the moment. That's down almost 2%, even though it's at lifetime highs just today. As I'm sure you know, anything that has anything to do with software or software as a service has had a really bad time for months. These are a few shorts that I'm involved in that respect. One is CrowdStrike, CRWD, and it was not that long ago that these were high-quality dynamos, and they had the wriggles and wobbles along the way, but we were at a lifetime high in this back in November, not that long ago. But since then, there's been 20, 30, 40, 50, 70, 80%, 90% drops in some cases with these former high flyers. And, most recently, you can quite easily see the kinds of patterns that have banged out. And the big drop here is promulgated by the that gap you see under that pattern. So the tough part is knowing when to cover. Almost everything I've covered in recent weeks has continued to fall. What's an example? Oh, I don't remember. It's a lot. Maybe I'm just blotting it out of GitLab, GTLB, for example. GTLB just keeps grinding down. There's a lot, but that's the only one I could think of. So by and large, I'm just like tightening the stops along the way down and hoping that they don't have a spasm during the day to pop me out of it. But so far, it's been really solid. I voluntarily got out of EWJ and IWM earlier today, but everything else is just stuck. APP, App11. This is down again today at double digits, almost a 4% drop. And you can see we've gone from the 700s down to the 300s in a matter of weeks. 50% drop in a matter of weeks. Pretty extraordinary. Roblox, RBLX, here in the Bay Area, this has gone from around 150 to about a third of that amount. This has been just, now to be clear, I am not short this. I had been. This is a great example of something that I got out of at a profit and then it just kept falling. But this top was very clean. And it's not surprising bears would have gotten spooked out of this because there are these instances where you get these big multi-week rallies, but they've just been counter trend. They've just been hiccups along the way down because this has just been stair-stepping its way down for months now. After this one weird pop, with it, ironically, the lifetime high was the end for this because it had this spasm higher and it turned around for a while below that and then the wheels came off. APLD is something new. I've been reading a lot lately about the hyperscalers, those financing it, those providing the equipment, all the infrastructure around that. And I've gotten very enamored with them because some of the better performers on the bearish side have been in that field, OWL, like Al Capital. And this is APLD, Applied Digital Corp, which it's not a great pattern. There's nothing really clear about this, but that's what they do. And just the nature of their business is enough for me to give it a shot. We've had 6 red bars in a row here, but no clear pattern here. Some patterns these days are sensational, ready for a textbook. This is not one of them. It's just kind of bopping around. But the fact it's in that industry is enough for me. OMC is Omnicom Group, and I'm short this, I'm remaining short it, and it's gone down a lot already, about 40% drop, 40% plus drop since September. But it's a tremendous pattern, and don't let low prices scare you. There are stocks that are shortable that are $3 these days. Of course, ARM Holdings, good friend, ARM. This is a little strong today, 0.75% up, but I'm counting on this massive overhead supply to hold things back. The whole semiconductor space is of great interest, and we'll get to that in a sec. Caterpillar has been one of those sensational Dow monsters, which I haven't read why, but apparently this is a company that is a big beneficiary of AI. And it peaked last Thursday, lifetime high, and it's not really much below that right now, but this is very, very expensive, historically speaking. And so this is just one of those, as with EWJ, this is one of those, I shorted it just because it's really, really, really high, and there's no particular pattern to speak of. What else? Oh, here's an old friend, IonQ, which is for the company IonQ. And we are down in this about 1 2/3. A lot of these stocks related in any way to quantum, QUPT, SMCI, that whole shtick is interesting to the downside. This isn't a great pattern either, but it's done pretty well so far. Here's NET, which is Cloudflare, and got a scare on this one, as I mentioned last week, and that was on Wednesday. Had a very strong opening after earnings, lost that, fell some more. Recovered some on Friday, but we have been remaining below that post-earnings peak right there. So what I'm looking for is for it to break below that distribution zone right there. Dell, DELL, still hasn't broken the pattern. It's still not quite complete, and I've got to stop right where that mark is with a gap. So a very tight range between success and failure. But sticking with that one as well. Halliburton, HAL. Halliburton is off just a little. Bought puts on this, June puts back on Friday. And that's enough of that. Let's turn our attention to semiconductors, because this is one of the most important columns holding up the whole structure. SMH is obviously a go-to chart for this. It has been in an ascending channel for about 10 months now. And until it breaks the channel, it's bullishly configured. We had seen some weakness earlier today, but nowhere near enough to break this. But it's crucial to watch. But one nice thing about this market is that you don't have to wait too long to figure out who the winner is. If we break above this zone, the bulls will continue to be the winner. So they're already in position. That simply improves their position. Break below this trend line, and you're going to see some melting going on. I on Friday bought puts on SOXL, which is the souped up version of that. This is the triple leveraged, positive leveraged on semiconductors. And so, like I said, got puts on SOXL. Gold acted just as I thought it would, which is it's got a ceiling here at that gap, which it approached but did not pierce. And I think that metals will just keep getting more dull until people stop talking about them again, just like the old days. Everybody was talking about them a few weeks ago, and now it's become just a boring drag. And I suspect silver and gold and platinum and palladium and the miners will just sort of slumber their way lower. And once they're completely off everybody's radar, then they'll probably get really cool and exciting again. So ain't doing nothing in that area. Bitcoin is down about $1,000. We're in the 67,000 zone now. As I said, my crazy target for this is 25,000. And that will be earth-shaking if it actually gets that far. But so far, so good. We're tiptoeing in that direction. I saw Eric Trump tweeted out a very exultant, somehow he positioned their company as some kind of crazy success because they bought like 600 Bitcoins or something. I don't know what it was, but he was just saying, isn't this great? Well, there's the chart. I mean, you can see how that's going. I don't know what they were back here. I don't know if this was a SPAC situation or this is just an old ticker or what, but the company, for our purposes, began here on this day, clearly. This was the big hoopla about the introduction, and it's just been, it's been a ski run ever since. And the much, much, much bigger company, of course, and much more famous is Strategy, which is down again, almost 4%. And Michael Saylor just keeps doing his thing. So they have many billions and billions of dollars loss on their acquisition. I think their average acquisition cost is $78,000, something like that. Yeah, so they've got a huge loss on their hands. But yeah, you can see how that's going. If you want to take advantage of what might be a drop in Bitcoin, I guess BITI is one way to go. Very clean, very simple. This is an inverse based upon Bitcoin. So, you know what? I don't like running over, and so I had a few symbols left, but you kind of get the idea, and it's a quiet day. So I'm just going to say goodbye, and it's good to be back, and I'll see you here on Wednesday. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the
the takeover edition of Last Call Liz and Jenny style. How are you, Jenny Andrews?
I'm feeling good, Liz. Feeling good. We had Liz didn't think she'd be celebrating Mardi Gras today, but when we went down to the basement of the Board of Trade building, they were serving jambalaya.
Yeah, so we celebrated it. We celebrated it by eating a big, huge bowl of jambalaya.
We did. I didn't even tell my family. I didn't want them to be jealous.
Oh yeah, there you go. Keep that in. That's so funny. Okay, so Jenny, I thought you were going to say we were celebrating Mardi Gras by taking a look at. Let's jump into our platform, Josh.
Okay, this looked ugly when spoos were down 50, but let's give a slow clap to Punish Pixels because he's set us up for not one, not two, but three wins in a row.
Three
wins in a row.
3 wins. Yeah, Punish Pixels, we got to give you a shout out. Now, I want to say right now, Punish Pixels will probably never be watching Last Call. So we'll have to give him a shout out again, him or her shout out again tomorrow, because we found out that our time is midnight their time. So this is like, like 3 a.m.
Yes. So Punish Pixels, I believe, is in Singapore or somewhere where it's midnight at 10. Like at 10 a.m. it's midnight. So you're right.
You pinpointed a random location. We don't know where it is.
I don't know. But I think you're right. If it's midnight there at 10 a.m., they're not watching now.
No, Punish Pixels does not watch Last Call.
Well, then should we leave this on till tomorrow?
I mean, I sort of feel like this happened to us once before, okay? Where we looked at this and said, ooh, look at how much more we can get out of this.
Hold on. Let me get a good look. Where's the center strike? 69.50?
No, the 69. Yeah, well, the 69.50 is the center strike. But so we needed to go. Yeah, we still have 100 points up.
Wait a second. How is this even profitable?
Because we put it on. I'll show you. Mine's profitable too. Let me go to the trade page.
Okay. Our long is still. I know we put it on with the long slightly out of the money, but it's still out of the money. Like I'm not saying I don't believe that it's up $228, but I kind of think it's wide markets. Try to get filled at 1780 and see what happens.
17. I'm going to go.
It's bouncing around. Now it's 1767. Try to get filled at 1767 and let's test the.
Are you okay with 1780? I'm going to go 1770. Okay.
Sure. Let's see.
Sure.
Sure. Let's see. Let's see if we really made $230. Press that button.
I did. So now the mid-market is, hold on. We have to cut this in half. So this is $12, not $25. Like if you're going to go down by $25. I'm going to replace order and I'm going to go to 50. I'm locking it. 1750.
Okay. Yeah, sure. Go ahead.
I'll let you look at the markets. So let's take a look here. This looks, that's not wide at all.
Well, that can be fast forward 6 days and we're right here. This is worth zero. This is worth zero. So if we could take $238 out of this, I'd like to.
Try. Go ahead. Try me.
Go ahead. All right. So yes, we're trying to close it. We're trying to take at 1750 $223 out of this Punish Pixel trade. We won't save it. Way to go, Punish Pixels.
I know, I feel bad they're not getting their accolades. We have to talk about them again tomorrow.
We better, so maybe I'll share this tomorrow and tag Punish Pixels.
There you go.
Okay.
So one closing order, that's very good. I'm glad that we did get in that order and that was very good. Let's see, what else did we want to do today? Oh, Jenny, it is last call, so we do have earnings. This is Bob's list from earlier today. HL, PANW, Devon Energy, EQT, don't know what that is, ADI, and SEDG.
Okay, again, what we've traded in the past, Palo Alto Networks and Devon Energy. I couldn't even guess what HL is. Can you type that in? I just want to see.
I would be honored.
Please. No. Hecla Mining.
Hecla Mining. Hecla.
No. Okay, let's just go to, I think Palo Alto Networks is very expensive.
Very expensive. Well, $163.
Oh, no, it's not. Let's see the chart. Why does expensive stick in my head?
Because it was.
Because it was high. It was higher. Palo Alto Network.
Yeah. Yeah, so that is pretty interesting. Look at this. We're only up 4 right now at the end of the day.
Well,
So
Nasdaq's red. Nasdaq's red. Now we could look at Patty Handy's trade.
Yes, we can. Let's just put Palo Alto Networks to bed. You've got an $11.65 expected move. I don't have an axe to grind really in Palo Alto Networks.
I don't either. I don't either.
I just wanted to see how much it was. 1,600. Nah, I'm gonna close it up. We're not dying to get into this stuff, right?
Let's look at DVN, Devon Energy. No, I mean I think the greats of earnings season are over. Tomorrow there are
Walmart. I'm very excited for Walmart. Very excited.
Walmart up 20%. Is it up 20% this year?
Can we just talk about the fact that now they're talking to Walmart executives? I don't know if you know this. For Nancy Guthrie, they're trying to piece it together with Walmart executives because the backpack that the person was wearing in the video was exclusively sold at Walmart. I was like, holy shirt balls, is this investigation weird?
Anything they can do to try to find her. My mom like can't even sleep. My mom's like, I won't be able to rest until they find her.
I know, but like this investigation is insane.
So hopefully they find her. It's been a terrible thing.
No one's saying
we're gonna look at Walmart.
The investigation has gone horrible if they have to look at Walmart executives.
We're gonna move on and we're gonna look at Devon Energy because Walmart is tomorrow.
No, I just pulled up Devon Energy. It's $44 while we were talking. Devon, and it's only got a 17 rank. I mean,
17 rank with earnings. Let's go to the trade page. What's the expected move? Only $1.45. Hey, you know what I say? When there's barely anything in these options.
I mean,
they're wide.
They're very well.
Because you know what turned into a big winner? What was my option buy last week?
I forget. It was like PGC or something like that.
Yeah, something. And you know what else is on a tear right now?
Rivian?
Nokia.
Oh, is it?
And okay, up 4%.
Woo! And okay, up 4%. I do think we should go into Patty Handy's trade. Let's do that. Whoa, sorry. There's a beautiful view. Let's look at let's go to Patty Handy. She's right above Bob on Fire. Okay.
Yeah. Okay, so what are your thoughts on a poor man's covered call in the Qs? Buying call leaps and Qs and selling 0 DTEs. So we're going to look at a couple things like poor man's covered call if you want to go deep in the money with that 80 delta or diagonal-esque with a 50 delta. Let's compare the prices. I mean, if she says leaps, that's Jan.
Yeah, I agree. Leaps is Jan's. That's this. If you're buying, this is, I mean, to Patty Handy's defense, let's just kind of walk through this real quick. Here you go. You got, I'm buying the stock. It's $30,000 and that's in a margin account, right? So I'm just clearing that up right now. So no matter what you do, it's going to be cheaper if you go with about an 80 delta.
I don't even think you have to go to 80 delta. I don't think you do.
It's still half.
Because like, let's say I'm going to put a cap on this trade and say, I don't want to spend more than like $7,000 on it.
I mean, honestly, if I'm bullish, Patty, I would be doing, hold on, that gives you about $3. I would be doing something like that and spending $1,900.
It's tough.
That's where I would, if I was bullish, that's what I would do, and then just keep lather, rinse, repeat, and keep establishing. You're going from like 30 to 15,000 to 1,900. You will make money because it's $32 wide, so you can make up to $1,000 in this first cycle.
But what I have a hard time with, and this is how we would typically set up, this is how we would set up a diagonal, just a regular like March, April, or April, May, or whatever you want to do diagonal. But what I have a hard time is that you're paying $20 in extrinsic value in the 59-day, where I feel like you can wash extrinsic value pretty quickly if you, if you go, okay, so keep that April 59-day up and look for an option that's $12. No, in the April. Keep the April up and sell an option. Like keep the April up and like clear that out. Just clear out the buy. And sell an option that's $12.
Sell a call?
Yeah, sell a call. Sell a call that's $12.
Okay.
And then go to Jan. Because she wanted leaps. Go to Jan and find a put that's $24 extrinsic value. They're at the 530. So you can wash extrinsic value in 2 rounds, like 2 rounds of sales. You could wash extrinsic value because I hate that $2,000 in extrinsic value in the diagonal. It was just so much where I feel like if she wants a long-term trade, you could get $12 and wash extrinsic value in two sales.
I mean, honestly, if you're spending 10 grand, you might as well just go and spend the 15 and go to the 80 delta.
Yeah, I mean, you can. I was just trying to think of like how in 2 sales can I wash that extrinsic value?
Right. So that's all of these are all kind of versions of the same trade. So yes, it just depends on how much risk and how much capital you want to put into it. But just bear in mind and keep in mind, you do want to keep your extrinsic value in there. Now, I like the shorter term diagonals. I truly do because I like the lower drawdown just in case.
And typically I do, but when you're paying so much, it's hard because Qs are $600. So when you look at Qs at $600 and you see that $2,000 in extrinsic value, so you're buying that at the money and it's got to go up $20 to break even in that period of time. That's what I had a hard time with. That it just seemed like so much. I don't even know if that trade was a positive theta trade because you're paying so much extrinsic value in that April at the money.
Oh, the diagonals aren't going to be unless they're short term. Then that's how you get them to be a positive theta trade.
Usually when we set up diagonals, they're positive theta.
They're positive theta. You have to keep an eye on it though, because it's real easy to have it be negative theta, especially when you're going farther out in time. If you're going with a leap, you're not going to get positive theta.
No, that did give you I would say try to keep an eye on your theta and turn this into a positive theta trade. Like the leap was positive theta. You can make sure these diagonals are positive theta. You just have to make sure you're getting enough extrinsic value in the short term.
Yeah, you're not going through the normal, and they're very expensive, right? They're very expensive.
Right, but to your point, cheaper than going out and buying 100 shares of Q.
It's always cheaper than options are always going to be less expensive, meaning less capital outlaid.
Now this might be somewhere where we've got a lot of people trading that TQQQ, where if the $600 is too much for you, take a look at TQQQ.
Because wait, hold on, and there's other things that are like that too. So let's just go to January. We'll go backwards with it. So if you're going to go to March and you're going to sell something for, let's say $2, right? You got to go to 50.
I would think I try to stick around 30, 35 delta. So yeah, 52.5. There you're getting $1.67. So I try to have a rule of thumb of like, if I can get 2 sales to cover my extrinsic value, then you could get something where it's, you're in June.
Oh, I thought it was in January. Complete that leg. And then I'm going to try to find a thing for $3 or $3.20 or something like that. Hold on, it's down far. Pretty wide market.
Yeah, you're far. That's far.
2,000. It's not bad though.
No, you're in a smaller scale because this is TQQQ instead of $100 Qs, but it may be a more digestible trade.
And Ajit is in the thing saying you can go SQQQ too.
Oh, it's a $73. Yeah, if someone wants to scale this down, the $15,000 just seemed like a lot. But Patty Handy is big by big, so she's joining the ranks of Ajit.
Can I show you? And I feel bad because I don't remember the name of who did this. I really don't, so I'm apologizing right now. But can I show you what I did? And I like it. Kind of like it. I mean, don't get me wrong. I'm supposed to be following the rules of NASDAQ trades, but you know what? Rules be damned. Like when we sat here right before last call.
Mm-hmm.
We sat down right before last call and I was just kind of I was getting everything up and I pulled up YouTube and I pulled up all this stuff and somebody said that the gift that keeps on giving for them, and I apologize because I don't remember who it was, they're doing iron condors with 30 minutes left to go.
Oh, I've done them.
Yeah. So
you can get the way I have done them. But sometimes at the end of the day, with 30 minutes left to go, there's nothing. The only reason there's something right now is because the market's been whipping around so much. But if we're in a period of time where it's nothing, you're not getting anything, or it's the iron fly, or you're right there. So again, some of these 0-day trades work in some environments. And maybe now is the time that they are working. But with 12 minutes left, spoos have been all over the place today.
Yeah. So I did it at like right before last call. So what would that be, like $2.20? And these were my strikes, and I got $1.60.
Yeah. So take it off.
Yeah. I mean, I can't because I'm in our account right now, but those are my strikes. So I think, given the fact that I'm driving this in this account, I'm just going to let it roll.
So with these, this is pretty far for being $2.49, 10 minutes till the close.
And 80 cents. I mean, I'm not saying 80 cents is a lot, but I never would have expected that. I haven't looked at these in a long time. But you're right. It's because of this, like because the VIX is keeping its wings up.
Right. No,
it's still over 20, like it's 2028. We were talking about this today, and I was telling our cameraman Matthew that I was like, the VIX is the cursor. With the VIX down, I think the market's just going to end a little bit in the green.
And we're getting close to that 20. Because remember this morning you said, where do you think the VIX is? And I said 20, and we were still, I think, like 2070 or something. So It's been creeping down as the day's gone on.
It has been.
So I don't mind those iron condors at the end of the day. But I think our research wouldn't. I think the research might not show good results, but because it's dependent on the environment you're in. And I think most of the time we're in an environment where to get $1, you're at the iron fly practically.
Yeah, I agree with you. I was surprised at how much I could get.
But I do like it.
Yeah, so it was fun. Like I said, I gotta let that one go, but it's that's good because I'd never got my put spread in because I was having train problems today. Anything else we want to manage while we're in here? I mean, honestly, I'm gonna go back to here because we're not trying to avoid earnings. It's just when I look at these, nothing is jumping out at me.
No.
Tomorrow there's quite a bit. You've got Carvana, Dash, eBay, Walmart, John Deere, Lemonade, Wayfair.
Can you pop in, and I just want to see whatever happened to Lemonade, because I think I just got a message from my daughter stopping for punchkis on my way home from school. What is our order?
Good for you. Tell her the jelly filled ones.
So I don't know what my punchki order would be. This is really putting me on the spot. Cherry. I'm gonna go cherry.
Yeah, there you go. I was going to say it surprised me. I don't think there's a bad punchki in the house, is there?
No, they're all pretty good.
Yeah.
They're all pretty good.
Okay, so here's Lemonade, $64. Now, it used to be, I think, sorry.
Yeah, go back in time. Go back, walk down memory lane. It used to be.
No.
It used to be very.
Yeah, but this is 20. This is right after the pandemic.
Let's see.
2021. 2020 is when the pandemic hit, and Lemonade hit its all-time peak.
So you're in 2021.
This is 2021, which means this is 2020.
Well, yeah, but you're in November. 2020 happened in March. Like Lemonade, it wasn't like.
I know, but it's almost like once we open back up, this is like the recovery. This is the peak, is right after the pandemic.
I don't even remember. I don't even remember what the hot topic was of Lemonade, which made it skyrocket at the end of the year.
Wasn't it insurance?
I don't know. I think so.
But nonetheless, we've got a 65 rank and it's $64. But this is tomorrow, so we're not going to put anything on today.
And what was the other one? Fig?
Oh, are you talking about tomorrow?
Yeah.
We can look back at it.
Fig. Was that one of the?
That's a new stock.
I was going to say, I think that was one of the new IPOs. Figma. Oh, yeah. Go to the chart on Figma. Yes.
Yeah,
I bought this. I knew it. I bought this.
Breaking news from our super producer.
Yes.
Tomorrow's What's Your Assumption? Please, 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 please write in with what's your assumption. How do you do it? There we go.
There we go.
Gosh. tastylive.com/assumption. Make it liquid products, and the boys will come up with something to trade for you.
Yeah, so that's going to be fun. That's tomorrow. And speaking of our super producer right now, we've got Josh on. And Josh, I don't know if this is good news or bad news, but tomorrow, I don't know if you still have it or not. Josh loaded up.
Oh, Carvana?
Put his life savings into Carvana at $7. Josh.
Ladies, call him. He's a millionaire.
Do you still have it, Josh?
Ladies, call him. You're right. He did load the Flotola. So Joshua is the sage at this price.
He was a believer. He was like Carvana at $7.
No, I think honestly, I think he was down here. I mean, I think he painted the bottom. He painted the bottom.
No, I thought he got in it. I don't know why 7 rings a bell, but we'll see if he sends us a message and lets us know. But I remember he was a firm believer in Carvana.
You know what though? But Josh is a trader. So I'm gonna guess, and it's so fun that we can talk about him because he can't talk back. If you want to jump in at any time, Josh, you can. But so Josh is a trader. So I'm gonna guess. We'll give it 7. We'll say the entrance price is 7. I'm not giving him 4. We're gonna give him 7. Yeah. So if I was a trader and I got in,
I remember this. Liz, you remember this? I remember this sitting at the table. And Josh said, "What are you talking about? I've never traded Carvana."
Oh, he's lying. Okay, so we're giving you carte blanche here. We say you got in at 7, so I'm gonna go. He got in about here, right, ish, and I'm gonna guess he got out at 15.
I was gonna say that day, that big green day. Like, see that big, the next big one? Yeah, that big art bar. I would say there. Like for
You're
me,
giving him 24. That's pretty good.
How long will I be able to diamond hands intel? Remember I said I'm going to get out all my intel at 40 and I never did. How long am I going to be able to diamond hands intel?
I give you a week.
No, come on. I've been in this for so long. I got in
I know. I give you one more week because you will say you're going to diamond hands it. I think once it gets back to 50, you're out.
No way. I'm diamond hands. I'm holding on to intel till I said a price of 40, but when it hit 40, I was like, no way, I'm still in.
Yeah.
I'm gonna. Okay, let's see the overview. What's the market cap of Intel?
Change it to a zebra, and then it's easier for your
No, because my stock's made too much. I don't want to sell it.
Oh, I see what you're saying.
Hit overview.
I'm trying. Give me a second. There we go.
Okay, market cap 234 billion. I'm going 100. I'm going. I'm not going to sell it. I'm not going to sell it to get to 100.
And that's how I feel about Bitcoin.
Diamond hand.
That's exactly. I'm not selling Bitcoin again until it gets back to 100. Let's see where that thing is right now.
I'm glad you brought that up because that's. Oh, my husband's like obsessed with what he's going to get me for my 50th birthday, and I told him I bought myself a birthday gift already.
Yeah, you already got yourself a birthday gift.
Yeah. I already got some Bitcoin. I don't want anything else. I don't want a gold necklace. I'll take the Bitcoin, please.
You don't want the gold. Gold's going to go down. Bitcoin's going down.
Like, what are you, moron?
You know what, though? I feel like people think they have to give a gift, like something. Don't you wish there was like a coin where you could be like, here you go?
I'd rather have yeah. Would you rather have a Bitcoin or a diamond and gold necklace?
A Bitcoin. But you and I are the only girls, I think, in America that would say that.
I don't know.
I want a Bitcoin. I want a Bitcoin. Well, let me ask you this. If it was an equal value. So can you imagine if you're walking around with like $67,000 on your neck? Like if it's of equal value. Because there are necklaces like that. You're not going to get one of those. Of equal value. Would you rather it be in diamonds?
In Bitcoin, please. And thank you. I'll take the Bitcoin. And so I told him, I told him, like, I bought myself, I didn't buy a whole one. I just bought myself a half one. I bought myself half a Bitcoin for my birthday. So you don't have to buy me anything. So stop shopping for a diamond golden necklace.
I hope he's watching.
He's not.
I hope your walls are so thin that he can hear it from the other room.
He's not watching.
Oh my God, that's too funny.
Okay.
Yeah, like I said, I'm diamond handing this. I need this back up to right here. Not even the all-time high. I don't need 120. I need 100. I need a cool hundo.
Well, let me ask you this, Liz. When Bitcoin hits 100, and I'm going to say when Bitcoin hits 100, what are you going to do with your Bitcoin?
Add more to it.
Exactly. You're not going to be like, it's 100. I'm going to sell it all now. No, because if you were going to sell it at 100, you would have sold it at 120. You're not going to do anything with it. I said, like, put black tape over it and take a look at this when. Oh, I think we told Tom. We were like, just,
put black tape over it.
Put black tape over it and look at it in 20 years.
It was the saddest response he's ever had.
Because I don't have 20 years.
And we're both like, well, okay, it makes sense. Over 20 years. Agreed.
Okay, so 2 minutes until the bell. Where's that SPX Iron Condor? What's that SPX Iron Condor look like now?
It's completely out of the money and
great.
Oh wait, hold on, Bitcoin. Right? Because I needed above.
Oh, yeah, it's still up. See, it's 10 cents.
Yeah.
Nice. Pat yourself on the back.
There we go.
Go buy yourself some punch keys with your $180.
Hey, I got double today. Our train conductor paid me twice.
Well, you won two
squares.
I don't want to say two square. There were so many winners in this pool. It was like, if you had the numbers, if your box was touching the winning numbers, if you had the reverse number, if you had the winning number plus the quarter, it had so many payouts. It was insane.
It really did.
Yeah. It did.
It really did. It was kind of weird. But he came up and gave me an envelope of cash, and I said, thank you very much. So I won on SPX and on the
oh my gosh.
Bitcoin. So we do have a couple minutes until the close. There are some numbers coming up. I was listening to, if anybody, I would highly encourage you to stick around for the show that is after ours, that with Chris and Ilya, because they do a really good job with everything. And I know there's some numbers. I was listening to Chris and Jamal today, and he said everybody tomorrow is going to be looking at the FOMC, the FOMC release notes. What's it called?
I don't.
Minutes. That's what it's called.
Okay, there's the bell. And I don't want to upset anyone else on the network, but I would say Chris and Ilya, and I hope they're the two coming on today and it's not like another guy.
I know, I hope so too.
But I would say Chris and Ilya are the two smartest guys on the network. No offense, Tony Batista.
Well, I mean, everybody's got different skill sets, right? Josh! He appears. So that's our super producer, Josh, ladies.
No, they don't see him. They don't see him. Only we see. Okay. Yeah.
Well, then we are done. We're cutting into their time.
Okay, everybody have a wonderful day and stay tuned for overtime. We will see you tomorrow. We'll be live from the SIBO again.
Live from the SIBO. I'll see you tomorrow. See you tomorrow, Jenny. See everybody live tomorrow. Bye, everybody.
Bye, everyone.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Two-way actions here. Stocks unsettled, or they settled unchanged. It's Tuesday, February 17th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes or so as we wind down this trading session. Interesting day it was, with the markets bleeding out as soon as stocks opened up. A little bit of weakness in the first few hours of trading in the cash hours here in the US. Ultimately, we do see a rebound. By the end of the day, the S&P 500 is in the positive. The NASDAQ still in the red, but only down by less than 0.1%. Far cry from the near 1% loss we were at earlier in the session. The Russell and the Dow, those are bobbing around. Dow's up by 0.05. Russell's down by 0.04. Volatility comes in, which is perhaps the most notable development, because it was testing 22 on the VIX at one point today, 23 even, settling back in at 2032. So a loss of 88 cents, but off the high, that was a high of 22.96, so 258 off the high, not too shabby. Ilya, is this tied to the headlines that we're seeing out of Iran, where U.S. and Iranian negotiators have met and have agreed to another meeting? There are certain red lines that Tehran's not willing to cross, so the Trump administration is keeping pressure on the situation. We do see crude down here nearly 1% as some of those headlines come across the terminals today. We likewise see that bonds, which had rallied sharply, are coming off a little bit over the course of the day likewise, as some of those war trade headlines die down. Gold off, silver off, equities up, as it looks like we're moving away from potential conflict. Ilya, we're on the other side of a long weekend here. Liquidity's back in the market, and as such, we're seeing traders react to what were 3 days off. We do have fairly decent volumes, 1.75 million contracts traded, and expiration arrives tomorrow. Can't dismiss the volume today in this market. Far cry from what we would call a low or even light volume day. What do you take here as we resume trading now at the start of this shortened holiday week?
Well, I think you hit the nail on the head here. And those of you enjoying my Tom Waits cadence, my voice apparently leaves about a week and a half after every trip to Chicago. It happened last time. Here we go again. I should be back to sounding halfway decent maybe next week. Fingers crossed. But I think you're right.
Worse since the intro when we were in the green room.
It keeps getting worse all day.
Nice.
In fact, it's been getting worse since last week. I thought maybe the long break would heal it a little. No. Can't stop talking, apparently. So when I think about what we're seeing here, I think you're right in a backward-looking sense. I think the markets looked at this today and said we had the long weekend. Nobody shot anybody in the Persian Gulf. There was a little bit of a spook because the IRGC Navy, by the way, that's fun. The IRGC has their own Navy. They went out there and conducted some military exercises trying to simulate a blockade of the Strait of Hormuz, which is nice. And that was right ahead of the talks that U.S. and Iranian officials were holding today. But nobody shot anybody. And I think that's how you there's a settling in crude. It's not breaking down, but it's back to sort of the bottom of its recent range, if you will. Crude oil sort of giving us the sense that nothing has gone bump in the night yet. The dollar was up a lot and has come back. The gold situation is looking a little bit flimsy now. It's making a lower low, which isn't nice. I actually took my long position off here, booked some profits. That was cool. I'll take a step back and wait to get back in. But looking at what's setting up here going forward, I think is almost as interesting, because what stocks are telling you is, yeah, okay, la-di-da, but if this was the only thing we were concerned about, there'd be a rally, and there isn't. And so I think as we look forward here, what's really eye-catching is that, yes, we see all these signs that over the weekend nothing went wrong, but that's looking backwards. Because as we look forwards, nothing is settled in Iran, but more importantly, we had great earnings so far, and not for the reasons everybody's afraid of. AI companies and tech companies in general have surprised on the upside on both earnings and on revenue. this is not a story about these numbers disappointing or the narrative somehow starting to fizzle, at least numerically. And so the market isn't happy. And in my mind, it isn't happy because it's starting to worry that the cuts in interest rates from the Fed are going to come too little, too late. They're pricing in ever more, and there's no evidence that the Fed is going to comply with it, with any of this. So FOMC minutes here coming up tomorrow are going to be interesting to watch because the markets aren't happy, and they're not happy for kind of obvious reasons.
Well, I mean, if it's about the cheap money, all the things that would love cheaper money over the course of the month of February have been hit fairly hard.
Yes.
Crypto and blockchain in particular have been hit fairly hard. We could go to Coin and look at Coinbase just as an example. We don't really need to look further than Bitcoin itself, perhaps, to arrive at that conclusion, which is down to $67,000. Legislation has suffered. We know that there's a Mar-a-Lago crypto finance forum coming up around the corner, which is Goldman, NASDAQ, NYSE, and Franklin Templeton CEOs are going to be at the event. So a crypto forum with all those folks seems pretty mainstream TradFi to me.
Yeah.
Which I guess is like another really, I read this perspective recently. If you're in crypto now, you're no longer early because you have all the ETFs and the products and the industry events with the major banks and the yada, yada. Like it's a mainstream thing. It's no longer, it's like no longer skateboarding is no longer, just for the punk rock kids once Tony Hawk has his own video game series. By like the time Tony Hawk Pro Skater 2 comes out, it's like, all right, even non-skaters are playing this stuff. Yeah, like this is mainstream now.
Yeah. No, I think you're absolutely right. And we've made this point on this network many times before. The sort of cypherpunk ideal for what crypto is basically went out the window when most crypto participation became ETFs and futures, all of which are on exchange regulated instruments with full visibility for regulators.
Full visibility for regulators, an infinitesimal amount of now claims against a single Bitcoin in theory, right?
Yeah.
So much for that, small supply. Ilya, if we're getting away from the crypto here because there's really nothing to discuss, nothing stabilized, it's a little bit of weakness, but 1.5% in Bitcoin is really nothing to write home about here. Thinking more about the equity market reaction in today's market right now. The forthcoming week does not have much by way of significant earnings releases. I'm looking at tomorrow's calendar.
We should be getting Palo Alto Networks coming across the wires right around now.
Shortly,
that's an interesting company because it's basically the Palantir narrative, sort of technology fortress America, et cetera, et cetera.
Just came out because I do see that we are looking at a fairly volatile reaction over the past.
Right, and you can see the stock has been following much the same trajectory as Palantir recently, but really doesn't have the same kind of meme stockishness to it, and so it's an interesting perspective on the space. But see if we can get some numbers here.
Yeah, so Palo Alto here, the results are at after hours. Sales beat 2.6 versus 2.58 billion. EPS beat 1.03 versus 94 cents. Guidance for EPS weaker. 368 versus 385 expected. So there's your FY26 guidance, a little bit softer on the EPS. All of these companies, we're going to be spending a lot more money moving forward. Shareholders not liking it. So Palo Alto Networks down here closed at what, 163? We're at 158. So not nothing, a little bit, close to 3%.
I mean, almost a 2% little ding here.
Not nothing, not really a huge thing. The rest of the week, though, I don't think anyone's looking to Walmart to figure out the latest trends in AI. I don't think we're looking to.
No, but the consumer is certainly an interesting perspective.
It is, but sticking with Palo Alto Networks right now, this software sell-off that's been defining the tech portion of the market over the past few weeks. That continued today. Software was down 2.22%. It's not a super liquid ETF, so just consider it for tracking purposes only. But like the Global X Cloud Computing ETF, CLOU, that's down another 2%. We'll call it 1.99% today. Ilya, I'm having trouble squaring these things because you see that there are very specific, tech subsector impacts of AI happening right now. But then you look to something like telecom. Telecom's putting in a new all-time high close. I look at
tough to disrupt telecom the way that AI has disrupted software. Goldman has put together an interesting new basket where they do a ratio of companies expected to benefit from AI and companies expected to suffer from AI. And software companies are looking very soggy here because essentially what investors are saying is the AI can do your job.
Well, it's not just do your job. It's the fact that, if you are a software company that required X number of people hours to build your product, AI can pretty much do that.
And especially the new GPT Codex update, which
Claude is fantastic.
Follows Claude code. I think it was just earlier this month that GPT Codex came out to essentially compete on that front. And I mean, some of the early reporting is just staggering. I mean, this thing is. I read one report that says that Codex actually exhibits an ability to be able to test the software, and not just test it from the back end, but to open it and test it as a user, like press the buttons, make decisions based on what looks like a semblance of taste, and say, well, this doesn't look good, and make some basic UX decisions, and really leave very little for people to do.
Very basic UX decisions. It's it's going to give you the median output, right? So it's going to be the average. Like this is what's optimal. This is what's going to appeal to the center of the distribution curve. So it's never going to be great, but it will be basic enough to get some things done.
But it does work, and it does work. And some of the reporting here basically suggesting that it's getting better and better at getting at actually pleasing things, and it isn't making the mistakes that it was making even a few months ago. It requires very little human correction at this point.
Good. I barely know how to code, so helps people like me and you. Ilya, what do we do with the broader NASDAQ? There seems to be a little bit of divergence here. And coming into this week, having not really actively participated in markets for like a full 10 days. I was back on Friday a little bit, but still in disarray. I see things leading and bouncing today that I want to see lead and bounce. If it's a telecom, if it's something like financials, which are now very strong off the lows here over the past two sessions. I mean, the last week had two pretty big down days, but the market's responding where one would want it to respond. If this period of consolidation and sideways movement is going to continue and not break down. The transports, likewise, IYT. This has been a bright spot for the month of February. Talking about what sectors have performed or underperformed, we talk about the software getting killed in the month of February. Enterprise software as a subsector is down 12.1%. Trucking up 11.6%. Air travel up 9%. Air cargo 8.5%. Rail 11.2%. Are we missing something here with transport? I'm watching the Atlanta Fed GDP growth tracker tick down. I'm starting to read through some of these companies' individual reports about what's facing them. You could go over, we could go to Union Pacific, for example, for rail. They're noting labor shortages.
Yeah.
And they're noting labor shortages, so they're having to jack up rates.
Yeah.
And so the reasons, volumes are going up enough, but it's really the pricing power that they're enjoying that's allowing them to push up prices. It's the fact that, like, well, you guys want the shift. We only have so many bodies. You're going to have to give us a little bit more to prioritize this. Are we getting the wrong signal from transports right now? Because the market's reading it like there's a boom coming for the business. But is the business booming because of a labor market situation that may be negatively impacted by something happening at the national level in terms of policy?
I mean, I think that's certainly a possibility and sort of a picture that is a kind of microcosm of what's happening right now. I mean, let's consider sort of the tie-up between this and what we were just saying about AI. Airbnb came out and said that that the lion's share of its customer support is now being done by AI agents, and that it aims to build on that. Now, from the perspective of the profitability of Airbnb, obviously, this is good. From the perspective of the employees of Airbnb, obviously, this is not good. But is it good for Airbnb ultimately? Those same employees that now don't earn an income can't purchase its wares. And so at what point does efficiency become demand destruction? We're looking at a similar story here, really across what's happening with the economy as a whole. The numbers look fairly solid. But when we look at the labor market, they look much scarier. And so the question becomes, well, if there's no hiring, where is the demand coming from? And that can be because there is no hiring around a labor shortage, around insufficient immigration, perhaps to plug that labor shortage, insufficient skills to plug that labor shortage. Mm-hmm. As opposed to loss of demand, because again, the economy itself seems to be doing relatively okay. The growth is there. But if there's no uptake, then ultimately you get to a point of demand destruction, because the economy is indeed still 68% household consumption. So this is just one facet of it, and you see it in different pockets. I mean,
I think that's
transport is just one element.
It's not, I'm bringing this up because this is something that I see some things in the chat over the course of the day. And I've seen people in past chats when we've brought this topic of transport up. Oh, this is because of immigration crackdown. And I think that's an interesting claim. It's worth looking into, because if it's a legitimate factor into the business model, then that changes the business environment completely for these companies. Mm-hmm. And if it's going to be a structural change, is there an opportunity in there that perhaps we could, consider? No one, I think, is looking at maritime, for example, as a place that would be an immigration-sensitive sector, right?
And yet,
or air travel, right? I don't think you're working at an airport unless you have the proper clearance and you need papers for that. So maritime, for example, today as just a sector was up 4.9%. I know Danos Core is off a little bit here, but other competitors in the space, Genco Shipping, we could head over to Global Shipping, Lease Core, GSL, a new high, all-time high. We could head over to Matson, breaking out again. So the maritime companies, they are confirming, I think it's more of an economic story than anything else. I know that labor market tightness is playing a factor in this. If you look at some of the numbers available, just given the comments in the labor pools. But in terms of the actual economic activity undergirding it, it's not just a function of labor pool tightness. There is legitimate economic activity that's helping support what is a broader trend across the transportations and logistics sector. And between maritime and air travel, Ilya, you said that there's durable goods coming out tomorrow. There's some items coming up the next few days to talk about the U.S. consumer. If you want to peel all that back, some of the airline stocks have been performing a little bit better recently. We're starting to see some of these names, some of the Southwest is a consumer budget name. This continues to bounce up here. Are we thinking that's the most important piece of economic data the rest of the week? I know we have FOMC minutes tomorrow afternoon, and we'll listen to what the Fed has to say. But in terms of the actual hard figures, are we going to learn anything more about the state of the economy that we don't know this week that could help change narratives and themes?
Well, I think this is really the key question. And I actually think that the FOMC minutes are probably going to be the bigger event risk. But in terms of learning something about the state of the economy and sort of how this balance between seemingly solid demand yet soggy labor markets is going to play out. Because again, I mean, airlines, it's very much a story about how consumer demand might be resilient in this environment, or at what point it stops being resilient. At what point the weakness in the labor market finally catches up and consumers go, okay, wait. And that's a point of some contention. Because if you look at what happened with the University of Michigan consumer confidence numbers, they were better than expected, but largely because inflation expectations came down. But then you looked at retail sales and they were weak. And so you look at what's going on here and you go, well, are consumers just saying, yeah, prices are down? But if prices are down because demand is finally faltering, that's not a good thing. And so it'll be really interesting to watch here what happens and at what point the Fed's real concern, which is that the weak labor market starts to spill over into more broad-based economic weakness. At what point does that occur? Because that's ostensibly where the markets and the Fed converge in views.
The Fed, not that they're looking at sector-specific ETFs on a day-to-day basis just to get a big picture here, but if I was thinking there was getting more economic weakness in play than something like the airline sector ETF, Jets, which is back at its highest level since COVID. Finally, this is now the highs that we've seen since February 2020, and we haven't even eclipsed them yet, Ilya. Just to show how downbeat in this particular sector of the economy has been, even though didn't they get bailouts during COVID? It's such a long time ago. You could make the argument that the airline sector, which is more sensitive to oil prices than perhaps other sectors within the economy, and oil prices, they're up this year. This is a good sign, right? They're weathering the storm.
Well,
highest level for now.
I think it's very early to say that they're weathering the storm. Even the CPI data we just got on Friday had energy as the biggest downdraft on inflation. It takes time. And this is data for January. And in January, oil is already rallying. These companies learned on 9/11 that they need to hedge oil costs. They are very much protected, of course, until they're not. But we're going to have to see a few months yet before we see energy costs even show up in CPI, which, by the way, break-even rates think they will. Break-even rates have been surging with oil in lockstep. So we know the bond market understands that the inflation's coming. And so when you look at that, and then you go, okay, well, so the airlines will feel that after some hedging period expires. We're probably not looking for them to start feeling hotter oil for a good half a year, give or take.
It's an interesting time. Hey, Ilya, there's some tariff news over the weekend. The administration's considering rolling back tariffs on aluminum and steel. U.S. Trade Rep Jamison Greer said that that's not in the cards today, so maybe that contributed to some of the market action and, not quite strongest way into the close that we had for equities. This was a funny comment he made today. He said that tariffs not regressive. Most consumption in America is done by the wealthiest people, so the idea that it's somehow regressive is just wrong.
What?
That's actually literally the exact opposite of what's going on here, because if you consider what tariffs are, wealthy people recycle their savings into they have savings. They take excess savings.
That's a good start. Having savings.
And they invest it. And so marginally every dollar that comes in for a family with a household income over $1 million is more likely to go to investment and savings than, say, one that has a household income of less than $50,000 a year, because every dollar that's coming in for that lower income household is going to go to things like paying the electric bill and paying rent or the mortgage and food and clothing and yada, 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 yada. Mm-hmm. So when you put tariffs on items that make the import of those goods more expensive, marginally lower income people are bearing the bigger burden, because all of their spending is geared towards consumption. In effect, they don't have savings, whereas wealthier people, your digital dollars being invested into stocks or bonds or crypto, gold, what have you, is not going to be tariffed. So by definition, then, tariffs are regressive. And pointing out that more than half of consumption in America is done by the wealthy, and the tariffs don't impact the wealthy, so it can't be regressive.
Doesn't make a whole lot of sense, does it?
I need to have another pipe burst in my house before I have a vein burst in my brain, because overtime is out of time for this Tuesday before I have an aneurysm. It's Tuesday. It's February 17th. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. Billy Spivak, Tom Waits, Barry White in San Francisco. I'm in Chris Vecchio.
Can't go that deep, just raspy. I'll take Leonard Cohen, though.
I almost said Barry Manilow. We'll see everyone tomorrow. Good luck trading. Elliot's sticking around, though. Up next with, what's up next? Macro Money. See you there.
That's the one.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is. And learning that the market is not always going to move in your direction, you have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com.
grab some gear and help some pups. You get merch, they get a home.
Well, the markets get off to a weird start for the week. Nothing really goes anywhere for stock markets. Things start to jiggle this way and that around headlines from the Middle East, but ultimately not very far gone. So we're going to try to figure out what's going on here and what might yet another tidbit from the Fed do to change things. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we'll do is just quickly check in with where the markets found themselves at the end of last week, this being the first day back after the long President's Day weekend for U.S. Bourses. And then from there, see if we can figure out what is likely to happen here next as we start to get event risk back into the picture. And of course, the minutes from January's FOMC meeting stand out front and center. So let's begin here with a look at the price action. We've had an interesting week last week, obviously, selling pressure mounting. And what's interesting is that the selling pressure is mounting for reasons that don't immediately jump out if you were just to look at the basic sort of engines of what you might expect would have an influence. So S&P down 1.5%, obviously an acceleration in the sell-off from the prior week. NASDAQ actually did a little bit better than the prior week, still down 1.4%, but better than the 2.1 the prior go around. Yields down across the board. 10-year down 3.8%, 2-year down 2.4%. Crude oil a little bit lower, 1%. It's still hanging around the bottom of its recent consolidation range, though it hasn't broken down as those tensions between the U.S. and Iran continue, albeit without yet turning into a firefight. And so the market is kind of sitting here on tenterhooks waiting for things to happen, not rallying, but not really breaking down either. The situation in gold got a little bit of a lift last week. We were consolidating around the midpoint of that violent decline that we saw off the record high. We're a little bit soggier today, but last week we managed to rise ultimately 1.3% after a gain of 1.7% in the prior week. Dollar didn't really go anywhere. The euro tellingly oscillating here. The yen managed a little bit more of a rise. It seemed like the electoral win for the new Prime Minister Takaichi Sanae really bolstered expectations that she's going to be very expansionary on the fiscal side and isn't necessarily going to hem in the BOJ from continuing to raise rates in response to whatever inflation that could generate. And so at the moment, it looks like the kind of ideological divergence between the BOJ and the new government that the markets thought was going to be there seems to be at a sort of détente. And so the upshot seems to be that the government is going to be expansionary and the BOJ isn't going to tighten too quickly, but is going to tighten. And that tightening was never expected to come fast and hard. So the net of it seems to have been a stronger yen. It's up 2.8% last week. Bitcoin moderating a little bit here, if ever there was an understatement, in terms of the speed with which it's selling off. But nevertheless, another down week off 2%. What's especially interesting here about the situation in stocks is, of course, we're in the midst of earnings season, and the results so far have been reasonably solid. FactSet reports that earnings for S&P 500 firms are tracking at 13% little bit over, as a matter of fact, 13.2% year on year for the fourth quarter. That's up from 8.3% before. Tech companies, which everybody seems to be bemoaning, they're outperforming. Their earnings are growing at 30.7% year on year. Just take a second to take that in. 30%, almost 31%. And that's up from 25.8% earlier. Moreover, for all the hand-wringing around maybe the AI narrative is fizzling or isn't, all of this chatter now, both the earnings and the revenue figures for technology companies have surprised on the upside, to the tune of 8.3% for earnings and 3% for revenue. And of course, the stock market is soggy anyway. So the question here really is, okay, well, if it's not the earnings flow, then what is it? On the data front, things were, as ever, mixed. We got some U.S. jobs data. It was significantly better than expected at the headline. 70K was expected. We got 130, almost double for non-farm payrolls. The unemployment rate unexpectedly fell to 4.4%. But at the same time, we got a situation, 4.3% rather, from 4.4%. At the same time, we got this massive set of revisions to the prior data. And as we can see, most of them here in the dark orange are declines going all the way back to 2024. For 2024, the economy added 500,000 jobs less than initially thought, down to 1.5 million from 2 million that we thought before. For 2025, it's even scarier. We thought we added 584,000 jobs, and it actually added 400,000 less, 181,000 jobs. So almost 500,000 jobs less than expected for last year, and about 500,000 jobs less than expected for 2024. So the numbers end up looking mixed, and the markets end up saying, well, hold on here. What is it that we're actually looking at? Is this, in fact, a good report telling us that more jobs have been created, but the Fed is likely not going to be as ready to cut rates? Or is this pointing in the opposite direction? Is this telling us that we have a situation here where instead of a positive view, we should be looking past what we're seeing at the headline and instead considering, well, if these numbers are going to be revised anything like the prior numbers were revised, then we really need to be paying attention not to numbers at first blush. We need to be paying attention to numbers at the revisions, because before long, that's exactly what's going to occur here. And so from that perspective, the Fed needs to be cutting rates because the situation looks dire. So with all of this in mind, the markets went into the CPI report on Friday, attempting to figure out what to make of what is likely coming and see if maybe that report would be a little bit more one-sided. And of course, the answer is no, not so much. Here's the CPI report. Core came down to 2.5%. That's the lowest since May 2021. So before the big post-COVID melt up in prices. So we're back to here. And that's, of course, encouraging. But the headline came down even more. Expectation was that it would come into 2.5. It came down to 2.4. If we look at the breakdown here, it looks like fairly encouraging numbers if you are the Fed and what you want to see is broad-based disinflation. You got it here from 2.7 to 2.4 on the headline, from 2.6 to 2.5 on the core. Services showed disinflation. Goods showed disinflation, food showed disinflation, energy flipped negative. And that's all great. If you're the Fed and your thesis is that the impact of tariffs on inflation will fade with time, and when that occurs, what you'll then see is some sort of a reshuffling at the headline, because as long as service sector inflation continues to cool, which is what we're seeing here, then we've got ourselves an outcome where we have the overall story that the Fed wants to see. The tariffs fall out of the calculations. Service sector inflation, we can see, is already below the Fed's target. And so we might even out to something that basically puts that 2% inflation goal squarely in focus. So at face value, all of this looks very encouraging indeed. And then, of course, is the but. If we look into the details here, we find that energy is the biggest downswing. That takes off a whole 0.15 percentage points from the headline. Everything else does show signs of disinflation, but it's energy doing the heavy lifting. And while that seems to put you on course, counting on energy continuing to drive this thing for a second consecutive month, by the way, is probably not that consistent of a story, because, of course, what do we know about crude oil since the beginning of the year? Crude oil has been going higher. And that situation continues here. Again, these tensions with Iran have given us a little bit of a pullback as far as crude oil is concerned every time that it doesn't become a firefight. But nevertheless, we are in a situation here where the tensions remain elevated. Nothing has really materially changed about the sort of possibility that there is some sort of conflict that could break out. Moreover, the story isn't really about U.S. intervention in Iran as such. The story is much more about the emerging reality, as we've discussed here before, that China is going to have to live with some sort of a new structure for its energy supply, because its sanctions busting, pennies on the dollar inflows from the likes of Iran, Russia, and of course Venezuela are increasingly precarious. Of course, Venezuela was beheaded, decapitated, as it were, by U.S. action, and the situation in Iran is teetering as a function of a public and a popular uprising, not U.S. initiative. So whether the U.S. intervenes or not, there seems to be a level of momentum to events there. And then, of course, from the U.S. side, we do continue to capture those Russian Shadow Fleet tankers. And that's something that is a building tally and signals very clearly that that which China looks to for supply is going to start looking much more expensive because they're going to have to not use those other sources, but instead tap things like Saudi and Iraq and the rest of the Gulf and Brazil, all sources that China already imports from. But they're going to have to show up there with more demand than those sources were expecting, and they're going to have to pay market rates. So we're looking at a situation where expectations for an oil supply glut, at least this year, at least for now, are starting to come apart. And of course, this rise in oil, we can see it's holding its range right here. It's already been noticed as an inflationary influence, as we can see here by the markets. Break-even inflation rates, the 5 and the 10 year, have been marching right alongside crude oil prices higher. And of course, we can see here in the data that it takes about a month for that to show up in CPI. So what this tells us here is that we're looking at, first and foremost, jobs data that doesn't give us a clear lead. Then, of course, CPI data that doesn't clear things up, because both of them seem to contain enough backward-looking data to make you happy if you're a Fed official or a stock investor, but not enough to keep you happy looking forward. Nevertheless, the markets do seem to take a dovish lead from what's been going on. They've got 58 basis points now on the menu for this year, and the calculus for next year has flipped to cuts, now starting to edge in the direction of easing for 2027, suggesting that indeed easing is starting to get pushed further in time. And markets, of course, not backing up from their expectations that there is going to be a need to cut twice this year. In fact, we are looking here at what this could look like. So we can see the first cut right here now, still in June. So that's where the market thinks that's coming. The second in September, that's faster than the markets have thought in recent weeks. On and off, they've been kind of jumping between October and September. September seeming to firm up here. But now we're also starting to see the possibility that there is a cut going into the middle of next year. And that's a little bit new. So there's a little bit more dovishness here, even as the Fed is still very much on a program where they're expecting one cut this year, one cut next. And that's where these FOMC minutes really come into focus. Because what we're going to be looking at here are signs of urgency and a window of some sort into the Fed's thinking. How much are they prepared to discount near-term rise in energy? How much are they prepared to look through something like that and say, you know what, we're going to focus on core inflation. That's ticking down. That's good enough for rate cuts versus, you know what, the price of oil has been buoyant and we're going to hold our fire here. Let's not forget the FOMC meeting was relatively late in January. So these things were already visible and were probably a part of the conversation, at least to some extent. We likewise need to see what Fed officials are looking at for the labor market. We know that they expect overcounting in BLS numbers. So we know that they're biased in the direction of supporting the labor market. That was, of course, the rationale for why they cut rates last year. But at the same time, when we look at this, it seems that if they were already doing this, yet still committed to one cut this year, one cut next year, so a cumulative of 50 basis points over the next year and some change, then when we look at this tally here, obviously the markets think they're undercounting. But Fed officials' sort of natural counter is, yes, we think you're overcounting. In fact, it's probably not a surprise then that stock markets have not really rallied past October highs for the S&P, which was when the Fed chastised markets. Fed Chair Powell came out and said, you're over extrapolating on rate cuts. These things that you think are going to happen, they're not going to happen. And they're certainly not a given. Maybe they'll happen, maybe they won't, but you're operating as though they're a given, and that's just not the case. Looking at what the Fed actually said in this most recent meeting, we can see that we're looking at an economy that is operating at a moderate pace, showing some signs of stabilization. We see here that they kept rates unchanged. Really wasn't any major changes in the voting patterns, nor in the subsequent guidance. When Chair Powell spoke about all of the proceedings after the meeting and gave the usual press conference, we see some familiar headlines. We can see that a good part of the slowing in the jobless market represents a declining workforce. So a little bit of an explanation for how we get this kind of dichotomy where inflation might be still relatively upbeat, but the labor market is weak, and we need to figure out what to do about that. And the Fed is somewhat stuck between a rock and a hard place trying to balance these things. We still see the argument that inflation should come to 2%, as we discussed moments ago, as tariffs filter through. However, we do see that Chair Powell says that the outlook for economic activity has improved. There is broad support, at least in January, for holding rates. And that risks to both sides of the mandate, at least according to the Fed, have diminished, which ostensibly slows their hand and makes action less urgent, which of course is the opposite of what the markets are saying. They want more rate cuts, and they want them sooner, as we can see by this relentless push into a more dovish direction from policy expectations. Now, of course, Powell says a rate hike isn't anybody's best case, but that the economy has surprised with its strength. That is certainly not the kind of message that the markets want to hear if rate cuts is what they want. So, from that perspective, the positioning I have on into these FOMC minutes still has a little bit of a short bias for the US dollar, along the Aussie, the pound, and the euro. That's around the idea that when we get this messaging, it's going to lean in a direction that still supports rate cuts, but also not in a direction that necessarily changes at least the Fed's perspective. And looking at what the markets have been doing, they've been saying, okay, well, if you're going to delay now, that probably means you're going to have to cut more later. Hence the drifting of cuts into 2027. So that ostensibly is an emerging headwind for the US dollar. Still short Bitcoin, still holding these Brazilian ETF stocks, or Brazilian stocks ETF. That's been one of the winners so far this year. So it's pulled off a little bit, but 33 calls against a quote of just under 38, I will take and continue to hold for now. It doesn't seem to have any immediate urgency behind signs of some sort of a breakdown. Still short risk because, again, it seems like things are looking soggy for reasons that primarily have to do with a lack of urgency at the Fed and not with the quality of the news flow outside of that, certainly on the corporate earnings front. So it looks like the market is of a mind to go down despite uplifting of financial fundamentals. And that's usually a good sign that the market has a good deal of an idea of where it wants to go. So still have these put verticals on and ample time in them. I will probably have to roll what's going on in these SPY puts, though. There's only 10 days here. So I'll probably have to reload these here in the coming days. But still on the short side there. And of course, still long crude oil, looking for this realignment vis-a-vis China energy demand to continue, whether the U.S. attacks or it doesn't, whether it decides to wade into it or it ultimately reaches some sort of an understanding. Because, of course, we know how this works. The U.S. has backed the wrong side in an Iranian revolution before, and the revolution continued nevertheless. So, when we say the wrong side, of course, we mean the winning side is not the one that the U.S. backed in '79, and it may well be the same this go around, albeit in the opposite direction. But whether or not it is or it isn't, crude oil seems like its disruption will continue, and that is macro money for today. As ever, we are here Monday through Thursday, shortened this week to Tuesday through Thursday because of the holiday. We're here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.